Israeli government's failure to bring them back alive.
Our government are heartless people.
These murderers executed 6 of our hostages. They shot them in the back of the head. And now after this, we're asked to show seriousness?
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a better handover from Wall Street as we wake up this morning, slightly better. And there is a lot to talk about here. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning. And I want to just sort of right at the outset wish everyone a very happy Teachers' Day.
Absolutely.
To the early learnings, to the lessons still continuing. I think the market, of course, is the biggest teacher of them all. Teaches us something or the other every day. And this job, of course, I think I've always said it, is just quite incredible. The amount that you get to learn if you want to.
Absolutely. Good morning, guys, and good morning, viewers. Absolutely. And, Teachers' Day is one day when you look back and remember all of those individuals, those teachers who made that contribution. You probably didn't know it at the time, but in hindsight, you realize that's where the inspiration and the confidence and, so many of those dreams came from. And like you mentioned, Prashant, our profession itself, we've learned so much. Been very lucky to be working with some of the very best. Inspiring thought leaders, people who've kind of, told us to hold the torch high and keep asking those tough questions and keep seeking information and the right answers.
Well, that's right. Happy Teachers' Day to all those teachers out there who are professionals, and also the markets. They are the teacher that teaches you something new every day. You're as good as yesterday's session. And happy Teachers' Day to both of you guys as well. I think in terms of experience, I'm a little lower than both of you all. Learn a lot from you all, not just about markets, but about life as well and how you navigate things. So happy Teachers' Day and happy learning to all of us.
I can say that to you as well. I was just going to say, but you stole the last phrase. Learning's about life. We learn a lot from this guy.
There was also a slight poke at the age, our age.
I see now.
All right, let's take a quick look at what you need to know as far as market action is concerned, right? So equities last night were a little flat. They were sideways, nothing large in terms of a cut or anything of that sort. But it was down. S&P was down about 0.16. NASDAQ was down about 0.3% or so. And that's the picture out there. Now, the big talking point, of course, was this entire AI semiconductor chip stocks, right? They were down once again. Nvidia, after the near 10% fall, was down another 1.6% last night. So that complex is looking a little weakish. You had yields which came off about 8 basis points. We're down to about 3.75%. You also had the dollar index, which is now down to about 101.27. So about 0.5%, nearly a 0.5% cut there. You had some numbers, the JOLTS data, which basically shows job openings in the US economy. And for July, the number that we got, there was unexpectedly fell sharply. And but without going into the numbers, it's the lowest level since early 2021. This is, of course, one data point. The big one, of course, is going to be tomorrow when we get the monthly NFP, which is the non-farm payrolls report. Remember, in early August, that is the one which triggered, along with other things, the yen, etc. But that is that Friday data point, end of July, that really triggered this market mini crash early August or so. So I think tomorrow is important in that sense. Just two other things. You got the USD JPY, which has now come up to 143 levels. It's essentially 2 weeks back, we were in we were talking about the USD JPY in the 147 handle. We are back at 143. The early August that we were at about 162. And then there was a rally all the way to 142. And that's essentially what caused a fair bit of fear in the market. We're back at about 143. So the yen basically has rallied against the dollar and rallied hard once again. Oil prices, we're at about 72. Lots of noisy OPEC headlines. We can talk more about this. As I said, the jobs number tomorrow has got the potential to move markets. Whether it'll do or not, I think is the question. A 25 basis point cut in September when the Fed meets, I think is largely in the price. Can it be 50 is the only question. I've said this before, I'll say it again. Markets would like 25, not 50. 50 will sort of smack of some fear, and markets will wonder whether the economy is deteriorating faster. 25 is like a gentle glide path, which I think the markets will live with. And they'll say, well, it's Goldilocks and the economy is strong and you're getting rate cuts, so well, what's to worry? But 50, throws those equations. A little unbalanced there. Now, just to circle back to the levels here, I think on the Nifty, the near-term support is yesterday's low, because we had a nice, clean 100-point bounce. So 25,083 is yesterday's low. That number should be the first line of support. And on the upside, targets are the same. The swing high, which we took out, 25,333 is the swing high now, and 25,530, which is the retracement, extension retracement of the earlier move. So that's the Nifty. On the Bank Nifty, yesterday it held an important support of 51,240, so that becomes sort of something to watch out for. The 20-day comes in below that at 50,789. I'm talking about the Nifty Bank, if you can move the graphics along. Support 51,240, and then the 20-day at 57.89. And on the upside, targets are essentially 51,750 and then 51,945. These are very near-term key resistance levels which the Nifty Bank needs to take out. GIFT Nifty will come up on your screen, giving you a sense of how the start is going to be. It's a nice 100-point higher start this morning. Surabhi.
Yes, absolutely. I think playing for a bounce, that's what bulls will go with, at least as we start off, because Asia seems to be a bit on the recovery path, though Nykaa is not quite playing ball. There's still some red on that screen, and the Hang Seng is flat, flip-flopping between red and, red and green. Just a word on oil, because Prashant mentioned this. Let's bring up oil prices. Yesterday, by the way, WTI fell below $70 a barrel. 69 is the last print. Just around that level even now. And Brent is tracking 73. Now, these are 9-month lows on oil prices, which has been working well for some of our stocks like paints, tires, etc. The talk is that OPEC Plus might now delay the increase in output that it was originally planning in October, looking at this reaction in the oil market, and that Libyan issue has resolved itself. So I don't think we are getting an outage from Libya. Because of all of that, this fear of excess supply, low demand, we are seeing 9-month lows on oil prices. But anyway, to get back to this whole point of whether we'll get the 50 basis points rate cut or a 25 basis points rate cut. Yesterday, we had commentary from one of the Fed officials. This is the Atlanta Federal Reserve President, Raphael Bostic. He says, we cannot wait until inflation has actually fallen to 2% before removing restrictions, because that would risk the labor market disruption that could inflict unnecessary pain and suffering. So basically, raising expectations that we might get that bigger number. The odds now, if you go by the CME Fed Watch, the odds of the 50 basis points rate cut now stand at 45%. This number was much lesser, around 30% till about a week back or so. So let's see how this plays out. Remains a very key watch point. And the jobs data on Friday will give us a lot more clarity on which way the Fed could perhaps swing. Back home, let's talk about the flows. Now, we've got FIIs buying to the extent of about 975 odd crores. DIIs were net buys. The net number on the DII side was a little lower, but there are so many block trades happening that are skewing the data on a daily basis. So I went back and checked the final numbers, not the exchange numbers, but the depository numbers. And they tell you a picture, something that a lot of our guests have been pointing out. FIIs are coming in the market. It's not like they're not, but they're coming in via these block trades. They're looking at these strategic, buy-ins, because the numbers have been all positive. May was the last negative number. June, July, August, September, all positive. July's buy was about 32,300 crores. In September so far, just 2-3 days, because of the kind of blocks we're seeing, the positive FII number is already in excess of 10,000 crores. That's just the nature of the action in the market. Quickly coming to some stock-specific action worth watching out for today. Reliance, remember, today is the board meeting to discuss that 1:1 bonus. So we'll see how that plays along. There's a buyback that is being considered by Matrimony's board. Remember, the stock zoomed almost 10% when that news came in. So today is the board meeting. And finally, We will get a new entity from the house of Raymond, the lifestyle business, the branded apparel business that lists out today. I was trying to look at, the numbers that are doing the rounds, and one of the reports, this is Antique, said that the fair value of this business, if you go by FY27 numbers, should be around 180. And then, of course, it depends on how charitable the market is feeling and what kind of a number we actually get on the listing. But enough to keep us busy. Global cues, lots of local stock developments as well.
Well, that's right. And today, in fact, global cues are far more stable than what we woke up to yesterday. And, if you look at yesterday's trading session, it was a beautiful one because the dips got bought into and the Nifty cut its losses by half by the time we wound up. So a big recovery is what we saw from the low point of the day. If someone told you, at the start of the trading session that you'll end low by less than 100 points and you'll have institutions that were net buyers, well, the bulls would have grabbed it with both hands. So India continues to outperform, and that's a positive because these dips are getting bought into. What about positioning in the index futures? We have two big participants out there. The clients, well, they cut some of their short positionings in yesterday's trading session. So there was a bit of short covering that we saw in trade from the clients, which is good news. That's telling you that they're, maybe not expecting a sharp decline from here on, and they are the ones that have got it right. So that was about the clients. And on the FI side, well, there was some unwinding of long positions is what we saw in yesterday's trade. Moving to the PCR, well, that was at around 1.45 a few sessions ago. That's come down to more palatable levels of around 1.1 odd. How did that take place? Because we're seeing call writing that came back. And now these call writers, going by the opening, they'll be getting a little bit nervous today. 25,200 call, 25,300 call, massive open interest built up out there. And these call writers, going by the bounce that we're seeing, we'll have to keep an eye on both these two. Will there be some unwinding seen at both these two strikes, which will tell you the bears are getting nervous now. They thought that they could protect the higher levels. So we'll have to see some follow-through buying post the start. Which brings us to the levels. Going by the options data, and today is the weekly expiry, so these contracts will expire. You have the crucial resistance zone at around 25,320. That's around 120 points away from where we ended yesterday. So that's the important mark. We need to get past that to sustain a bigger bounce. Yesterday's low becomes a reference point in the near term, so that could be, the support level. And, the bigger support comes in at around the 24,700, which most technical analysts don't expect to break. So those are the levels on the Nifty. The Nifty Bank, that recovered yesterday from 51,250, which is the level we pointed out yesterday morning. But it needs to get a little bit higher, from past that 50 DMA, which is around 180 points away from where it closed up yesterday. So you wanted to get past that, then it's well and truly on its way to around 52,000 odd. Looking at the stocks in focus, yesterday we had some of these cement stocks that came off the low point of the day. Some of the input costs are cooling off as well. And after a while, we are seeing that, cement prices, some of those price increases are sustaining. So the stock I'm looking at is Ramco Cements because it's got past the 20, 50 and the 100 DMAs. The 200 DMA, which is around 30 rupees away. So I'll keep an eye out on this one. Quality name from South India, lot of headwinds. But if this price hike sustains, then maybe that's a stock that we should be focusing on.
Nigel, thanks very much for that. So keep an eye out on cement, right? By the way, here in Mumbai, it's raining. End of the monsoon season, it's raining harder now, I think, compared to the last 2 weeks. But good news, I was reading that the lakes which supply water to Mumbai are 97-98% full. And the fact that monsoons have extended so late, which means that, you're not looking at water cuts, etc. early on, like we've seen. April,
it was
May,
a bit of a late onset as well, I think. So there were, the expectation was that maybe we'll have a bit of an extended period.
Ganpati, right? So normally,
it does rain around Ganpati time.
And I think that usually is sort of marks the end as well. Well, we'll talk about sort of some of the local cues, but let's go back to the global stuff, right? Gargi Pal Chaudhary is head of iShares Investment Strategy, Americas at BlackRock. She's with us now to take some questions. Gargi, great to have you with us here. Thank you very much for your time. Prashant Desai, it's good to see you here on the channel. I hope the first of many. I want to start with, we'll get to the US in just a bit, but the dollar JPY back at in the 143 handle now compared to 147 just 2 days back. What's going on? And do you think it's got the potential to once again sort of induce some fear in markets? Or do you think it's one and done? It won't cause the same kind of impact again. Your thoughts?
Sure. Good morning. It's very nice to be here. Long-time listener, first-time joiner, and thrilled to join you and your guest today. Starting with your first question on the dollar yen, look, I think that we're leaving this environment of a lot of liquidity, a lot of reserves, and more moving, at least in Japan, to an environment of more restrictive rates. And I think when you move from an ample liquidity regime to one of more restrictive policy, you are going to have to get used to a certain amount of volatility in the markets. And we certainly saw that in the beginning of August. Some of the positioning, we obviously look at, much like I'm sure you do, look at some of the non-commercial yen futures forwards holdings, and to some extent, some of those have been unwound, some of those shorts have been unwound. But I think as we get to restrictive levels, and for sure the Bank of Japan is going to continue to move towards higher rates, I think we should get used to some periods of volatility and expect them to be a part of normalcy in our markets. I think just as we saw in the beginning of August, it created an opportunity for those that were patient and willing to sort of stay the course.
Yeah.
Gargi, just to finish that point, you know, this was, I think, early this year, or it was last year. There was someone who said, who called Japan's rising interest rates as the San Andreas fault line of finance. That got a lot of play, obviously, because of how it was phrased. But I think yesterday or day before, you had the head of fixed income at T. Rowe Price, who essentially warned that, and I quote, "We've just seen the first shift in that fault and more is to come." You wouldn't sort of, listening to you wouldn't go that far, right? You're saying, well, markets will very quickly get used to this.
I just think that we are going through a massive regime shift globally. And I think what we have now begun to see in Japan after many decades will take investors a little bit of time getting used to. I don't think that every single move will be a 12% drop like we saw in the Japanese equity markets in the beginning of August. But I think to expect no other ramifications of a rate hiking cycle is a bit too optimistic. So I do think, again, as I said, if we move to more a regime of more volatility in the markets, a regime of more restrictive rates, we can possibly see some further carry unwind trades, which is kind of what we saw in August. And I think volatility is really poison to those carry unwind trades. And I think I don't expect this to be anything that's going to shatter global market liquidity. I think if anything, it gives us opportunity to pull back, reassess our views on where we think markets make sense, whether that be in Japan, India, or US, growth versus value, and look at better levels to reassess and enter markets. And that is exactly what we told investors to do for the Japanese markets earlier this month.
All right, Gargi, interesting point, and makes a lot of sense, right? That there's no point expecting that this one-way ride, the one-way yen carry will just, carry on forever. So take your point. I think August has taught us that, this needs to be watched with a little more nuance. Okay, let's talk about the U.S. market itself then. You look at investment strategy across Americas. And here we're dealing with two issues. One is what's happening with the economy and whether we're getting a soft landing or not. And maybe to an extent, the Fed fixes that with the rate cut. And the other is this whole issue around AI, right? The volatility that we're beginning to see in the tech space, in the semiconductor space. What are your thoughts? Are you still constructive on U.S. equities?
Sure. So we'll start with the first one, which is just around, the normalization of interest rates that we think is going to happen later this month. I think the Fed has prepared us in the Jackson Hole meetings that took place at the end of August. They very much prepared us for the rate cutting cycle to begin later this month. Now, the question is whether they go 25 or 50. I tend to be in the 25 camp. Obviously, the market's pricing in about, as you had said earlier, a 50% or so chance of a 50 basis point rate cut. But I think they want to be a little bit more patient, and obviously inflation isn't back at their target, certainly making a lot of progress, but isn't quite back at their target yet. And I think that just this act of normalization of policy, just this idea that the Fed is now focused on their dual mandate, and that's one of the things that was most important in Jackson Hole, the Fed saying that right now they don't welcome any further weakening, they don't want any further weakening in the labor market. That brings back a lot of optionality for investors looking at both bonds and equities. To the second part of your question, I think September and October in the US tend to be pretty seasonally volatile. We've seen that over the last decade when you look at, what equity markets, whether you look at small cap, whether you look at large cap, whether you look at more of the tech stocks that you're talking about, wherever you look, whichever corner you look at, we have historically seen some volatility in both September as well as October. Now, on top of that, you do have other macro event risks, such as the US election. So I think that it is okay for us to get used to, like I had said, even with Japan, I think even in the US, we saw that in the beginning of September already. I think that we should expect some volatility, both in equities as well as in bonds in this month. Be ready for that. I'm telling my clients that's okay. Volatility is normal seasonally at this time of year, especially going into the US elections. We certainly think in the 6-12 month forward picture, high quality US equities will continue to do well, as long as, growth, which we think is continuing to be very close to or above potential. The Fed begins their rate cutting cycle, which has again historically been very good for both stocks and bonds. So the longer term picture, if you look 3-6 months out, looks really good. For the months of September and October, again, depending on your time horizon, I think we can see a little bit of volatility. And I think investors should get prepared for that and not be spooked by that.
Okay, Gargi, good morning from here in India, and good to see you in. This is Nigel on this side. So plenty of pieces of the global puzzle and bracing for some volatility in the near term. But what about an emerging market like India? We have been a big outperformer. Earnings growth looks good out here. Political stability as well as something that, we boast of. But at these valuations, what's the view on the Indian markets from here on?
Yeah, I mean, it's been my absolute privilege and pleasure to talk to investors across the Americas. So I cover US, Canada, and Mexico, and talk about my country of birth and where I've studied and grown up, which is India, obviously, as you can tell. And the story has been wonderful. And I think that, yes, valuations are at the higher range of the whichever historical period you look at. But I think there's another broader story here, especially when I look at portfolios in the US for US investors. There is an underinvested story that is true of India, certainly, but true broadly of emerging markets. So I think this isn't even about valuations. As India becomes more and more important to the global economy, as it already is, but as we continue to take our place, take our seat in the global stage, I think investors need to at least get back to benchmark weights with respect to EM and with respect to India specifically. And I think that is the opportunity. Now, can we see some volatility, especially as you pointed out, around these valuations, as well as the point that I was making earlier around a little bit of US seasonality in September and October? Absolutely. But from a long-term perspective, as I said, it's been my absolute pleasure to talk to US investors about the opportunity, about the medium to long-term opportunity in India, which isn't going away anytime soon. And I think investors need to continue to move towards a benchmark weight, even if not an overweight position, to emerging markets and India specifically, which they are not at currently. So I think there is more of that trade to go. And again, nothing is ever a straight line. India, obviously, after the elections, provided a really good opportunity for investors. We've seen a really nice outperformance. I think we can see some pullback, but it's not the end of the world.
All right. Rarely ever is, right? Thank you very much, Gargi. Appreciate you joining in, and it's a pleasure having you here on CNBC-TV18.
Absolutely.
And as I said, look forward to many more. Appreciate it. Well, we'll take a quick commercial break here. We'll come back with more, but just want to leave you with some sort of calls and other views as well. This is Rajiv Batra of JP Morgan, who says that expectations for H2 2024 remains one of recurring volatility and a broadly challenging directional outlook for equities in aggregate. He says Goldilocks is well priced in and risks are skewed towards weaker growth outcomes. He says markets will also need to contend with uncertainty about the US election in the coming months, but will likely get a liquidity boost from Fed cuts before that. In these conditions, Rajiv adds, defensive, quality and income strategies are likely to be outperformers, and this will be helped if the recent volatility in AI names starts to moderate from here on.
Okay, let's move to the next call. This one's coming in from Rhythm Desai of Morgan Stanley. He says India has become the largest weight in the MSCI EM index, overtaking China yesterday. Likewise, he says India's weight in the EM index is knocking on the threshold to be the largest. He says India remains their top pick in an EM context and number 2 pick in an Asia-Pacific context. He thinks a correction in stocks could drive money on the sidelines to pour in, making such corrections relatively shallow.
Okay, well, on the rupee, we have Paramidal Sinha of Standard Chartered Bank, who says that the dollar-INR pair remains stuck in a tight range over the week, even as the dollar index turned volatile. Dollar demand from local banks remained strong and was primarily due to forex reserve accumulation. MSCI rebalancing inflows were completely absorbed by the local banks, while risk-off in equities could lead to FPI outflows in the coming week. Volatility in the rupee is likely to remain low. She's expecting the pair to be between 83.8 to 84.15 in the near term.
On bonds, Parul says global yields remained range-bound last week ahead of key non-farm payrolls data due on Friday, which is likely to be the most important data point before the 18 September FOMC announcement. Due to lack of domestic triggers, Indian bond yields traded in a 2 to 3 basis points range for the whole week. Robust first quarter GDP data, continued RBI hawkishness in policy rates, and OMO sales have led to limited rally in India rates. Continued FPI flows, softness in global rates, and lower commodity prices are supportive and positive for rates in India. In the near term, Parul expects the benchmark 10-year bond yield to trade in a range of 6.8 to 6.9% for the coming week.
Well, we've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, we run you through the list. We're looking at Reliance, Apollo Hospitals, Suzlon, Kalpataru Projects, LI Blenders, and Linde India. All of them will be reacting to positive news flow, while we have 4 stocks that will be reacting to negative news flow. Sona BLW, Glenmark Pharma, Mastec, and Thangamile Jewelry. I'll tell you what, we'll slip into a short break. You come back, we'll get into further detail on all these names. Stay with us.
Sessions?
Netanyahu refusing to withdraw Israeli troops from the Egypt-Gaza border, saying a retreat would allow Hamas to rearm. But it's a key stumbling block in negotiations, Egypt accusing him of obstructing a ceasefire deal. The U.S. says it's against the presence of Israeli troops in Gaza long term.
We've made clear that we are opposed to the reoccupation of Gaza.
Alex Lobanov, a father of 2, was among the hostages killed. A source tells NBC News his widow refused to meet Netanyahu during a condolence visit. The Israeli leader has not met the family of American hostage Hirsch Goldberg Poland, who was buried in Jerusalem.
Finally, my sweet boy, finally, you're free!
Israel carrying out more strikes in Gaza, but the UN says it's pushing on with a polio vaccination campaign, getting doses to more than 160,000 children over 2 days, even as war rages around them.
Welcome back. You're with us on Bazaar Morning Call, and it's time to talk about a lot of the stocks that are going to be in focus today. So our team is standing by with the list of top stocks to watch. Guys, good morning. So plenty to track today. There's a lot of news on Reliance aside of the board meeting and the bonus. Sudarshan, fill us in on the latest.
Morning, Survi. So I'm going with green for Reliance Industries on the back of two news. First, company has secured 10 gigawatt advanced chemistry cell battery storage capacity under PLI scheme. Heavy Industries Ministry had received total 7 bids. Of that, Reliance has emerged as the successful bidder. Remember, in May 2021, Cabinet had approved ACC battery storage PLI scheme with total outlay of more than rupees 18,000 crore. Besides the news, there is a board meet of Reliance Industries in which board will consider bonus issue in the ratio of 1:1.
Okay, all right. Thanks a lot for that, Sudarshan. So that one will hold one end up going by its weight on the index as well. But Vivek had given us a sneak peek into Sona BLW yesterday with an exclusive story. Vivek, tell us more, and congratulations on another news break.
Well, good morning. Sona BLW, like you mentioned, last afternoon, we did tell you that the company was on a fundraising plan. And along expected lines, last evening, the company launched its QIP. And, according to the term sheet that we accessed last evening, company is looking to raise up to 2,400 crore via the QIP route. Remember, the company already had taken approval from the board in July 2024 to raise the exact quantum. We understand that the indicative issue, price range for this particular deal is in the range of 675 to 700 rupees a share. At the lower end of the price band, the equity dilution is close to 6% of the total equity. Now, more importantly, we had indicated that there could be an M&A in the offing, and as per the term sheet, the usage of the proceeds along with debt repayment and to go ahead and increase its stake in closing out the transaction of Novelic. The company has also mentioned that the company will be pursuing strategic investments and organic as well as inorganic growth opportunities. So we'll wait and watch for this QIP to conclude and what eventually they do with the proceeds of this particular fundraise.
All right, Vivek, thank you very much. The story on Sudarshan Chemicals, now the story on Sona. And Vivek, I hope there is more coming. Pressure is on you. But that's exclusive once again. Well, let's talk about Pharma, right? I mean, stocks have been doing very well. Glenmark and Apollo Hospitals should be in focus. Ekta is here to tell us why. Ekta, good morning.
Thanks. I'll start with Glenmark. I expect that stock to be in the red today. That is because they've settled with the US Department of Justice. This is on the settlement on False Claims Act and anti-kickback investigation against Glenmark. So the company is going to be paying $25 million in 6 installments over 5 years. They're going to be paying an interest of 4.25% per annum from the 28th of May. The settlement does not contain any admission of liability except to the extent that Glenmark had admitted it in August 2023 in a deferred prosecution agreement. So you can look at it two ways. You can also look at it as an overhang being lifted for Glenmark, because these kind of settlements are quite regular for pharmaceutical companies in the life cycle of their businesses. Now, Apollo Hospitals, I expect that stock to probably be in the green. They are going to be incorporating a wholly owned subsidiary, Apollo 24/7 Insurance. And this is going to basically work in life insurance, general insurance and health insurance. They will be working as corporate agents. They'll act as agents. They'll engage in all activities which are incidental and allied or related to the insurance business. Remember that Narayana has started their own insurance arm. After this, Apollo Hospitals has as well. So it'll be interesting to see the stock reaction there.
Okay, all right. Thanks very much, Ekta, for that. Well, back to Sudarshan. He's watching out for a bunch of other stocks as well that are in news today. Sudarshan, which ones are these?
So I have like 4 stocks. So we'll start with Suzlon Energy. It has announced sale of non-core asset that is named as One Earth Property. It will be selling to 361 AM for rupees 411 crore, and on completion of sale, this property would be leased back to company for up to 5 years. Next is Kalpataru Projects. It will be prepaying non-convertible debentures worth rupees 50 crore on October 4, and to prepay NCDs to recalibrate its debt portfolio. Allied Blenders to acquire 80% stake in JV to be formed with O50 Talent, and company will be investing rupees 70 crore. This O50 Talent is represented by actor Ranveer Singh, and this JV will undertake business with respect to manufacturing, distribution, licensing of luxury and premium spirits. Last is Linde India. It has entered into plant sale agreement with Tata Steel, and it will be acquiring its industrial gas supply assets as Kalinganagar project.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's go back to Vivek. He's here to tell us about a couple of large trades that took place yesterday. Vivek.
Well, that's right. Yesterday I did see quite a lot of block deals that happened, and the one that took place, in the last hour of the session was the large block deal that you saw in Mastech. Now, remember, in Mastech, Capital International actually held close to 7.94% in the stake in the company, and this was under the name of Small Cap World Fund. Now, as per the exchange disclosure that's come in last evening, Euro Pacific Growth Fund, sold close to 5.6% stake. But remember, both of these companies, come under the same entity. What's actually been disclosed is the total 5.6% stake. Amongst the top buyers, ICICI Prudential Mutual Fund as well as the Gisalo Master Fund, both of them have picked up at almost 2.5% in the particular deal that took place last evening, last afternoon. The other stock on the radar is Thangamile Jewelry. Now, three promoters have equally paired stake. All three promoters have paired close to 1.5% stake. All of the promoters held close to 20% stake at the end of Q1. The buyer actually was Amundi India Small Cap Fund. They've picked up close to 2.5% stake. So again, Thangamile Jewelry, promoter pairing stake. Expect both of these stocks to react a little negatively in the red on the back of the supply overhang that you might see.
All right. Got it. Thank you very much, Vivek, for that. So let's quickly recap our list of stocks to watch today. Here are the ones that have positive news surrounding them and sentiment surrounding them. Reliance Industries, Apollo Hospitals, Suzlon Energy, Kalpataru Projects, Allied Blenders and Linde India. Stocks with negative sentiment around them are Sona, BLW Precision, Glenmark Pharma, Mastech and Thangamile Jewelry. Well, that's the stock list of the morning. Let's quickly now head across to Manisha Gupta and get a roundup of all the commodity market action. Now, Manisha, good morning.
Morning, Sylvie. Thank you for that. Well, after yet another day of decline, well, right now there seems to be some stability, steady moves coming in for crude oil prices, and this is after prices hit a 14-month lows in the overnight intraday market there. Well, there are reports now that the OPEC and allies could delay output increase that was slated from the month of October, and that really seems to have led to some stoppage in sense of selling here. Is there more buying happening right now? No, it's not, because the markets are waiting for further, clarification or a concrete statement coming in from OPEC as of now. We do understand that Libya resolution is already increasing supplies. Non-OPEC supplies seem to be increasing as well. And the global inventories are slightly on the higher side. And various reports in recent days have been revising their outlook on crude prices for this year and the next year quite on the lower side. So until something that can be heard from OPEC, as the report suggests right now, the crude oil prices would perhaps stay where they are. The declines, though, have been seen in case of base metal prices, and quite sharply there. The China PMI declining for a fifth straight month, weak demand, increasing inventories have continued to weigh onto the prices. So today is yet another day where you have copper, steel, aluminum, all of these metals starting Asia on a weaker note.
All right, Manisha, thank you very much for that. So that's essentially commodities, base metals, oil, everything in focus. We take a break. Hemang Jani will be with us for some fundamental stock conversation. Stay tuned. That's coming up.
The point where I would be concerned as far as markets go, whether it's globally or India, would be that if we break the August lows. Remember, August was a very volatile month when you had a yen carry trade issue, and again there was some data and there's a fear of a recession. So US had corrected almost 8.5%, 9%. Japan was much sharper. India corrected about 4 to 5%. So for me, the reference point for this volatility or for the month is all is well till we don't break August lows. One would give it a higher probability that we'll break out on the upside. Yes, volatility will remain and it will give us panic. But I do think that global markets have a good 5 to 7% or maybe 8 to 10% higher from where we are. And that goes for India also.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategy?
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, we've listed down all the stocks that you should be tracking. To help us out with some fundamental analysis, Hemang Jani joins us on the show. Hi, Hemang. Good morning and good to see you. And well, I wanted your view on the big boy Reliance Industries. That's that corporate action meeting that will take place later today. And also overnight, we had news that the company has bagged the 10 gigawatt battery storage PLI benefits worth around 3,600 crores. This one could hold one end up. What's your view at current reckoning?
Yeah, good morning, Nigel. Thanks for having me. I think this would be the first approval that the company has got for building a 10 gigawatt battery storage project. And I think the total budget that the government had outlined was about 3,620 crores. So while in terms of the size or the amount, this may not be too big given the overall size of Reliance Industries. But the fact that they've got this project and this will mark the foray into the clean energy, that we call it. So surely it's going to be a big positive sentimentally. And given the overall pipeline that Reliance has in this particular area, there is going to be some sort of a positive reaction. At the same time, Nigel, we should bear in mind that the refining margins have come under pressure. First time Singapore gross refining margins are quoting at a negative tick. So I think we will also have to consider a bit of a negative because of the refining margins part. But overall, our view on Reliance at current level is quite positive.
They have, I think, point taken, Hemang. I think the first PLI round, they got 5 gigawatt hours and now they've got 10. And the stated aim, of course, is much bigger. I think from what I remember is 50 gigawatt hour by 2027. So to have one of the largest capacities in the space, really, that's the ambition. Just a quick word, Hemang, on, if you will, on the drop in oil that we've seen. And, from a trading perspective, up and down, I mean, we had the big losers in the upstream oil companies, Oil India, ONGC, etc. They all lost. But more importantly, on the downstream front, what's your sense? The marketing companies, HP, BP, they make sense?
Surely, Prashant, good morning. I think, given the way the crude has moved a large part of this year, I think it's been, positive for overall as a country and as from a stock market standpoint. And more so given the recent weakness that we have seen in the crude oil price, despite geopolitical tensions, definitely bodes well for oil marketing companies, though we have seen a significant re-rating, of this particular sector. The fact that, you will see, some sort of a relief in terms of the margins part, the marketing margins per se, if the companies do not, do imminent price cut, would surely be positive. The stocks have actually gone nowhere in the last 2 or 3 weeks. So within the pack, we like IOC and we do like HPCL also at this point.
Okay, all right. Hemang, stay on. We'll have more questions for you in just a bit, but we also have to welcome in our first corporate guest on the show today. The company in focus is CCL Products. Well, the stock has been doing rather well. It's up almost 28 to 30% in the last 1 month. And just, look at the price move yesterday. 15% just yesterday itself. But there is some concern around elevated global coffee prices. Arabica coffee prices have hit 13-year highs. To talk about this, and of course, to get a sense of the company's outlook, we have with us Praveen Jaipuriar, CEO at CCL Products. Praveen, great to have you with us. Good morning. Thanks for taking this call. So let's start with the global outlook. Considering we are looking at these multi-year highs with, I think, insufficient rainfall in Brazil and perhaps a lower yield there, what is the situation right now and what is the flow through? What is the impact, if any, on your business?
The global coffee prices remain to be at very high levels. And This actually started a couple of years ago when the Brazil Arabica crop was affected due to frost and all. And while this year the Brazil crop has been good, there are reports that the Vietnamese crop could be in short supply because of El Nino effect. So these kind of supply constraints is leading to high coffee prices, and that remains right now. Only after, generally the price trends become clearer once the harvest season comes. And there are two large harvest seasons across the globe. One is the Brazilian harvest season and one is the Vietnamese. So Brazilian crop was good this year. However, that did not lead to a lot of reduction. We are expecting that the Vietnamese crop will come around November, December time. And that's the time we will get to know how the prices will pan out in the future. And really it is now anybody's guess that how will it pan out, because there's a lot of, with these kind of price increases, a lot of speculative tendencies creep in the market. So that's on the,
sorry to come in, take your point on, we need to sort of see if the price surge sustains or not. But the fact that prices have been higher, has that had any impact on your volumes? Because I think your volume guidance is 10 to 20% for the current financial year. Do you stick to that, or is there some tendency to, put off purchases or to go for, perhaps slightly lower sizes or lower volumes?
So I'll begin with the consumption. Fortunately, even with high coffee prices, we haven't seen any consumption change with the end consumer. So yeah, people are still drinking coffee, and generally because we are in the instant coffee segment, which is largely in-home, where the price pinch could not be as big as an out-of-home consumption could have. So we are not witnessing any consumption, pattern changes, and therefore our volume guidance remains like that. It also doesn't impact our margins because we work on a cost-plus model. The only change that we have seen is that because of the volatility, the clients or the customers, they're not willing to bet long, in the sense that they are shortening their contracts. Earlier, when the price stability was there, they would probably go for a year-long contract, 1.5 years contract. But now they are limiting themselves to a couple of months because they are also in a wait-and-watch method.
All right. Hi, Praveen. Good morning and good to see you. Yesterday, the stock price spiked up, and that's the only indicator that we have. I understand that there was some fund buying, maybe a couple of family offices as well were buying, but you'll get the bank post later this weekend, so you'll come to know on that. Basic understanding is coffee prices moving up. It's not had an impact on demand, as you're saying, so your volume guidance is intact. What is the volume guidance? We had a wide range of 10 to 20%. And I also wanted to ask you, since as you mentioned, you're a converter, your working capital cycle could get stretched, right? Because coffee prices move up. Tell us about that.
Absolutely. So, the reason why we widened our guidance was simply because of the fact that I mentioned that earlier, maybe a couple of years ago when the prices were stable, we used to get very long-term contracts. And actually at the start of the year, we were very clear that what will be our volume volume growth for the year. But considering that people are a little more, wait and watch this thing, the clients are not very committal in terms of long-term contract. So therefore, we widened our guidance because there could be some clients who would start working on lower inventories at their end. And that was the reason we gave a little broader guidance. And sorry, the second question.
On the working capital gets stretched a little bit, or it's manageable? Yeah.
No, absolutely. Working capital stretch has been there because we are growing volumes, and on top of it, the coffee prices have gone up. So it has got a double impact on our working capital. But the only good thing about our working capital is that all the working capital that, because we work on a cost-plus model, all the working capital that is deployed is for confirmed contracts. So only if the contract is confirmed, we go ahead and buy coffee at the back end. Which means that this working capital, every penny of it is actually, sold.
Okay, so just to confirm, volume guidance you're keeping at 10 to 20%. I also wanted to ask you about the EBITDA per kg. I think it was at around 105 odd. But since your mix is going to change towards FDC, that's likely to see some kind of a booster shot. So what is it currently? Where does it move to?
So yeah, it's currently at the similar levels as you talked about, 105 or so. And, while FDC will also come in play, we also have now extended capacities of spray dried as well. So we didn't, we don't expect because one will offset the other. So we are maintaining the same guidance for EBITDA per kg for the year. Of course, we are working constantly on building more efficiencies because at tough times you kind of build more efficiencies. But in terms of guidance, we are not, kind of changing that in the short term.
Praveen, hi, good morning. Prashant here. And I think we're speaking after a while. So good to see you here. And we're talking to you as we consume copious amounts of coffee here. So, I mean, looking at this coffee consumption in the studio, I can tell you that demand is not going to be a problem. If this is a sort of, any indicator. So in terms of top line, for 25, you did 730, beg your pardon. For the full year, FY25, if you can give us a sense of what the number will be on the top line front. You did 2650 crores, for last year. That is FY24. What could the number be for 25?
So generally, if our volume guidance is in between 10 to 20, you could expect another, 10% or close to that price increase advantage that the top line would get. So, anything if we land in between 10 to 20, the top line could, the value top line could land in between 20 to 30. So that's the kind of guidance. But generally, that's not the volume guidance is the guidance we look forward to. That is the reason because even the EBITDA will grow in line with the volume. So if the volume grows by 10%, the EBITDA will also grow by 10%. So that's the real, marker for the business that we look internally.
And that is the EBITDA per kg number, 110 rupees.
Yeah.
That's the...
Yeah, 105 to 110 rupees. Yeah.
Okay. And got that. Could you just very briefly break up the market segment for you now? How much is institutional, how much is going to, the branded and just the overall breakup?
Yeah, so I think probably you're asking about the branded business now. So branded business, we did in India, the total India business last year, we closed at around 300 crores or so. And out of that, 200 crores was pure retail, which is our own brand. So that's the kind of, segmentation that we have got internally. Out of the branded business, we probably, end up doing 50% from the general trade, which is the Kirana stores, another 20% or odd from modern trade, and another 15 odd percentage from e-commerce. So that's the kind of breakup we have for the domestic business. The brands are also doing really well. We probably are looking to drive a 40 to 50% growth this year, and from 200 crores, we are looking to close 25 at around 300 crores, maybe 10, 20 crores here or there.
And finally, just a last takeaway, as you grow this branded business, and I think the freeze-dried coffee plant is coming on stream, Vietnam, the expansion is on. When do we see CCL Products go back to the 20s when it comes to EBITDA margin? Because I think last several quarters, the run rate's between 16% to 18%. You used to be in the 20s not too long ago. When do we see that happening?
So, okay, two things. First of all, actually 20 to 16 is not a reduction because, you are looking at EBITDA percentage with respect to top line, and the top line is getting the price because we work on a cost plus model. It's getting that price while the top line is getting that price advantage. The EBITDA to the top line percentage looks, it's optically looking down, but it is not because my per kilo EBITDA is not coming down. So, now it's a very tricky thing. If the coffee prices were to come down, automatically you will see that the price, the EBITDA percentage to top line will go back to 20. So, the better this thing marker to look at is the EBITDA per kilo. Yeah, and it's something that we think that over a period of time will keep improving because we are focusing a lot on branded business, small packs, more premium and specialty coffee. So we are working on...
Got it, Praveen. We'll leave it there. Thank you very much for joining us and appreciate you being here on the program on CNBC-TV18 this morning. Good luck. We'll take a break. Mitesh and Sudarshan will be with us with some technical trading ideas. Stay tuned. Coming up.
Masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
कि उनके इस कथन का मैं स्वागत करता हूं और निश्चित रूप से भारतीय जनता पार्टी को हराना हम सबकी प्राथमिकता है। उनकी नफरत की राजनीति, उनकी जन विरोधी और किसान विरोधी राजनीति, नौजवानों के खिलाफ उनकी राजनीति को, महंगाई के खिलाफ जो हम लोगों का मोर्चा है, निश्चित रूप से उनको हराना हमारी प्राथमिकता है। लेकिन इसके बारे में आधिकारिक रूप से जो हमारे प्रभारी हैं हरियाणा के संदीप पाठक जी और सुशील गुप्ता जी, वो लोग इसके बारे में अंतिम फैसला बातचीत करके और इसकी सूचना केजरीवाल साहब को देंगे और उस हिसाब से निर्णय लिया जाएगा। मैंने कहा कि आपने उनके एक वक्तव्य का जिक्र किया, लेकिन इसके बारे में कोई भी फैसला जो हमारे हरियाणा का संगठन का काम और चुनाव का काम जो लोग देख रहे हैं वो केजरीवाल जी की सहमति से लेंगे।
सवाल ये है कि राष्ट्रीय स्तर पर संगठन के लिए आप सक्रिय हैं, इंडिया अलायंस।
Okay, welcome back. We've got the market, which is about 5 minutes away from the pre-open session. We have Mitesh Thakkar and Sudarshan Sukhani who are with us. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. How are things looking? I mean, a gap up is what the indication is. Would you be willing to be a buyer in that, or would you wait for a dip?
Morning, Prashant. I presume I would want to take a long trade. One, I think, we might open near the previous high of 25,300, 330 zone. Yet, I think, the overall evidence does point towards continuation on the upside. The setup is quite positive. Yesterday's gap down was immediately bought into, and the 2-hourly averages were not even violated. So in that sense, I think, good chance that we'll make a new high. So even if you open 100 points up, if you get a 20-30 point dip immediately post that, I think that's the entry point on the Nifty, and I would look at now targets of 25,500.
Okay, all right, got that, Mitesh. Sudarshan, what about you?
Good morning. See, the market has its own wisdom. Yesterday, the view was we should step aside, and that didn't work out. Every dip is being bought in this market, and it's not just India. Even in the US overnight, the dip that we saw 1 day ago was bought into. So world over, the markets are saying we want to go higher. In India, that message is even louder and clearer. So today, I would suggest buying the Nifty and buying the Bank Nifty. The Bank Nifty had a very narrow range yesterday. That narrow range is going to be broken on the upside. That's a buying opportunity. So go long in both the indices.
Okay, all right, gentlemen, stay with us. We'll slip into a short break, come back, and we'll get the picks as well from Sudarshan as well as Mitesh. We'll also focus on the metal space. We'll have Aditya Velikar, the senior research analyst at Axis Securities, will be joining in to give us his take on the steel space.
ये हरियाणा के चुनाव से संबंधित बात है, ये लोकसभा चुनाव से संबंधित बात नहीं है, या ऐसे किसी राज्य से संबंधित नहीं है जहां पे मैं प्रभारी हूं। तो जो लोग संगठन का, पार्टी का एक काम करने का तरीका होता है, वहां प्रदेश अध्यक्ष सुशील गुप्ता जी हैं, वहां के संगठन का काम संदीप पाठक जी देख रहे हैं, इसके अलावा पार्टी के राष्ट्रीय अध्यक्ष हैं। तो पार्टी में निर्णय लेने की एक प्रक्रिया है, ये सब तय करने के बाद पीएससी
हरियाणा और दिल्ली में दरवाजे खुले हैं क्या कांग्रेस के लिए? कोई बातचीत की जगह है क्या?
अब आपने एक सूचना दी है, उसके बारे में और जानकारी लेके तब बताऊंगा।
wedding-linked spend, which did not happen in the first quarter and maybe the first half of the year, would start coming back very, very strongly from October onwards. So we expect a very strong double-digit growth happening in the second half. That is something that we very clearly seeing happening. And if I were to see from a business point of view, over a long period of mid-range to around, next 3 years guidance that we have to give, we have built in very, very strong pillars of the business. And each vertical has got very strong pillars built in terms of its growth, which we have been talking about in various meetings. We clearly see ourselves being able to deliver a very strong, healthy 12 to 15% consistent growth rate over the next 3 to 4 years. One piece we are really gunning for and pretty confident is that over the next 4 years, we would like to double our EBITDAs from where they are currently.
Welcome back. So let's go back to our technical experts and get some individual stock ideas going as well. Good morning, gentlemen. Mitesh, let me come to you first. So in terms of stocks, what would you work with today?
Yeah. Morning, Sylvie. I have more of buy calls. Pidilite is on the buying list. Yesterday the paint companies did well, and I think falling crude oil is helping over here. So Pidilite also looks like getting into a buy mode. Sorry. Looking at a target of 3,300 and a stop at 3,180 is what I recommend. A buy on GNFC with a stop at 684 for targets of 730. Dabur is a buy with a stop at 636 for targets of 680, and one sell call, that's Bank of Baroda. Keep a stop at 249.5, look for targets of 230.
Okay, and Sudarshan, what about you? Stock ideas for the day?
Well, it's also mainly buying. I'll start with my only intraday short, that's ONGC. And well, I think that's good news in the sense that crude prices are coming down. So we don't mind a small dip in ONGC. It's an intraday short with a stop above 320. Everything else is a buy. Astral is a buy with a stop below 1915. And there are two cement companies. Shree Cement, both of them had done well yesterday. Expect continuation today. Shree Cement is a buy with a stop under 25,350. And Ultratech is a buy with a stop under 11,380.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's get in a quick word from Hemang Jani before we let him go. Hemang, yesterday I noticed that Biocon spiked up in trade, and a couple of other pharma names as well did well. How are you all positioned in the pharma space?
So Nigel, this quarterly numbers have been extremely good. The sector grew at almost 22%, and most of the management con calls, they were suggesting that the outlook both in terms of US generic market, India market remains positive. I think Biocon, probably the market is again trying to see if there is any kind of M&A kind of an activity or some kind of an indication from Dr. Kiran Mazumdar show on the succession planning. So I think you may have, some news flow around that which could have caused this up move. But overall, we continue to be very positive on the pharma space, particularly some of the mid-cap pharma companies, Laurus Lab, FDC, some of the companies that would benefit because of the cut in the GST on cancer drugs. I think those are the pockets where we would expect good action.
Yes, absolutely. That, story was done by our colleagues. It was a CNBC-TV18 exclusive, and one of the drugs which potentially could get this relief is trastuzumab, which is, of course has been one of Biocon's major cancer drugs as well. Got it, Hemang. Thank you so much for that. Let's quickly move on to another important development. The Minister of Heavy Industries, H.D. Kumaraswamy, was speaking at an event yesterday, and he addressed the industry concerns on China's steel imports, and he pledged to push for higher tariffs on Chinese steel, which is being imported into India. Let's take a look at what he's promising the industry.
I can understand. I will promise you that
the problem which you are facing from the China. For that, actually, I try to convince our Prime Minister and Finance Ministry to look after about the from 7.5% tax to 10 to 12% you are actually your demand is there. For that, definitely I will going to try to convince and to bail out the present problem which our steel industry facing in India. For that, actually, I will be with you. I am very grateful to you for your achievement and the contribution given to the country from your industry. I urge all of you to bring your minds and expertise together so that as one united Indian steel industry, we can forge a path forward.
So the steel minister says he's going to make a pitch, but Mr. Naveed Jindal says 10 to 20% import duty may not be enough. Let's hear what he had to say.
USA, Canada, they have imposed suo moto 25% duty. Similarly, now Japan, can you imagine? Japan is also asking for protection, Japanese steel industry. So the situation is serious. We are very efficient steel producers, so we can challenge them. But then the steel industry in India, they must have some surpluses also to be able to invest in growth, to be able to decarbonize. Decarbonizing is very important for everyone. So we do need resources to be able to do that. So the health competition must be healthy. So we are only against the unhealthy competition that we are facing from some of these countries, and I'm confident that the Government of India is going to take the necessary steps.
The minister spoke about raising it for 7.5 to anywhere between 10 to 12. Will that be okay for the steel industry?
That would not be enough, because these prices. See, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they are losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They are not realistic prices. Those are just prices for dumping of their material to protect their domestic industry. But it is hurting our industry, so we have to safeguard against that.
Question is, will we get a duty, and how much will be enough? To help us out with an understanding, we have Aditya Velekar, the Senior Research Analyst at Axis Securities, who joins us on the show. Hi, Aditya. What's your take? If you could tell us right now, what is the landed cost of imported steel coming in from China that compares with the domestic prices? I understand the domestic prices are still at a premium. So what is that difference? And how much do you think will be enough to nullify that?
Yeah, good morning, Nigel. So thanks for having me on the show. So currently, Indian HRC prices are at 8% premium to Chinese HRC prices, and based on the 7.5% customs duty. So if we increase that customs duty to 12%, then that premium will fall to 4%, which is still not at parity with the Chinese prices. So in order to bring it at parity with the Chinese prices, the customs duty will have to increase to 18%, 17 to 18%. So then only the premium falls to 0%.
Okay, Aditya, so, that's a tall ask to get 16, 17% protection. But Aditya, in the past we have seen, right, Indian steel is normally at a 4-5% premium, I think. Currently it's higher, but normally that's par for the course.
Yes, ideally, the domestic HRC prices should trade at a slight discount to imported prices in order to incentivize the domestic steel to be the first priority for consumption. Ideally, that should be the case. Currently, the premium is slightly higher at 8%, and even if we go for customs duty hike up to 18%, then the premium falls to 0. So it needs to be above 18% in order to incentivize the domestic steel mills to push their material in the domestic market.
Right. Aditya, has this situation been like this for a while, or something has that gap increased quite meaningfully very quickly recently? I'm just trying to understand what will catalyze action from the government, and should we expect something now?
Yeah, so to put this in perspective, I guess the spot spreads have fallen from almost $450 per ton in last year to the current $350 per ton range. So that is the kind of impact because of this fall in HRC prices, despite taking into consideration the softening of the coking coal and iron ore prices. So if we see on a quarter-on-quarter basis, the spot spreads are down by 1 to 2%, but on a year-on-year basis,
for our viewers, Aditya, what do you mean spot spreads?
so it's the difference between the HRC prices and the raw material, prime raw material, that is coking coal and iron ore. So that spread has,
Go on, please.
Yeah, so the fall in steel prices has intensified from the month of May. So if we consider the recent peak that was in the month of May, so HRC prices have softened from that level by 10 to 11% in Indian market and even higher level in Chinese market by 15%. So this is the trigger where now the dumping from the Chinese prices has intensified because they are offering their HRC prices in the range of $462 per ton on a FOB basis. So which is the drop in HRC prices in China is at a higher quantum by 15%. So that is putting pressure. The regional fall in HRC prices in these countries like China, Vietnam, Japan. So that is putting pressure on the domestic steel prices.
Aditya, so I'm going back to that number you made. You said 17 to 18%. That is the kind of increase in tariff we need to protect domestic producers. Now, we don't know how this, I mean, raising the customs duty itself may not happen. You might have this anti-dumping duty as an additional duty, right? So total tariff goes up to that level. Apparently, I was reading that investigations have been opened into Vietnam as well, dumping of steel from Vietnam. So that's also a concern. In the past, whenever steel has enjoyed an anti-dumping duty, typically what is the kind of range? So realistically, now the minister himself is saying that he'll push for 10 to 12%. Mr. Jindal is saying even that will not be enough. But realistically, in the past, if we go by history, then what is the kind of anti-dumping levy that the steel sector has managed to get in the past? So then we work with that at least as a reference.
So I recall, so currently that customs duty is 7.5% and that is only for China. For countries like Vietnam and where we have the FTA, that is free trade agreement, there is no customs duty for the steel imports from these FTA exempted countries. So the problem is the China is rerouting its steel from the countries where there is an exemption from customs duty perspective. So either the FTA, the point is means either we have to increase the customs duty on China, but that will also get circumvented if they route the steel from these free trade agreement countries. So the recent customs duty which we have seen is 7.5%, and I don't recall more than that as a customs duty we have put in the past.
Okay, Aditya. So the big takeaway is that duty needs to go to 17-18% to totally protect the domestic steel industry. And I think we'll have to keep an eye out on what's going on in China because pricing is weak out there. They're consuming less. And because they're consuming less, they're exporting more, which is putting the entire global industry in a bit of a tizzy. Appreciate you joining in, Aditya, and giving us all those cues.
You know, it's not just steel, right? The latest estimates say that they won't grow 5% in China this year. 5%. I mean, this is that's a country which grew at 10% plus, like clockwork for 20 years. And now we're not. So I think it's everything. But it's interesting, this entire tariff argument, right? Just yesterday, there was a news item which said, and I think we reported it as well, where a lot of the industry, not steel, but other industries were saying that we should actually have easier imports, etc., for industries where we don't have capacity still built up.
So there are some protests in areas like Ludhiana, the MSME sector over there.
Who are saying
who are saying, let it come. What's the problem? Because we like cheap steel. But obviously, you know, that's the delicate balancing act that I guess the government has to look at.
Yeah, but you know, it's tariffs, I mean, generally are going up around the world, especially with regards to steel and everything else, of course, which is going to go out of China because they've got, of course, the largest capacities for pretty much everything. We'll get our 9-10 calls going as well. Sudarshan is here to help us with that, and Mitesh is with us as well. Sudarshan, what do you have?
Well, consider buying Astral with a stop under 1915.
Mitesh, what about you?
I would recommend a long on Pidilite for targets of 3,300.
Okay, both from the similar kind of space, Pidilite and Astral. home improvement, but those are technical calls and coming in from Sudarshan and Mitesh. Well, let's talk about AU Small Finance Bank, Chola Investment once again. Abhishek is here with details. Abhishek.
Well, Goldman Sachs has initiated coverage on both the stocks. So on AU Small Finance Bank, they have given a buy recommendation, target price of 831 per share. They say that it's ready for the next innings. So sector leading EPS growth beckons this investment call of theirs. They forecast EPS growth of 27% CAGR over FY24 to 27, and they estimate return on asset to improve by 14 basis points during the same period. So robust loan growth will drive, this ROA improvement, especially by the commercial retail portfolio. On Chola investment, they have initiated with a buy call and target price of 1,786 per share. They say that market share gains amidst commercial retail upcycle augurs very well for the company. So they expect Chola to deliver an EPS CAGR of 33% over FY24 to 27, during which the ROA profile of the entity will improve by 24 basis points, driven by robust loan growth as well as gain in market share in many of the product segments that they cater to. Back to you.
All right. Abhishek, thank you very much for that. So those are two names to watch out for, but agri names also perhaps in focus. HSBC is out with the report. Sudarshan is here with details. Sudarshan, morning.
Morning, Prashant. So HSBC has written on agri input companies. It has a buy call on UPL, PI Industries and Dhanuka Agritech, and hold call on Bear Crop and reduce call on Rallis. It says both UPI and PI Industries have least exposure to domestic businesses, and the sign of recovery for both UPL and PI Industries in global agriculture is positive. Also, higher area under crop showing a definite positive, and strong rains likely to moderate growth in Q2 for agricultural players. Also, good rainfall to boost water storage, supporting H2 FY25 domestic sales growth, and total overall FY25 expect a healthy growth for agri input companies.
All right, we're just a couple of seconds away from market open, so thank you very much for that. First rates coming up. I mean, it will not be, at least the pre-open is not indicating a 100-point start higher as the GIFT Nifty was. It's a more modest 50 points, and then we'll pick up from there. So the first indication is a 50-point start and a 100-point start in the Sensex. So what do we have? So 25,253, that's about 0.2% higher, 0.2 on the Sensex as well. We're at about 82,558. So these are the first rates which are coming through. 42 on the Nifty actually, and the Sensex looking up as well. The Bank Nifty is up 0.25%. We're back above 51,500. The mid-cap index is up about 0.4. So it's a quieter kind of start, which we are looking at. Market breadth is looking pretty positive. 7:1 is the advances to decline ratio. And of course, the heat map on the Nifty, 10 stocks, 10, 11 stocks are lower, but you've got the majority, the bulk of it, opening up in the green. Surbhi.
Okay, so let's take a look at the movers on the upside. You have Ultratech Cement to kick things off. The top mover on the Nifty right now, there's Hindalco. There is Tata Steel. So basically, some of the metal names and commodity names are doing well. Even JSW Steel managing a little bit of a green. And there's ITC on the upside. There's LTIMindtree and Wipro from the tech space as well. So very, very mixed trends on the way up. On the way down, there's some cool off in the so-called defensive trades. So Nestle and Britannia, they're down about 0.5%. Not too much, just about 0.5%. The Bank Nifty is actually doing quite well. Bank Nifty is up 180 points. HDFC Bank, ICICI Bank are leading the charge from the front with a gain of about 0.5%. There's Axis up as well. So banks are looking good. And Reliance, like we said, it's in focus for multiple pieces of news, including, PLI for some of their expansion plans, as well as the bonus meeting today. 1:1 bonus will be considered by the board. Reliance is the third top performing stock on the Nifty now.
Well, that's right. The big mover this morning is Chola Investment on the back of a GS note, as well as GS note on AU Small Finance Bank. So both those two, they are the biggest movers today. AU Small Finance now, it's one of the top gainers, is up close to around 4% and on big volumes. And Chola Investment as well, that one as well is flying away as we speak. So big up move is what we're seeing on both those two names. From the broader markets, another one that's doing very well is NIT. Oh, that's gone from strength to strength. I think around 3 weeks or so ago, it was less than 150. Now it's more than 200 rupees. Stock up 6% as we speak. Massive up move is what we're seeing out there. Suzlon Energy, the street likes what they're doing with regard to selling that asset and leasing it back. So stock is up close to around 3%. Good move is what we're seeing on that one. We have a large trade on Max Financial, but 3.5% equity changed hands. So that explains why that stock is down 2%, but it's quickly bounced off the low point of the day. So those are the top movers in trade today. Alembic Pharma as well is up close to 2.5%. Zomato is bouncing back. It's up close to around 2% as we speak. So pretty good looking screen. It's not the 100 points that the Gift Nifty was suggesting, but par for the course. We're up 50 points. We bounced up 100 points from yesterday's low. Put it together, 150 points up from yesterday's lows.
You know, Ecos Mobility, the listing from yesterday is up 7%. And it's the second largest volume-led gainer in the market today. It had a decent start. I mean, you know, about 17-18% higher day yesterday on day one. Not as big as we've had with a few others, but good enough. Ecos Mobility, I mean, that's the one I'm talking about. So 476 on that one. You know, so AU and Chola, of course, are the big 4.5% and 4% movers. So both have got very large volumes. We mentioned NIIT, which is coming up at number 4 with volume-led gains. There is Linde India, which is up about 3% or so. IIFL Securities has been having a bit of a move last few days. It was a big one yesterday, and it's up about 3.5% this morning as well. What else? You've got PG Electroplast, which is up 4%. So that's coming at about 590. That's from the EMS space. Kernex Microsystems is up about 4.5%. Again, a stock which is actually which sold off, but is now trying to make a bit of a comeback. And there is Fino Payment Bank, which is also up about 3.6%. I can spot a Zaggle, which is up about 2%. But that's it. I mean, you go down the list and volumes start to fade away pretty quickly. Max Financial, of course, that block and volumes are outsized because of that block coming through at this stage. Garden Reach, you know, some of these shipbuilders, right, from yesterday, which were big movers, they are seeing some profit booking, but not very much. Look at the Max Estates. Max Estates is down sharply. It's down 4%, 630, and it's coming up with some volumes as well. So I'm just only highlighting that because there's been this block in sort of Max Financial Services as well. So I'm not sure if there's any, I mean, rub off, but why should they be? But it's down 4.5%. Uno Minda is down about 2%. Marico is down 1/3%. Cummins is down 1%. So that's essentially the lay of the land for now. 1,700 stocks are higher, and you got 400 stocks which are up in the green at this point in time. Well, we have our market master of the day with us. Mahesh Patil is joining us. Mahesh is Chief Investment Officer, Aditya Birla Sun Life Asset Management Company. Mahesh, good to have you with us here. Thank you very much for your time. Mahesh, let's just get a quick sense on you know, this entire flows picture. At a net level, what is the industry averaging at? I mean, if you can give us the latest, you know, for this month as well. Are flows holding on both on the SIP and discretionary side? And where exactly is the money going?
Yeah, good morning, Vishal. So I think the overall in the last 3 months, we have seen that the net flow numbers for the industry have been clocking a much higher number than what it was average of last year. And I think that broader trend continues, it seems like. I think we don't have the exact number for last month. But I would say clearly the net flows still remain fairly strong. The SIP flows are strong. What is the trend? What we saw last couple of 2 to 3 months is that out of the net inflows, large amount of money came in the thematic funds, right? So there were a lot of these NFOs which were there on the thematic side. And that's where the larger, more than say around 40% of the inflows were in that category. But one interesting trend, possibly what we are seeing is that there is some interest coming back into the hybrid funds, and also some inflows coming into the flexi cap and the large cap category, compared to say last year, okay, where we had seen this category was totally ignored. So I think that's a kind of a subtle kind of a change of what we are seeing. But by and large, I think the money inflows into the markets, into the mutual fund industry seems to be still on a steady wicket.
Oh, absolutely, Mahesh. That's the big trend that we've witnessed over the last couple of months now, right? Thematics is where the action is, and that's where the money is coming in. But, you know, what about valuations? Because obviously there is product innovation on that side, and you're seeing, and now there are a lot of passive products, passive thematic funds that are coming in as well, and they're bringing in the money. So what about valuations in some of these themes like defense or manufacturing or infrastructure? Because this is where we've seen a fair amount of newer products as well when it comes to thematic funds. So how do you see valuations in these specific pockets?
Yeah, so I think in some of the themes, yeah, clearly they have kind of, there's a lot of fancy which has been there, and we've seen a lot of money chasing some of these themes. And a broader market, if you look at it, in the sectoral themes, yeah, in some of the pockets, the valuations have moved ahead. But I think some of the themes which have come in, also the outlook there, right? One has to really look at the long-term outlook on this theme is still really good. So there could be period of pause, or there could be period of consolidation in some of the themes. And investors who are coming into these thematic funds should really look at on the perspective whether the where you are early in the theme or the mid cycle of the theme or in the late cycle. So clearly, if you're in the late cycle, then clearly one needs to be very careful. But even if you're in the mid cycle, I think that should still be okay if you have a slightly, say, with a 2 to 3 year view horizon. But I think I would say that it's time now to really look at more the diversified fund, right? Because as I said, in the last 1 year, we've seen that the market breadth has improved significantly. So a lot of the side of the market has gone up significantly, and which is also reflecting the fact that if you look at the number of stocks, okay, say in the BSE 500, which have kind of outperformed the BSE 500, say by at least more than 10%, that number is the record levels. And that's because of some of the themes, the sightings which have played out. And that's where the valuations are looking a bit stretched. But if you look at the broader Nifty, right, there the valuations, if you compare to FY19 levels pre-COVID, and now it's only about 7-8% higher. So I think that's where the larger comfort is. So I think it's time where people start putting money into the more diversified fund, where the risk mitigation will be much better.
Right. I just want to quickly highlight Zomato. It's taken off like a rocket. It was not there in the mix earlier when we sort of were looking at the stocks and what was moving. But the Zomato intraday will come up on your screen, and look at that. So actually there was a lower start on Zomato, and then it has moved up to where it is now, which is a full 10 rupee turnaround coming through on that one. The other one is Edelweiss. I just want to make a quick mention. Edelweiss, I mean, the low yesterday was $104. It was a late surge on Edelweiss yesterday, ended up about, I think, 4%. It's another 3.5-4% this morning. So just sort of two new names into the mix this morning. But there is lots more in terms of individual names which are coming through. Nigel.
Yeah, all right. Well, hi Mahesh. Good morning and good to see you, Ben. What's your view on these new age themes? Zomato, I think the other trigger, the technical point is that it could come into the FNO. If it comes into the FNO, then it will be eligible to come into the Nifty as well. That's what the street is hoping. Your view on these new age themes, some of these concept stocks, Zomato, Ola, a lot of them have done quite well. Your view?
Yeah, so I think some of the new age companies, okay, we've seen now they have come of age, right? In the sense that we are seeing profitability coming in both, say, at the not only the EBITDA level, but also the PAT level. So now they are, while their growth continues to be on the higher side because they're still in the early stage of their growth, or probably the mid stage of their growth. But I think now we are able to value at least some of the companies which have now been there for some time and are turned profitable more from a traditional valuation matrices which are there. But I think then again in the new age company, we have to be careful in terms of really looking at whether the unit economics are really making sense, right? So if the unit economics are not in place and at the unit level you're not making a profit, then we would be slightly wary about that in terms of trying to enter that and taking any large position over that. But a lot of these names which are there, which have now established unit economics and have got the scale and size, and more importantly, established their dominance, okay, at least in their space where they are. So I think these companies are now where investors can really look at it. And obviously, since these are high growth companies, high value, we have to be careful in terms of when we are entering into. And on a quarterly basis, one needs to monitor in terms of what is their delivery, if they are really sticking to their growth or they're faltering, because here the volatility will be much higher, right? And if they falter on growth in any of the quarters, I think you could see a larger derating. So that's where investors need to really keep in track whether they are really tracking the kind of performance or the expectations which the market has from these companies.
The market's come off, right? I mean, 25 odd points is what you have on the index, 25,200. So just about holding. And we were saying this, I mean, the global picture is, I mean, at least the handover was better, but it's neither here nor there. You know, generally, the big data point out of the US is tomorrow's jobs number. And markets would be broadly quite wary about sort of going big one way or the other before that number. And that is only, of course, around the time that the US markets start to trade on Friday. So it's a bit quiet overall so far as indices are concerned. Edelweiss is now up 6%. So that's actually, you know, flying now, 121 on Edelweiss. But there is so much more. Kaplan Point is up 4.5%. You've got Kernex, I mentioned. Craftsman Auto is up about 4%. So 62.52 on Craftsman. I could go down the list, but yeah, volumes are still about picking up. But this is the bulk of what is going on out there. Mahesh, just a quick view on banks, but more importantly, NBFCs, right? I mean, if indeed we are in that point where rates will start to come off, what do you think? Should one stick with some of the larger banks, or do you think it makes sense to look at some NBFCs, etc. as well? On the housing side, companies are keenly awaiting how this new PMAY 2 will work. So that'll be important for them. But generally, how's the environment? And what is a better bet right now? Some of the NBFCs or large banks?
Yeah, so I think one is, we are now getting into the rate cut cycle, right, which will start shortly. I think you will see that now in this month in the US, the Fed move, I think that will kickstart the rate cut cycle. And that should be positive for the NBFCs, additionally, because where you will see them benefiting on the cost of fund side. But I think more important on the financial services side is to look at on the two aspects. One is on the asset side, right? So I think NBFCs, which are, because asset quality cycle has been fairly benign at this point in time. And there are some pockets of risk which are coming up, at this point in time, especially on the unsecured side, which one has to be careful. So I think NBFCs which are doing pretty, on the asset side, good underwriting, more on the secured book, right, which is the vehicle finance book or the mortgage finance book. I think the comfort would be much better. Also on the liability side, again, we've seen that there has been some of the challenges, at least from the bank lending to the NBFCs. So they're stronger and the larger NBFCs, I think, are where they will continue to get advantage in terms of the liability side, both on the cost of funds and also in terms of the supply of funds over there. So I would say if you're able to categorize NBFCs, the larger ones, the stronger ones, on the asset side, which are but secure lending, I think those should do fine in this rate cut cycle going forward. And as far as the banks have concerned, larger banks, I would say that the rate cut cycle plays out. You might see some margin pressure, which could be there, but I think they have already kind of discounted, I would say, because the underperformance in bank for the last 1 year, what we've seen is pretty much there in the price. And it's more to do with your credit growth, how that picks up. I think that will drive the outperformance in the banks.
All right, Mahesh, we'll leave it there. Thank you very much for your time. It's really a pleasure having you here and getting that perspective across. So 27 points on the Nifty, so it's very, very quiet. Actually, even off the day's high, so to speak. Well, let's focus on HDFC Life. The insurer had guided for a 15% APE growth in FY25. But with the first quarter earnings coming much stronger, my colleague Yash caught up with the company's MD and CEO, Vibha Padalkar, began by asking her if there could be an upward revision to that full year FY25 guidance from the 15% stated aim. Let's listen into some of that conversation.
As of now, given that there are some fairly significant regulatory changes on the anvil, we are holding what we said. Internally, of course, we're targeting a slightly higher number, but we had said 15%, which is on the upper end. on a full year basis, yes, it's looking pretty good in terms of first 4 months. And like you said, upwards of 30%. But let's also be honest that there was a base effect.
Correct.
And so numbers for us and for everyone else is slightly looking more elevated. On a 2-year CAGR basis, it's in the mid-20s. And that's what, so it's not very different to where we are saying 15% internally targeting a little bit higher numbers. But I think I'll have a better view once the surrender charges and that new regulations are implemented. Lots of things will undergo a change. And I think right now we just want to go with focusing on business.
So 15% is the conservative view that you would want to share at this point of time, but there is an upward or a positive bias internally that you have.
Is that the correct? So. All things being equal, on the regulatory front, 1st of October it comes into being, because then you can build a business model around it, and with very little in terms of further changes. Then with the stability of business models, yes, there should be a bit of an upward bias on it.
Okay. A little on the value of new business as well. Do you expect that side, which will of course be a function of the margins also, but do you expect it to grow in tandem with the APE growth? And you've spelled out a 4-year target also towards that.
That's right.
But would it grow every year for the next 4 years in tandem with APE growth, or could it exceed that?
It's become a way of life that at least you will double your VNB every 4 years, regardless of the ups and downs. And there will be very young sector, and there will be something or the other that we have to look at from a business model change perspective. And so nothing has changed. That's what we have been delivering in cohorts of 4 years, and we will continue to deliver. Again, top line doubling and VNB doubling.
Okay.
And that's, nothing's changed, and I want to assure you that nothing has changed. So I'm saying whether it's 4 or 4.25 years, so we are saying about 18%. Between 17 to 18% is 17.5, 18.5. You know, that kind of a range is what we have been delivering, and that's what we are internally targeting.
Now, you've said in the conference call after the first quarter that you expect ULIP share to moderate. Now, I assume that large part of that, significant part of that moderation, you are indicating that it will come because the other product categories will grow, will take a higher share, and not ULIP share will come down largely. In that situation, I want to understand, by the end of this year, with other product categories growing and taking a higher share, where do you expect the ULIP share to be over where you ended FY24? And in terms of margins, if that moves as per your understanding, the ULIP share, onto your margins, where do you see them? Where do you see yourself ending FY25 at?
I don't even have to wait till end of the year.
Okay.
We are already there. Okay, so happy to share that whatever we have said, that ULIP was elevated thanks to the markets. It's already coming close to about a third of our business. Some of our channels are sub 30%.
Okay.
Right, so it's already been achieved. Our non-par, I'm happy to share, is growing at and in the first quarter itself grown by about 41%. We've already started demonstrating that ULIPs are quite at a range that we are reasonably comfortable.
ULIPs, of course, coming in the comfortable range. By the end of the year, by the next couple of quarters, which product segment do we see actually accelerating as a share of the individual APE where we stand today?
Definitely non-par. And like I said, we've just launched this blockbuster product. So that's showing very good traction. Also, in terms of the impact in the new regime, it's something that we have been talking to our partners and seeing how it can be mitigated. So if that settles down, then that product, that segment should do reasonably well. Term is continuing to grow faster than company level growth, and so we had about 28% growth in term in the first quarter. On sum assured basis, very good numbers, about 46% on retail sum assured that we've shown growth on. So term should nicely continue to increase.
You've told me protection will grow. You've told me non-par will grow. You've told me ULIPs have come down. What does that leave you in terms of an estimation on the margins for the year?
This year, like I have articulated on our call, we're not tethered to a margin. Last year we ended 26.3%.
Correct.
I don't want to be tethered, and I'll explain why. At the same time, the caveat is we are not looking to drop margins by 400 to 500, 600 basis points, which has not been unusual in our sector.
Correct.
So I'm not talking about that margins could be free fall as long as I give the top line, like I mentioned to you. That's not what I'm saying. Now I'm saying that, like in our earlier part of today's interview, that I will grow top line, I'll double over 4 years. I will do the same thing in terms of VNB.
Correct.
Margins will be range bound, give or take 26.3, 100 basis points, 150 basis points here or there. It could be, because my focus and the ranking of priorities has been top line growth, so that we continue to be slightly higher than overall industry.
Correct.
Second is VNB growth. Margins will be an outcome of that. Only reason I'm saying that is because of unit linked. The fact that equity markets are still very, very elevated, I don't want to say no to good business, although it comes in through the door as unit linked.
So, because you had mentioned that you'd be willing to trade off some downsizing of margins against growth, just to understand that downsizing won't be plus minus 100 basis points. Is that what you're saying?
No, I'm saying it could be 100 basis points lower.
Yes,
as
exactly.
As long as I can give you the VNB growth.
What came in that strong story for protection that we were talking about, and do you expect this to continue for some time, or do you expect this to bounce back if it was just a one-off from the next quarter itself?
Yeah, so let me deconstruct it. Like you said, retail protection, very strong growth. Credit life was flattish, and hence overall number as a percentage came down.
Okay.
Credit life, there are 2 or 3 parts into it. So the MFI book is about 1/3. And we know that the pain, a lot of the MFIs went through in Q1 and are continuing to go through.
Correct.
Similarly, some of the NBFCs are also going through fair bit of pain. And we also believe in right pricing. So what is the pricing commensurate with the claims that we are seeing? That triangulation means that little bit of slowdown that we saw. On HDFC book though, we are fairly optimistic about getting a pickup in the second half of the year.
I know I've spoken to you about growth, but I want to make the month of September an exception. October is when the surrender value guidelines kick in. Simply, I will, of course, get to understand surrender value and its impact from you. But simply to put it that way, is there a strong sale from the end of your distributors before the new surrender value or the higher surrender value guidelines kick in? And in that sense, could September be a very, very strong month in terms of sales, just on the back of making the most of the last 15 days?
It could be for the sector. It won't be for us. We will not do any fire sale. The paradox is these products, why is our regulator bringing out these changes? Because the products are going to be better for the customer. What is the implication of a fire sale? That means something good is going to go away and hence buy something in a hurry. The products are going to be more customer friendly. So we will stay away from a product sale. And we've had conversations with our partners that we will not do any fire sale. Is the word coming in from Ms. Vibha Padalkar of HDFC Life. We'll take a break on that note, come back on the other side, and Arnab Banerjee, MD and CEO at Ceat, will join in to talk about the company's business outlook.
ধর্ষণ মানবতার বিরুদ্ধে এক বড় অভিশাপ। ধর্ষকের নির্মম শাস্তি প্রাপ্য। যে সমাজে মেয়েরা ভালো থাকে না, সে সমাজ কখনো ভালো থাকতে পারে না। আমি বিদ্রোহী কবি নজরুলের ভাষায় বলি, বিশ্বে যা কিছু মহান সৃষ্টি চিরকল্যাণকর, অর্ধেক তার করিয়াছে নারী, অর্ধেক তার নর। মনে রাখবেন, আমার নিজেরও মনে রাখবেন, আমি মনে করি পারিবারিক কাউকে আমি একজনকে হারিয়েছি।
Welcome back. Well, keep an eye out on HAL. We had some flashes that were at the bottom of the screen for you. The GE Aerospace to commence delivering F404 jet engines this month. So that's the piece of news that's come in there. For the time being, the stock is a little bit lower, but those flashes were down for you on the screen. In a bit, we'll just try to address that piece of news as well. Well, Ceat, that's the next management on the show. The stock is up close to 20% in 2024, but the rising domestic rubber prices, well, they've been a bit of a headwind. In fact, we have rubber prices that are up 50% in 2024, though there were signs that it's cooling off a little bit from the top. To help us out with how are the demand trends, what's the volume guidance, and what does it mean in terms of profitability, we're joined by Mr. Arnab Banerjee, the MD and CEO of Ceat. Hi, Mr. Banerjee. Good morning, and always good to speak to you. Thanks a lot for joining in. Well, let's focus on the pricing side. You had hinted that price hikes are likely to be taken up. So could you tell us in Q2 so far, what are the price increases that have been taken? Are you intending on increasing prices yet again? If yes, by how much? So you're on mute. We'd like to listen to you. So, if you could unmute yourself.
Sorry, the price increase actually took off by the end of Q4. So if you track from April till July, August, we have taken up about 3 to 4% price hike already in truck bus radial, about 3% in passenger, and somewhat less, about 1.5% in the two-wheeler category. But it's inadequate to cover the raw material price hike. Natural rubber has been trending at 30 to 40% higher than what it was in Q4 base. And synthetic rubber and imported natural rubber, everything has moved up. So the entire basket has moved up. I think we should be taking another 1 to 2% price hike. It's required. And we plan to take some of that in the month of September itself.
Year to date, in this fiscal so far, it's around 3 to 4%. And you're looking to take another 1 to 2%, right?
Absolutely, that's replacement market. OEM price hikes come with indexation lag of 1 quarter, which is coming.
Got it. All right. I want to ask you about natural rubber prices. As you said that on a per kg basis as well, I was looking at the trend. I think it went from around 180 also to more than 200 on a per kg basis. You can correct me on that number. I think it peaked out at around 210 rupees per kg. So as of now, what is it? And what is the trend going ahead from here on?
See, it went up to 240, even 250, 260 levels also for a short period of time. It's around 220. As we move from Q2 to Q3, we will enter the tapping season. Right now, also, it's a low demand quarter, usually monsoons. So we expect this rate to stabilize at around maybe 200. It's anybody's guess. The problem is that we have a rubber deficit country, and there are not enough stock available in the market, which is what is also fueling the price. So we had to resort to imports, which is covering the production requirement a little bit. But overall, I think taken together, we would expect it to stabilize by Q3, and then maybe, hopefully, in Q4, Q1, it should come down.
Sir, just want to get your sense on overall demand, because when we look at the aggregate numbers, we just got FADA numbers, retail level numbers just now, half an hour back. And the picture seems to be showing sluggishness. I'll just read out the numbers. Passenger vehicle sales, they're down 4.5% year on year. This is everybody aggregate put together. These are FADA numbers. They're down sequentially. Total retail sales are up only 2.8% year on year, down 7% month on month. And CV, of course, let's not even start. The CV cycle has been unimpressive for many months in a row. It's only the two-wheeler space that seems to be bucking the trend. Isn't there a demand concern that's building up? And are you confident of delivering this double-digit growth that you guided for earlier?
Yeah, so let me throw some light on the numbers that we just spoke about. Those were OEM sales number, right? So OEM business is about 25 to 27% of our portfolio. That is impacted by the numbers which you just shared, and they're correct. The replacement growth is somewhat better, right? And the rural growth, as I mentioned in the last conversation, it's coming back. If we look at our farm or two-wheeler sales, then the rural growth is actually higher than urban growth in replacement. This is happening after a long time. And we expect this trend to continue after the monsoons. About 55% of our sales is actually replacement sales. So that is where we expect a high single-digit growth in 2-3 wheelers, a mid-single-digit growth kind of thing in passenger. And we expect the commercial vehicle space also to have good single-digit growth in replacement. As far as OEMs are concerned, we understand that the second half for commercial vehicles will be better. It's true that it's stagnated because of elections, and Q2 also is kind of flat. Two-wheelers are doing well, but two-wheelers are catching up on the pre-COVID levels now. And finally in this year, they will catch up with the pre-COVID levels of volume. And passenger is down on a very high base of last year. That's the OEM. We also have a 20% international business. So there the order books are looking good, very robust. We are growing in very, very high double digits in international. And we have a very strong outlook in second half. So overall, we maintain the outlook of double-digit growth in this entire financial year.
Mr. Banerjee, hi, good morning. On margins, sir, did you put out a number for 25? Would there be like 100-150 basis point compression over 24?
So first quarter numbers, it's impacted. The raw material price hike and the mismatch between the finished good price hike will continue in Q2. So margins will be under pressure in Q2 as well. Then we will see if the prices moderate. Usually the margins come back in the second. It might come back a little bit up in the second half. Overall, I think it will be lower than last year.
Okay. Is there a sensitivity that we can work with? I mean, obviously, in terms of rubber prices and margins, how does it move? I mean, the relationship now, and has it become a bit more flexible as compared to the previous years? I mean, so it's not entirely dependent on how rubber prices move, or is it still as dependent?
No, rubber prices is about 30 to 40% of the portfolio of our RM basket. And if you look at the passenger segment, which is the two-wheelers and the four-wheelers, which is what is selling well in replacement and the international market. And for us in OEM also, we are looking forward to good growth in two-wheeler and four-wheeler in the second half because of the visibility of models and the brand fitment. So that is more dependent on synthetic rubber and less on natural rubber. Natural rubber is a bigger constituent of the truck bus radial segment, where we are a smaller player, relatively speaking. We have a single-digit market share. So to answer you directly, I think the degree of freedom for our portfolio vis-a-vis natural rubber is a little bit higher, but still it is significantly dependent. And we have to calibrate our price hike based on natural rubber price.
All right, Mr. Banerjee, so just to sum things up, in the first half of the year, things will be under pressure. Q1 had some marketing cost, raw material costs were higher as well. So first half of the year, margins will be subdued with the recovery in the second half of the year. And put it for the year together, it should be 100 basis points lower than last year?
Well, I can't exactly say, but
directionally, it would be that way.
It is likely to be lower than last year, yes.
Got it. All right. Also, I wanted to ask you about the exports, because I think exports is margin accretive as well. So you said I think it is around 20%, and the endeavor was to take it to around 25%. By when does that happen?
We have given ourselves 2 to 3 years time to make that happen. Actually, if you do the maths, 20 to 25% saliency increase means doubling export in 3 years. And we are gunning for that. And we are looking at LATAM, US. We've just launched the trucks radial, Europe, for 3 categories, which is agri radials, passenger radial, and truck bus radial. So we are on to doubling our turnover in about 3 years, which would lead to around 25% saliency.
Got it. There was some focus on EV tires as well, with platform wins, I think, in two-wheeler, passenger vehicles, and various other segments. Tell us, how much does it constitute of a total mix, and what's the the way ahead from there?
So right now, EV tires, for EV tires, we are looking at how we are doing in the OEMs, with the OEMs, the two-wheelers and the two-wheelers primarily. We are about 25 to 30% share in both two-wheeler and four-wheeler OEMs in EVs. The replacement market will pan out with a lag, and customer education is required, to buy the right tire for the right vehicle. So we are not really tracking that now, but we are happy with what we are achieving in the OEM segments.
All right, Mr. Banerjee, we'll leave it there. Thank you very much for your time, sir. Good luck to you and your team. Thank you. Just want to quickly pull up the market briefly. I think the Nifty almost went into the red and then it did not. So we're up 20 points now. It's of course off the highs by 30, 40 points. But look at Zomato, which we were talking about earlier. It's a 6% pop on Zomato. So that's essentially the stock of the morning. The start was lower. It picked up and there's a 14, 15 rupee sort of gain coming through on Zomato. The high, by the way, recent high was 280, 281. A bit of a frenzied move with all those calls, etc. coming through. And then it started to correct a little bit. So today it's seeing, once again, a bit of a bid. We'll take a quick commercial break here. We're going to come back. Okay, I think what we'll do is we will get you the next conversation, really. Anchit Nair is Executive Director and CEO Beauty at Nykaa, a face that you don't see very often, sort of on media. Now, Nykaa is planning to open 40 to 60 stores every year, and a lot of these stores will come from smaller towns. My colleague Shilpa Ranipeta caught up with Anchit, began by asking him about the growth trajectory for the company. Listen in to a slice of that conversation.
If you look 5 years ahead, by 2028, this market is expected to be roughly a $35 billion market. And online will contribute to roughly a third of that. And the remainder will be coming from the offline channels. So the category as a whole is growing at roughly 10 to 12% CAGR over the next 5 years. And this is the fastest growing BPC market in the world. Now, if I also add to that a layer of a per capita spend, if you look at it in India today, the average Indian spends roughly $15 on beauty and personal care. 1.5. That is the lowest per capita spend in the world. So we always see this as we're in the earliest of innings in terms of our beauty and personal care consumption in India. This is a multi-decade growth story. And I think Nykaa, who plays a large role in growing this market, we have 200 stores across 70 cities. And we have 25 million plus customers on Nykaa app who are shopping from pretty much every pin code in India. So we've brought beauty to the doorstep of these smaller towns, and we've made it a lot more accessible and convenient for them to get the best global brands at the click of a button.
Right.
And I think that is also what has led to this accelerated growth in demand, even from the tier 2, tier 3 towns.
But how much then, I mean, how big is that tier 2, tier 3 town pie for you, both from an offline perspective and online? And offline, I mean, when you go to add more stores also, how seriously are you looking at that pie?
Yeah. We see a massive opportunity in these smaller towns. I think historically we've disclosed that 60% of our business comes from tier 2 and beyond. And that number has stayed relatively constant, but because tier 1 is also growing nicely. See, as I said in the beginning of our interview, that consumption in India is low in general. Even in tier 1 towns, the consumption is much below where it could be. So all tier 1, 2 and 3 cities are growing in terms of their awareness for this category as well as their consumption for this category. In terms of physical retail, as I said, we're across 70 cities today, and the plan is to get to about 400 stores across 100 cities over the next several years. So we're halfway there, exactly halfway there. If you look at our retail expansion, we opened 100 stores in the first 7-8 years of Nykaa's journey. In the last 2 to 3 years, we've doubled that. We've opened another 100 stores. And if I look ahead, we've said that about you'll see about 40 to 60 stores over the next several years, every year. And a lot of these will come from smaller towns because now we're quite well penetrated in the larger metros.
Right. And you know, I want to talk about categories. That was another interesting thing. So in the report, it said skincare, makeup, hair care, fragrance are the fastest growing categories currently. Are these the fastest growing categories for Nykaa as well? And I just sort of want to understand the kind of growth that you've seen in these, and how are you then playing to these categories? Is fragrance one breakout opportunity that is there for you as well?
So for us, makeup and skin have always been large categories. Fragrance is a unique opportunity for us because Nykaa is seen by the consumer as a trustworthy platform. A lot of horizontal marketplaces in India are open marketplaces. And therefore, the authenticity of the product that is being sold can never be guaranteed.
Right.
Whereas us, Nykaa, as a inventory-led model, we are buying directly from the brands. And so the product which we retail on our platform is 100% authentic. And I think that is an important peg, especially when selling high ASP items like fragrances.
Right. I mean, how do you see the mix between these categories then going forward? Say, I'm talking about the sales mix.
Yeah, so I mean, makeup, I would tell you pre-pandemic, makeup was 60% plus of our overall business. Today, it's a third of our business. Skincare has been the big standout over the past 5 years.
Yeah. And, you know, given the opportunity that you've outlined in the report that's there for growth in the beauty market, how do you see the average basket size per order then now going ahead in the medium term?
The baskets of the repeat customer is growing with every subsequent purchase. And that is the beauty of a platform like ours. We're able to, through education, through content, through assortment, continue to increase the size of the basket of our repeat customers. New customers, on the other hand, are new to the platform. And in many cases, they're new to the world of beauty. So their basket size might be slightly smaller than that of a repeat customer. But that's where the Nykaa magic kicks in. That's where, once they've made their first purchase, we're able to really influence them, to drive them to buy more items with every subsequent transaction. So the average basket size of repeat customers is growing nicely, average basket size of new customers is growing nicely, but at a consolidated level, it's an output of how many new customers versus repeat customers are shopping on the platform.
Okay.
So 80% of our business comes from repeat customers. That being said, we acquire millions and millions of new customers every year. But that just goes to show you that how deeply penetrated the repeat customers are.
Right.
So it's a very healthy mix. If you look at our business having a strong repeat base of consumers and at the same time acquiring millions of new customers, it's a very healthy mix.
Right.
So yes, to answer your question, ABS is increasing for both customer segments.
Right. Fair enough. And you know, the other very interesting piece I want to talk about is prestige beauty, something that's also addressed in the report. Can you sort of tell me currently what's the landscape in India when it comes to prestige beauty brands? Nykaa has brought in a lot of brands globally. How are global brands looking at India? What's the sense that you get? And many have come to India. How has the growth of those brands been? And then going down the line, can we expect more partnerships?
The competition is heating up for prestige, and on top of that, Nykaa is bringing a lot of prestige brands, So yes, over the next decade, we see prestige beauty as growing much faster than the rest of the category. So that's where a lot of growth will come
from a sales mix,
from.
how much do prestige brands bring in for you currently? And you didn't touch upon more partnerships in the pipeline.
So, you know, again, this is something which we've disclosed in the past, so I can only refer you to the numbers we've disclosed in the past, which is roughly 15 to 20% of our business comes from prestige brands.
Okay.
By value. So it's a significant share, and it's growing faster than the platform. You know, over the past several months, we launched brands that you saw on the platform, whether it be Fenty Beauty, as I said, YSL also launched with us exclusively, YSL Makeup from L'Oreal. Urban Decay was another brand which we bought in, Sol de Janeiro. And now, you know, we don't like to obviously disclose which brands are coming, but you will see some also launching very, very soon.
All right, well, that was Nykaa, and we have Raymond Lifestyle finally making its debut on the street. There you have some visuals coming in as well. And look at that, the listing has happened northwards of 3,000. Which is already a near doubler from that issue price of 1,563. So that's Raymond Brands, which has the entire the lifestyle business, which is branded apparel. It also has the fabrics business and of course the suitings business. Well, with that, let's quickly head back to our technical experts and take stock of the market and the kind of trades we can look at. Mitesh Thakkar is with us. Mitesh, so the market seems to be, holding up, but with a very feeble gain now. So that opening pop is not really lasting. What would the trades be now?
I would agree. I think it's still the breadth which is showing more momentum. And, Ceat has just made a fresh high. That's a buy with a stop below 2950. Look for targets of 3120, 3150. So that's doing very well. And the other stock which I have is more of a sell call. NTPC, I think, is not participating in the last few days. There are signs of profit booking happening over here. So keep a stop at about 407.5. Look for targets of 395.
Okay, all right. Mitesh, thank you very much for that. We'll take a break. Manisha will be here to run us through the commodity picture. Stay tuned.
Bangladesh is roughly a $50 billion garment exporter. India is roughly 1/3 of that, And even if, let's say, 10% of the business of Bangladesh shifts towards India, we are very well placed to participate in that shift, And that can change the game completely, in terms of the trajectory of growth. Already we are very confident of a very, very strong high double-digit growth in our garmenting business. And now as we see this phenomena happening, I think it's something which can really provide a very disruptive, leap to our garmenting business. So this is another big initiative which will drive this whole EBITDA margin expansion.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations.
Welcome back. Let's shift focus to the commodity market now. We have Manisha joining in with the latest. Manisha, so what's catching your attention this morning?
Well, it is about the metal prices. Today is a steady day and you have seen mixed moves coming in from the metal prices. But if you look at a week-on-week basis, it has been a sharp decline from this sector. Well, to begin with, it has been weak China PMI numbers for manufacturing and services also. And then the street is now anticipating a smaller 25 basis point of a rate cut when we see the Fed meeting happen in the mid-September there. If you look at the prices onwards, then nickel is now trading at a 4-week lows. Well, the prices have seen a decline of almost 23% in the last 12 months itself. Not just nickel, silver prices also are trading at a 3-week lows, and we have seen prices decline onto this one as well, almost off by nearly 7% from its recent highs. The weak US data, the expectations that the solar demand could actually see not as expected growth also is weighing onto the markets. Copper is another one, and it already has seen a decline of 3% for the month of September so far. We have seen inventories continue to gain in China and on LME, and then a BHP statement downgrading the China demand by to almost 1 to 2% for this current year also has been weighing in. Also, when you look at the Chinese inventories, they have been on a surge. The Chinese exports have been on the higher side. Funds seem to be closing onto long positions that they held since the month of April, also is weighing onto the markets. And then you have platinum, that one is trading at a 4-week low. Steel prices have continued to decline. It's down by 23% on a year-to-date basis. And the zinc prices have declined as well. This is because of the supply surplus that the street has seen in the first half of this year, much higher than we saw in the previous year, also has been weighing onto the markets. Well, there has been an interesting report that came in from Goldman Sachs, which says that they have advised exiting long-term bullish cues in sense of copper there. They also have cut the price forecast that they initially put out for the year 2025 by $5,000. Remember, we did see copper prices at an all-time high in the month of May at $11,100. Currently, we are trading at below 9,000. Now, Goldman Sachs has come out with a report suggesting that the copper prices will average to $10,100 in 2025. Earlier, this was $15,000. So that's $5,000 per ton of a cut coming in from Goldman Sachs. Not just copper, Goldman Sachs also is putting a lower and a revised outlook for 2025 for aluminum to 2,500 from 2,850 there. They also are bearish in sense of nickel and iron ore going forward in 2025. The only one thing that Goldman Sachs has put out a report suggesting that they are bullish is in case of gold. They expect an all-time high of 2,700 onto that one in the next year. I will quickly put out a table showing on what the metal prices have done on a week-on-week basis. And as you can see, it all has been on the negative side, with larger cuts coming in for steel and nickel, more than 5% of a cut there, but 2 to 3% of a decline for copper, aluminum and zinc as well.
All right, Manisha, thank you very much for that. So that's commodities in focus. What's happening with Zomato? That's the stock of the day, stock of the morning. Too early to say stock of the day. But Vivek is here with what he's picking up. Vivek, morning.
Well, good morning. That's right. A very interesting note by JP Morgan today. They've gone ahead. They've maintained their overweight stance. They've raised the target price to 240 from the 208 they had earlier. They're saying that, it's spearheading a rapid retail consumer transformation via its convenience as well as selection-focused quick commerce business with ambitious rollout plans. They're also saying it's going deeper across all metros, having proven the model in the NCR region as well. And they're saying that the scale should help it drive monetization from channel margins as well as ad spendings. They're saying that Blinkit now has the license to scale up much faster than peers and the current target. So, higher target price as well as increased focus on profitability as far as the unit economics is concerned is something that's keeping the stock quite active in the session today.
Okay, all right, got it. Thank you very much for that, Vivek. Well, let's go across to Abhishek because this Goldman Sachs call on Chola seems to be working really well for the stock. Abhishek?
Well, Goldman Sachs has initiated on Cholamandalam as well as AU Small Finance Bank. With respect to Chola, they have a buy rating and a target price of 1,786 per share. They say that market share gains is seen in Cholamandalam, especially with respect to commercial retail upcycle that has picked up. So scaling up the non-vehicle business over there should help the reduce cyclicality as well as improve the visibility of earnings growth along with better return ratios. So they expect an EPS CAGR of 33% over FY24 to 27, wherein they expect the ROA of the company to improve by 24 basis points in the same period, driven by the fact that there will be robust loan growth as well as market share gain across product segments. Goldman Sachs has also initiated coverage on AU Small Finance Bank, wherein they have a buy rating and a target price of 831 per share. They say that AU Small Finance Bank is ready for the next inning. Sector leading EPS growth is seen over here. So they forecast an EPS growth of 27% with respect to CAGR over FY24 to 27 and an improving ROA profile, wherein they estimate the ROA to improve by 14 basis points over the next 3 years, which will be driven by the robust loan growth seen in commercial retail portfolio, which is around 70% of Q1 FY25 loans, despite a normalization of the credit cycle with respect to NPAs. So AU Small Finance Bank is relatively better placed in this cycle, given the fact that there is improving deposit market share, better asset quality growth, as well as, operating efficiency gain, which will come despite the merger that they have done of Fincare Small Finance Bank. Back to you.
Okay, Abhishek, thank you very much for that. So that's Cholamandalam, which has been moving up on the back of that brokerage note. Let's now go across and get details from the new listing. Raymond listed its lifestyle business just a while back, and our colleague Shilpa caught up with the Gautam Singhania, MD of Raymond, to get a sense on how the business will grow from here on.
Congratulations on a wonderful listing. Firstly, just your thoughts on this incredible milestone. Raymond now has 2 listed entities. Just quickly tell us how you're feeling with Raymond Lifestyle now officially on the stock exchanges.
No, it's a great feeling. Always wanted to create shareholder value. And today is a historic day in Raymond. So with the listing of this company, I think we've got a great runway ahead.
Right. A great runway ahead is what you've mentioned, and lifestyle business turning 100 also. Sort of give us a sense then this year, what is the big growth, driver that we can expect from Raymond Lifestyle? Will it be the wedding business? Is that going to be and how much of a share are we looking at on that front?
So the wedding season is strong. As we said, coming up for the next 6 to 9 months, we should have a very strong wedding season. So that should drive strong growth.
Right. And how are you leveraging the Bangladesh opportunity also for the garmenting business? How big do you see that being?
Well, I think the Bangladesh opportunity is great. It's a good opportunity for us to take advantage of. And it's just playing out. So let's see how it goes.
And you've guided doubling your EBITDA also in the next 4 years. What do you see really driving that?
Well, there's a whole business strategy for that.
All right. Thank you so much.
All right, so that's Raymond Lifestyle starting its journey as an individual entity on the bourses, and a big listing there with prices going over 3,000 rupees per share. We'll take a break on that note. Time for that break. After we come back, Lata will connect with Ajay Kamal, MD and CEO of Jana Small Finance Bank, to talk about the company's business outlook.
The new world order, setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
Today on our radar is Jana Small Finance Bank, a bank that is slowly making its journey from unsecured microfinance loans to secured affordable housing loans, loans against property. So it's an interesting journey. The bank in its first quarter reported 88% growth in profit, 8% net interest margin, 2% return on assets, all good. But the gross NPAs also shot up 30%, obviously due to problems in the MFI space. We know that the entire sector has its own problems. For a detailed look at this bank's journey towards secured assets, I have with me the big man himself, Ajay Kanwal, Managing Director and CEO of the bank. Ajay, thank you very much indeed for coming by. Well, let me start by asking you, let's first get this difficult part out of the way. MFI. We saw it in other banks, Credit Access, Grameen, Bandhan, everywhere the MFI sector has been in a spot of bother. For you, it is a receding part, but it is still a part. Can you tell us at what stage it is? How bad is the MFI sector? How many more quarters?
Okay. So, Lata, thank you for having me. And first, for all viewers, while the gross NPA has gone up, the actual gross NPA percentage is 2.5%. Yeah. And the net NPA...
The numbers are running as you talk.
Yeah. So I can see that there. Net NPA is 0.95. So I think this 30% jump tends to make it look a bit more bulgy. But at 2.5%, it's good for a institution which makes 8% net interest margin. So back to your question, Lata, on MFI. So I do think that a couple of things have got together. I think first is a heat wave causing a challenge amongst employees. Employees figuring out that that's not the best job. We've seen an increase in our attrition rate last quarter to this quarter, same time in the year. Second really is there is a real challenge in where some parts are over leveraged. And I think that is largely led through more discipline required at the MFI end. A combination of those two has led to slippages. I do think slippage will continue for this quarter. and after that will be stable. Okay. Because see, if you look at March and June, what has changed? The only thing we will say is heat wave. I didn't see any impact on our book on elections. So that's not the issue, right? But I do see that if you see continuously over the years, increase of average ticket size, so the lending amount is going up. You can see a very fast run in the industry. It's at 25% CAGR, and fundamentally unsecured, bottom of the period, 25% CAGR doesn't really say that it's moving at a pace it should move at. Okay. My bias would should move a bit more slowly. I mean, a good 15-20% grow steady over the years may have been a sensible answer for all of us. Okay. But I guess it goes through its cycle. It goes through the bump. You clear the bump, move on. And microfinance is never for the faint-hearted anyway.
Okay. No, of course not. But it's also, it has a bit of social purpose also to it. At least from Ramesh Ramanathan days, there was a social purpose. But Ajay, what is the percentage of your book now in MFI? How much has it traveled from a year ago to now? So, Lata, we launched the bank with 100% MFI. We're down to 38%. And out of the 38%, 8% is with the banking correspondents who tend to be very local and very good players. So yes, our journey is to make it 80% secured bank. Okay. We are at 62. Okay. Another 2-3 years of work, and then we should get there. Okay, now about the secured portfolio itself, can you tell us more about affordable housing? The government has gone ahead with its Awas Yojana. There is a third avatar coming up. Is that helping? What kind of growth do you see in the LAP, affordable housing, in all those portfolios? So, Lata, you know, when we started the bank, we looked at penetration of home loans in the upper end of microfinance customers, which you can broadly classify as middle India. Penetration was just 1%. Yes. Now, if somebody wants 5 lakh, 10 lakh, 15 lakh rupees, the most logical place they could probably go to was an NBFC. There was no any significant size even
bank.
Today, that's the only place.
Right. So we figured out that, listen, at the end of the day, we know customers. We are very good in last mile. We are fully digitized. We need to meet customers' financial needs. You know, financial inclusion doesn't mean unsecured loans. It could very well mean that I will help you, you know, build your first floor. I'll help you build, you know, cement your house, buy a new house. Yeah. So went into affordable housing. Our affordable housing ticket size is 12 lakh rupees. We are in 180 different cities across the country. We've been doing this business since 2018, so it has seen the COVID cycle also. Okay. Between our micro LAP and affordable housing book, it's a 10,000 crore book now, as we speak. And it's growing, it's the fastest growth engine we've had. Okay. Because if the company grew... Yeah, if you have to split your 2.6% GNPA, how much is in MFI? Who are the sectors contributing to it? So, roughly about 30% of our GNPA is now in secured. In secured, we have property backing it. So, about 52% is loan to value. So, we'll recover all the money. It's a timing matter. Okay. And the rest is in unsecured, out of which a large proportion is with BCs. So I think they will bear a brunt of the challenge. Okay. And about 30-odd%. But remember, our PCR is in the 80s. So very well covered on the provision on the unsecured side. So there is not really a... So even with this one more quarter, which you say could be difficult for MFIs, where does your NPA peak, you think? So here is how I would say it. You know, we have... Last year, our credit cost was 1.96. Okay. This year, we have said we will be in the 1.6, 1.7% range. Okay. And sitting here in September, I can tell you that we will be meeting those targets of 1.6, 1.7% of credit cost. Okay, so you've peaked off on credit cost. Yeah, two reasons. See, our average ticket size is lower than industry in microfinance. Our growth rate has been slowest. If you take Jana's growth from the day we started the bank, 6 years and 1 quarter, it's less than 2% CAGR. Okay. So we've always been clear in our heads that, listen, this is not a business we want to run very hard on. Okay. We entirely graduated towards secured. Okay. And like you said, social purpose, you know, we moved away from consumption to lending for businesses. Yes. We are lending for affordable housing. Yeah. We are doing two-wheelers. We are lending to MSME. So it's a whole different institution now. Okay, let me come to the cost of money. You said that your cost of funds is lower than others. What is the breakup? And now, willy-nilly, your cost of funds go up? Have they gone up for Q2? Okay, so Q2 is public. I've cut my deposit rates. My peak rate was 8.5% in quarter one. It is 8.25 from 1st of July.
Okay.
I can also see the market is, the peak fights rates have come off across banks. So I would think that cost of funds have kind of peaked out. I guess not just for us, for everybody.
Even the likes of HDFC are giving 8+ in some buckets.
Yes.
Of course, large loans, large deposits.
So here is how it's said. I think the gap, see, if you're a small finance bank launched in 2018, people don't know you. It's another level of premium they would expect.
Yes.
6 years later, listed bank profitable, then the premium obviously narrows, rightfully so. And existing customers are more
So your average cost now is 8, you would say?
8%.
For incremental.
But listen, we are a bit more, our LCR, which is the norm of how stable is your money, is above 300%. The RBI norm is 100.
Yes.
Industry average is 130. 132 if I'm correct. Now we've chosen to do a lot of non-callable and more than 1 year tenors. Because listen, what we don't want to do is look back and worry about liability. So I rather pay 20 bips extra and be in the high zone of making sure my deposits are more stable.
So will 8% be manageable, the margins?
So our NIM is 8. I do think it will remain in the same range. Purely because see, we are a retail business. And even an MSME, my ticket says are 40 lakhs. So I don't see how margin compression is not what we are seeing. What I can see is, it's there is no more lazy banking as an option.
Of course.
As long as you're working hard, you're going out meeting customers, there is so much business. And Lata, I must say the amount of business we see in the small and medium enterprises is really very good. I mean, I'm amazed the amount of orders. If you're in the defense supply chain, you are in the solar supply chain, you're in the EV supply chain, if you're in the infra supply chain. I mean, because we can't certainly finance infra, but we certainly finance all the supply chains for smaller enterprises.
Yeah.
I think there's a boom going on.
I noticed that your cost to income has actually fallen a bit to 55 from 56 and 58. What is the investment in technology? Because that will, the digitization of so many things and digital footprint should make lending more safe. So will this cost to income come down or go up actually?
So first is fully invested in digital. And luckily, and you mentioned Ramesh's name, I must give him credit. In 2014, he gave IBM the contract to set up a single, the single technology provider. That backbone hasn't changed. So 98% of savings is digital. Our affordable housing loans, same day sanction, with no compromise on process because it's end-to-end digitized now. So I think digitally we have well invested in, but we would never say never, so it keeps going on. Cost income is a function of the way we think about cost. So we are very, very frugal. We have basic disciplines, Lata, and I must tell you, coming from a foreign bank, it's been a tough one. We have no cabin policy. We have no business class travel. We don't have zonal offices.
That
we are
makes
fully
you
digitized.
Similar to TV18, I must say. We have no cabins, no business travel. A very quick question. Your peer company, AU, has applied for a universal bank license. Is that your final goal?
So we
how many years away?
We have said, Lata, that there is one condition that we have to meet, which is net NPA has to be less than 1% for 2 years in a row. That's one condition we have met last year, but we need one more year. After that, we certainly would like to go on that path.
Oh, that's interesting. It's going to become a trend. Ajay Kaval, out of time. Thank you very much. It was a pleasure. And thank you for dropping by in our studio as well.
Thank you so much.
That's the word coming from another small finance bank. Goal ultimately is to get universal bank license and good on several parameters. We wind up Bazaar on that note. Short busters coming.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The US presidential election is now just 2 months away, and Democrat nominee Kamala Harris has a lead over Donald Trump in key opinion polls. According to Real Clear Politics polling average, Kamala Harris is leading by 1.8 points over Trump. The RCP average shows Harris at 48.1 and Trump at 46.3%. In some polls, such as the ABC Ipsos poll, Reuters Ipsos, Emerson poll, Kamala Harris is leading by 4 points. Harris also has a narrow lead in key battleground states of Arizona, Nevada, Wisconsin, Michigan, Pennsylvania, North Carolina, Georgia. According to Bloomberg Morning Consult, Kamala Harris has a 1 to 3 point lead in Georgia, Michigan, Nevada, Pennsylvania, and a 9-point lead in Wisconsin. The RCP polling average suggests a 0.5 to 1.8 point lead in Wisconsin, Michigan, Pennsylvania, a tie in Nevada, and marginal leads for Trump in Arizona, North Carolina, and Georgia. While the race has clearly changed and is close, it does not guarantee a victory for Kamala Harris. And this is because most of her leads are within the margin of error. Don't forget, Donald Trump has also maintained a 47% approval rating and a chance of winning almost constantly over the past few months in polling surveys. Now, 47% was Trump's popular vote share in the 2020 election, which he lost, and 46% was his vote share in 2016 presidential election, which he won. As the race heats up, a former Donald Trump aide and former White House communications director Anthony Scaramucci has said that Trump's wife Melania hates Donald Trump and may be secretly rooting for Kamala Harris to win. However, one prominent pollster in America feels Trump has an edge right now, and that is due to the key swing state of Pennsylvania. Nate Silver said that while Harris is leading by 3.8 points in his national poll tracker and is slated to win the popular vote, his election forecast shows the former President Donald Trump has a 52.4% chance to win the Electoral College.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21.
Markets are off the opening highs on the weekly expiry day. The Nifty sustains above 25,200 while the mid-caps relatively outperform, even touching a record high at opening.
Reliance climbs after the company becomes the sole successful bidder to set up advanced chemistry cell manufacturing facilities under the battery PLI scheme. The company's board will also meet today to mull a 1:1 bonus issue.
Zomato zooms over 6.5% after brokerage firm JP Morgan issues an overweight rating for the stock and raises its price target to 340 rupees from 208 earlier, says that the company is spearheading a rapid retail consumer transformation in the country.
Linde climbs nearly 3.5% with the company set to acquire Tata Steel's industry gas supply assets at Kalinganagar Phase 2 expansion project.
And Ceat has surged on the back of positive management commentary. The management told CNBC-TV18 that they maintain their overall double-digit growth outlook for FY25. They've added that they expect margins to improve in the second half of FY25 as well.
Hello and welcome to Chartbusters. I'm Nigel, with me is Hormus, and as we speak, the markets are as flat as can be. We started off well in the green, but the Nifty has just dipped into the red.
It's the weekly expiry, and it's a big day. We'll keep it's just early days so far, the first hour, and so we'll keep an eye out on what the benchmark indices do on the weekly expiry day. Of course, it's below the 25,200 mark as of now. The Nifty Bank as well, currently trading flat, but it is the broader markets that are doing well in today's session. The small cap index is up over 1% now, while the mid cap index still above the flat line, but trading with gains of just over 0.2%. But plenty lined up in terms of corporate conversations today.
Well, that's right, Hormus. So let's get straight to that then. We have Suzlon. That's the stock on our radar. Remember, the stock has been on a tear of late. It's nearly doubled in 2024 alone. The company recently sold the corporate office building to 361 Arm for around 411 crore rupees. To discuss the sale, what it means to the company going ahead, we're joined by Mr. Himanshu Bodhi, who is the Chief Financial Officer of the company. Hi, Himanshu. Good morning. Good to see you win. And the street likes what you're doing with regard to the actions, which is shareholder friendly, and it's good for your business as well. So give us a couple of details then with regard to this. How will you use this 400 crores odd? And also, what is the annual rent outgo that you'll have to pay since now you'll be leasing it back?
Well, I think firstly, we are only implementing what we've been telling the street. Monetization of our non-core assets has been a long impending strategy, which is just coming to fruition with the monetization of our corporate headquarters. Of course, the transaction is a sale and leaseback transaction, wherein the operations of the company don't get disrupted. We continue to occupy the space on a lease basis, and whilst we also have sublease rights on the premises, our gross annual outgo will be roughly about in the vicinity of about 45 crores per annum. But of course, net of any third-party rentals that we are able to generate, that should substantially reduce over the next few months.
What will the net number be then? If gross number is 45 crores, net number will be how much?
Difficult to say, but our target would be to at least reduce that by half. Get to close to about 20 to 25 crores per annum of lease rental cost. That, of course, will happen directionally. It won't happen immediately. It might take us a few quarters to get there, but that's the target we set out for ourselves.
Himanshu, good morning. Thank you for joining in, and wanted to ask you about the business trade-off now. But what are the kind of policy pushes that you're seeing for the wind energy business, and how is demand shaping up on the ground? There are a couple of follow-ups that I have on this aspect. But first up, let's get to the demand side of things. How is the demand currently shaping up on ground when it comes to the current quarter?
So I think there is no dearth of demand. As you know, we have about a 3.8 gigawatts of order book, which we announced at the end of Q1 results. There is a very strong lineup in terms of order inflow that is coming from current and new prospective customers, which of course we'll keep reporting at the right time. So we see the significant policy push towards wind and traction on ground picking up, both in terms of demand as well as supply and project execution.
That was one of the follow-ups that I wanted to ask you, Himanshu. There was this bit that Mr. Chalasani had highlighted in the earnings call as well about land being a problem for expanding capacity going forward, for not just for Suzlon in particular, but for the entire industry per se. Are you facing any such problems for Suzlon as such? And is there a capacity expansion plan on the anvil for FY25 as well? And if so, by how much?
So I don't think, he meant that land is a problem. Land, of course, in terms of availability, there is significant land parcel available in India for execution of wind projects. Where it is the maximum time for implementation of any project goes towards land acquisition. So it is a time-consuming and tedious process, but it is the availability per se is not a problem in that sense.
No, I meant the land acquisition bit itself. Are you facing any such problems on the ground?
No, again, as I said, it's not a problem. It is just a process that one has to follow. Of course, we are also quite focused on, investing capital into development of infrastructure on the ground in readiness of our projects that we see on the anvil, both for our existing order book and the prospective order book.
All right, since we're talking about the operation, just want to get this out of the way. Your order book, you said, was 3.8 as of now?
That's right. That's what we announced. Of course, that's what we announced at the end of Q1 results. Yes.
All right. And margins you were guiding, I think, for 17 to 18%. And I think the industry you're working with around 4.5 to 5 gigawatt of execution, and you're normally 30% of that. Just to reconfirm the guidance.
So again, just to clarify, that's no guidance from our side. But the numbers that you've quoted are historical trends. That's correct.
Got it.
Other than
Now
the 4 gigawatts, which we believe the industry would do this year.
As I always tell you, Himanshu, we do the math, so we're good with that. You give us how do you see things panning out. So we get that. But Himanshu, I just want to understand a couple of more aspects. Non-core assets, what more are there, for you to sell? Can we expect something in this fiscal itself? The total quantum of non-core assets, how much can we see getting sold in this fiscal?
So I think, not really nothing of size or substance. I mean, this was the biggest non-core asset that has been identified or historically by the company, something that needs to be monetized, which we've done, successfully currently now, of course. But I don't think this financial year you'll see any other non-core asset monetization that will happen. And in any case, I don't think there is any sizable non-core asset that sits on our balance sheet that may move the needle significantly other than the one that we just done.
Just to close the loop, you have an option to buy this property back as well. Do you plan to exercise this in the future, and at what price will you have to buy it back if you choose to?
So that, of course, time will tell, Nigel. Can't really crystal gaze on that one. Of course, how the performance of the company shapes up, how the real estate market looks. We've kept that optionality with us, and of course, closer to the time, is something that the management and the board of the company will deliberate. But we've kept that optionality available with us, and we'll exercise that option based on market dynamics closer to the time.
Any potential order wins on the anvil, Himanshu, in this quarter or in the subsequent quarters as well? And part 2 of my question being, you did around 274 megawatts of volume in the first quarter. How has the number shaped up in the second quarter, and what do you expect to close the year with?
So on the first one, rest assured, you guys will be the first ones to hear about as and when we get new orders. And of course, on the quarter 2 results, I think, probably 6 to 7 weeks when we speak again after our board meeting, you will have a Q2 update or an H1 update.
But okay, I'm not asking you for a specific number, but do you see that 274 number being crossed then in the second quarter?
I know you guys are good at maths, but performance is in line with trend or expectation. So no red flags, no concerns.
No red flags, Himanshu. As you said, what you all have promised the street, you all are delivering, and we'll hold you to those numbers. And we look forward to chatting up with you, as you said, 6-7 weeks from now, if not earlier. Thanks a lot for joining in and speaking to us here on CNBC-TV18. Well, for the time being, we'll slip into a short break. On the other side, we'll be joined by the management of EPL. Remember, various brokerages like Prabhudas Leeladhar are fairly positive on the company's prospects.
Years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
Back with us here on Chartbusters, continuing with corporate conversations. Then Prabhudas Leeladhar has initiated coverage on packaging firm EPL, and they have issued a buy call on the back of strong growth prospects. We have Anand Kripalu, who is the managing director and global CEO of EPL, who is joining in to discuss the company's road ahead in greater detail. Mr. Kripalu, good morning. Thank you so much for joining in. You know, one of this, the domestic brokerage has highlighted in its note that your company is well positioned to capitalize on the increasing demand in the laminated tube business. Now, how much of your overall business is this laminated tube segment, and what is the kind of demand that you are experiencing in the current quarter so far?
Well, thank you for having me on this program today. And you're right, we are predominantly a laminated tube player. And really, the dominant part of our business is laminated tubes. That is really our main strategic focus. But what I want to say before I really comment, and I won't comment too much about this quarter per se, is that we've seen reasonably good demand around the world in the previous quarter. And all this is driven through our vision, which is to be the most sustainable packaging company in the world. And, you know, for us, this is not just a line or a statement on a chart. It's something that penetrates through the entire business, into the soul of our business. We also believe it's not just the right thing to do, but also it will be our biggest source of competitive advantage over the next decade as more and more companies go sustainable. So as far as we're concerned, we've given a guidance of double-digit growth, sustainable double-digit growth with 20+ margins, and really that's what we're focused on delivering.
Hi, Mr. Kripalu. Good morning, and good to see you in. This is Nigel on this side. Double-digit, you want to give us a further insight? Will it be low double-digit, mid double-digit, or high double-digit? If you could help us out, because the start to the year has been very, very good. You've done double digits of close to around 11%. And also your margins are in that vicinity of 18 to 19%, but you'll have a couple of levers as well. You've done some cost focus measures as well as I think in a couple of other units as well to reduce the cost. So margins in excess of 20% for this year on an average?
Well, I'm not going to commit exactly when, but if you look at our trajectory of margin improvement, I think I'd like to believe that it is sooner rather than later, right? So it should happen definitely over the next few quarters. As far as growth is concerned, we have historically been a kind of mid to high single-digit growth company. And the first guidance we gave and the focus of our strategy was to say, how can we accelerate that and get into the double-digit zone? And you're absolutely right. We've demonstrated that in the last quarter, albeit just above the double-digit mark. I don't want to push the boundaries at this stage of saying we'll be more than just double-digit. But what I can tell you is that there is a lot of healthy dissatisfaction in the company. As we get sustainable double-digit growth, we will keep raising the bar.
Okay. All right. Also, if you could give us a couple of numbers, if you had to put a number to the market share that you'll enjoy, could you tell us what is that? And I guess you're growing faster than the industry.
Oh, yes. We believe that we are growing faster than the industry. Now, we don't have precise numbers for global shares like you get through Nielsen and so on for fast-moving consumer goods. But what I can tell you is that broadly, 1 in 3 toothpaste tubes in the world is ours. Okay? So it's a 35-ish market share. If you look at the other key sectors, beauty and cosmetics, BPC, and pharmaceuticals, we are kind of just about 10% market share. So really the focus of our strategy is to selectively build market share with oral and continue to grow faster in the category, but to create discontinuities in growth in places where we have higher headroom, which is BPC as well as pharmaceuticals.
You know, Mr. Kripalu, I'll just get to the Brazilian aspect of your business in just a bit, but I wanted to ask you about the sustainable tubes business. It was around 29% of your volumes in the first quarter. Do you see that number going up as the year goes by?
For sure. And, there are a few components to sustainability. One is, of course, the product itself and the tubes. The other is people and process sustainability, which also we are very focused on. Now, this acceleration of tube conversion is, directed by our customers wanting to convert and our ability to have technology and supply capability to meet that demand. And the good news is we are one step ahead of everybody else in our readiness. And therefore, we are also seeing some wallet share gains happening as customers convert. So this 29% of the last quarter will absolutely rapidly accelerate pretty much with every quarter as this year goes. And over the next couple of years, I think we'll be predominantly a sustainable tube company.
By the end of the year, do you see that number going up to say 30, 35%, maybe even 40?
Well, I think the exit will certainly be in the 30s and maybe even the high 30s. Yeah, absolutely.
Got it. There were some supply side issues that you had briefly mentioned in the first quarter as well. Has that got ironed out?
Those have got ironed out, and there is more about capacity expansion and some of our equipment getting a little delayed on because of Red Sea and the sea freight challenges that everybody has been experiencing and the delays on that. So I think that's broadly ironed out as we have gotten into this quarter.
What about your capacity addition plans from here on? When do you lay that out? Because growth is looking good, demand is solid. You want to grab a higher part of market share. So I'm guessing that could, at some point of time, you'll be looking to increase capacity as well.
And that's something we continuously do. We typically invest capex broadly equal to our depreciation every year. And we are a reasonably capital intensive company. Over the next 18 months or so, I think we will be adding capacity for about another 1 billion tubes. Okay. And I would say half of that will come from debottlenecking and better utilization of existing assets. And the other half will probably come from new assets, largely brownfield. We don't have any other greenfield around the corner at this stage. So it will largely come from brownfield expansion.
And how much do you plan to spend on that, Mr. Kripalu, for this expansion, part one? And part two, since due to paucity of time, I'm squeezing in the Brazilian bit as well. The last time you spoke to us, you mentioned that if the utilization in Brazil goes up to 80%, you will expand capacities there. What is the current utilization there, and when do you expect to get to that 80% mark?
So we spend about 350, 380 crores on capex, and you can assume half of that will go, or a little over half of that will go into capacity expansion. Okay. As far as Brazil is concerned, I mean, we're very pleased with the way things are ramping up. I can tell you this, that we have started conversations to evaluate expansion. We haven't taken any decision yet, but I think we are beginning to approach the threshold of utilization as well as increasing demand from new customers. So I think we should be hearing more news about this in the foreseeable future.
By when is that, sir?
I can't commit a date. We're still doing the work. We're still looking for customer demand. In this industry, you don't go and just put capacity and then wait for customers to come, all right? Because it's high capex. What you try and do is to make sure that you get commitments from customers. It may not be a hard contract, but at least commitments. And then what you do is you put in manufacturing lines. And in our Brazil plant, which is modular, we have the utilities, we have the civil work. We just need to put in the lines. And that is like a 9-month kind of project.
All right, Mr. Kripalu, we'll leave it at that. Thank you so much for joining in and sharing with us your views on the road ahead for the company. That was the management there of EPL on the road ahead. Let's now also get you an exclusive. Sources are telling CNBC-TV18 that the GST committee may deliberate on reducing GST on life and health insurance in its upcoming meeting. Timsy is here with the details. Timsy.
Well, as I said, the sources indicate GST Council may deliberate upon reducing GST rates on life and health insurance. Remember, this was a demand that was put forward during the parliament also by the opposition. Even Nitin Gadkari, Road and Highway Minister, had written a letter to Finance Minister that we should look at reducing or exempting GST on these. And now what we are beginning to understand is that the council may deliberate upon these two matters. The Fitment Committee, the council-nominated Fitment Committee, has taken a detailed review of the current rate structure. Remember, the current rate is 18% for the premiums paid on both life and health insurance. On life insurance, what sources indicate that the Fitment Committee has recommended exemption only for pure term life insurance policies and reinsurance. Over here, they say if this is given, that is a complete exemption, 18% becomes zero. In that case, the revenue implication is likely to be around 213 crore rupees. As per the latest data calculations that they have done, they say that the council should be very clear that whatever discussion happens to reduce the risk should be done on the pretext that the entire rate cut is transferred to the policyholders, that is in the hand of the people and not just for the companies. So that is a caveat, and also they say that this has to be a decision purely taken by the GST Council. They feel that a detailed deliberation is further required. Also, what we are given to understand from sources on the health insurance, over here, the committee has recommended 4 options. First option is to exempt for all health insurance premiums and reinsurance of those premiums with a potential revenue implication at 3,500 crore. Second option is to exempt GST to only senior citizen premiums and premiums with a cover up to 5 lakhs without any age bracket. Over here,
all right,
is likely to be 21.
Got that. Got that, MC. Got that, MC. We got the gist of that. We'll try to get you in a better line in a short while from now. But that's the big story that's coming in with regard to prospective GST changes. Well, let's slip in a short break. Come back, continue our focus on markets and stock-specific action.
बहुत ध्यान रख के, बहुत केयर के साथ कई सारे सेफ्टी फीचर्स, पैसेंजर एमिनिटीज़, स्टाफ के लिए सुविधा, इन सब को ध्यान में रखते हुए वंदे चेयर कार, वंदे स्लीपर, वंदे मेट्रो और अमृत भारत, इस तरह की 4 ट्रेन्स का जो कन्फिग्रेशन है, इसमें मॉडर्न टेक्नोलॉजी, सेफ्टी, लोको पायलट्स के लिए स्पेशल फैसिलिटीज़, जो सर्व करने वाले स्टाफ हैं जो लिनन देते हैं या फिर जो फूड सर्व करते हैं, उन सब के लिए स्पेशल फैसिलिटीज़, ये सब ध्यान में रखते हुए नई डिज़ाइन के साथ चारों की चारों ट्रेन कन्फिग्रेशंस बने हैं। और साथ ही साथ ये मिडिल क्लास की सवारी है, इसलिए अफोर्डेबल फेयर रखा जाएगा, राजधानी के साथ इसको बेंचमार्क करके रखा जाएगा। और ये ओवरनाइट जर्नी के लिए रहेगी, यानी करीब 800 से लेके 1200 किलोमीटर की जो जर्नी है, यानी रात को 10 बजे 9 बजे के आसपास आप इसमें चढ़ें और अगले दिन सुबह कंफर्टेबली उतर जाएं। इस तरह की ये चीज़ें इसमें ध्यान रखा गया है। कई सारे सेफ्टी फीचर्स हैं, डिज़ाइन में कई चीज़ों के इनोवेशन किए गए हैं। जैसे आपने देखा होगा पुराने टाइम में चेन होती थी, उस चेन की जगह अब ये इस तरह का एक मच मोर सिक्योर मैकेनिज़्म लाया गया है, जिससे कि बर्थ की सिक्योरिंग, फास्टिंग वगैरह बेटर हो। टॉयलेट्स में भी स्पेशल ध्यान रखा गया डिज़ाइन में। और लोको कैब आपने देखी होगी, ड्राइवर्स की फैसिलिटी। मेंटेनेंस स्टाफ के लिए अलग से कैबिन बनाया गया है, जिससे कि वो लोग आराम से रेस्ट कर सकें।
Welcome back. The Nifty is down, but you need to look deeper into the broader markets because the breadth of the market is still in favor of the bulls. You have 2 stocks that are advancing for 1 stock that's declining. The Nifty is down only around 20-25 points or thereabouts, which is par for the course. Normally dips have get bought into, but today in fact is the Nifty weekly expiry. So let's see how the things do pan out. For the time being, that's it from Hormuz, myself and the entire team that put this show together. You stay with us. Trading Hour comes up next.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Good morning. Welcome to Trading Hour. It's a tepid Thursday morning. I am Reema Tendulkar. With me is Vivek Iyer. The Nifty and the Sensex have now dipped into the red. They've lost close to about 100 points from the top of the trading session. We opened up in the green. The Nifty was closer to 25,280. So from that level, it's been a fall of about 105 points. It's the CPSE index which is under pressure. In fact, the Nifty CPSE index declines for the fourth day in a row. And this week itself, it's down close to about 3.5%. And not to forget the global context. Despite, Asian markets are still in the week. So after yesterday's fall, the Nikkei is down 1.2%. You've got a nearly 0.5% cut coming in on the Hang Seng and the Korean market. So there is no support coming from the Asian markets. The good part is the broader markets are holding up. So the mid-cap index is up nearly 0.5%. The small-cap index is outperforming. And look at that advanced decline ratio. Strong. Two stocks advancing for one stock declining, so firmly skewed in favor of the advancing on the gainer side. And a sector which continues to gain day after day is Pharma. The Nifty Healthcare 1 month chart will show you day after day. It's the Pharma index, low volatility, sort of a defensive play, and that sector continues to see buying. It's been a steady, mover, Pharma.
Well, you're absolutely right. Like you mentioned, it's the broader end of the markets that are doing quite well in the session. And on the back of that, yesterday we did see one trend emerge, which is that the oil marketing companies continued to gain on the back of falling crude oil prices. And even today, if you look at, some of the oil marketing companies, have a look at IOCL, HPCL, BPCL, all of them continue to see quite a bit of buying in the trading session today. Like you mentioned, pharma stocks doing very, very well. Look at, some of the mid-cap pharma names. So look at, the API players like Loris Labs, Ipca Labs. Also have a look at Mankind Pharma, Biocon, Alchem Labs. All of these stocks doing very well in the session. Other stock, on the downside that is seeing quite a bit of selling pressure is actually Minda. Over here, you actually saw a Kotak downgrade coming in. Kotak had gone ahead and downgraded this particular name, and Minda today is under pressure, almost 3% lower. Overall on par, and we are doing relatively better compared to the rest of Asia.
Indeed, like yesterday, right? Yesterday you had near 4% cuts on many of the benchmark indices. We got away pretty much unscathed. But let's talk about individual stocks. So Zomato catches your attention. It's a good 5% up move on Zomato. Here there's a JP Morgan note.
Well, that's right. So JP Morgan today has come out with a very interesting note. They've gone ahead, they've maintained their overweight stance on the stock. They've raised the target price to 340 rupees, from 208. So it's a significant target price upgrade that the company has come up with. What is the JP Morgan saying? They're saying that the company is spearheading a rapid retail consumer transformation via its convenience and selection-focused quick commerce business with very ambitious rollout plans. They're saying it's also going ahead, going deeper across all of the metros, having proven the model still in the national capital region, where 50% of the gross value is something that the company actually gets out from. So what they're saying is that going ahead, Zomato should continue to gain from its scale, and it should also go ahead and help drive monetization from channel margins as well as ad spends. Along with that, they're saying that Blinkit also going forward will do very well. Overall, a very positive note, and Zomato today definitely one of the stocks of the day.
Indeed. Let's move on to talk about AU Small Finance Bank and Chola Invest. There is a brokerage note which is coming in from Goldman Sachs. So to talk more about it, Abhishek joins in. Abhishek.
Well, Goldman Sachs has initiated coverage on AU Small Finance Bank as well as, Chola Mandalam. So on AU Small Finance Bank, they have given a buy recommendation, target price of 831 per share. They say that it's ready for the next inning. Sector-leading EPS growth beckons this entity. So forecast EPS growth of 27% CAGR over FY24 to 27, wherein they will see an ROA improvement as per their estimate by about 14 basis points over the same period. So robust loan growth, which will be driven by commercial retail portfolio, which forms about 70% of the Q1 FY25 loans, despite a normalization in credit cycle. They say that AU Small Finance Bank is relatively better placed to peers, given the fact that there is improving deposit market share, better asset quality control, as well as operating efficiency, which has been gained out of the merger that they have done with Fincare Small Finance Bank. Coming on to Chola Investment, GS has initiated a buy recommendation and a target price of 1,786 per share on the entity. They say that market share gains amidst commercial retail upcycle is a key point that they notice in Chola, update over here. So they say that scaling up the non-vehicle financing business should help reduce the cyclicality in the earnings and improve visibility of the earnings growth, along with the fact that there will be better return ratios for the company. So they expect Chola to deliver an EPS CAGR of 33% over FY24 to 27, wherein they estimate ROA to improve by 24 basis points in the same period, which will be driven by robust loan growth as well as market share gains that they see for Chola across products. Back to you.
Thank you so much for that, Abhishek. Both Chola Fin as well as AU Small Finance Bank are doing well in the session today. Well, there's a new kid on the block. It's actually the demerged arm of Raymond. Raymond Lifestyle has a good listing on D Street debut today, listing at 3,020 rupees a share versus the issue price of 1,563 rupees a share at which it was demerged. From the sidelines, we spoke to Gautam Singhania on what could be the growth drivers for the company going forward.
So the wedding season is strong. As we said, coming up for the next 6 to 9 months, we should have a very strong wedding season. So that should drive strong growth. I think the Bangladesh opportunity is great. It's a good opportunity for us to take advantage of. And it's just playing out. So let's see how it goes.
Well, right now we need to cut across to the RBI Governor, Shaktikanta Das, who's addressing the FICCI IBA annual banking conference.
4% growth from a very feeble 4% growth in the second half of the previous year. That is 23-24 in the second half. Private consumption grew by 4%. First quarter of this year, private consumption has grown by 7.4%. This reconfirms the revival of rural demand. FMCG players, FMCG companies, if you talk to them, the data which comes out shows that clearly the rural demand is picking up and has picked up. The other important driver of growth, now apart from consumption, which accounts for 56% of the GDP, the other important driver of growth is investment, which accounts for 35% of GDP. Now, investment has grown at 7.5%, keeping with the recent momentum. So more than 90% of the GDP, that is private consumption 56% and 35% coming from investment. These are the drivers of the GDP calculation. Now more than 90% of the GDP expanded at a robust pace and materially above 7%. The headline number, however, came lower against the backdrop of muted government expenditure of both the center and the states, perhaps due to the elections. Excluding government consumption expenditure, GDP growth would have worked out, or works out to 7.4%. Now, I don't want to get too much confined into these numbers, but I think it's when we talk that first quarter GDP has slowed down to 6.7%, we have to take note of that. We should not brush it aside. But at the same time, it is essential to analyze carefully actually from where where exactly the growth has slightly moderated, or which has actually, which has had a moderating influence on the growth, and to deal with that particular segment, while of course not losing focus of the other growth drivers. Now, these are from the demand side, investment and consumption. From the supply side, while agriculture grew modestly at 2% in the first quarter, it is likely to perform better in the remaining months of the current year on the back of good progress of monsoon, good sowing of kharif crops, and good moisture conditions for the next rabi crop. Industry and services, which are also important components of the supply side factors which impact our growth. Industry and services recorded a growth of 7.4% and 7.7% respectively. Industry grew at 7.4%, services grew at 7.7% in the first quarter. Now, they underscore the continued strength in economic activity. Construction activity, which is a very important segment of any growth assessment. Construction activity remained robust, growing at 10.5%. Now, according to the Reserve Bank's latest data, bank credit to agriculture and allied activities remained robust and increased by 18.1% year-on-year. Credit to industry increased by 10.2% year-on-year in July this year, as compared to 4.6% in July 2023. Within industry, credit to MSMEs, and as you know, MSMEs are an important component of our economy. Within industry, credit to MSMEs also grew at 14.4% year-on-year. Bank credit to industries such as chemicals, chemical products, food processing, petroleum, coal products, and nuclear fuels and infrastructure has been quite strong till July 24. The enhanced credit flow to industry, along with an all-time high capacity utilization in the manufacturing sector capacity utilization is at 76%, which we gave out this number in the last MPC statement. Now, the enhanced credit flow to industry, along with an all-time high capacity utilization, points to an upturn in investment cycle as reflected in the NSO data. It is evident.
Okay, we'll keep coming back to important statements coming out from the RBI Governor right now talking about India's growth. We'll slip into a very short break. We'll come back and talk commodities. Invite Manisha Gupta on the show.
Welcome back to Trading Hour. Well, one pocket of the market that's seen a bit of a comeback today is actually the FMCG pack, and within that, Titan today, now trading near the day's highest point, doing quite well in this session. But moving on, Apurva Sheth from Samco Securities joined us for a quick technical check on the market. Good morning, Apurva. Thank you so much for joining us. How do you see markets at current level, and where do you think is the next resistance as far as the Nifty is concerned?
So markets have been pretty weak in the month of September. In the last 10 years, 6 years have been negative for the markets in September. So, and apart from that, for the last 12 days that we have seen, markets have rallied non-stop, and on each day it has given positive returns. So whenever such things have happened, 1 month, 2 month and 3 month forward returns are also negative. So we expect that the current levels of 25,200 and 25,500, these are likely to be resistances, and markets can slip lower in the month of September, or chances are that we might not see very good returns for Nifty in the month of September at least.
How low could we go in September, Apurva?
So the resistance on the top is around 25,200 levels. On the bottom, the support would be placed around 25,000 and 24,500.
Okay, but not a meaningful correction then, even if we go down to levels of 24,500. So what about individual stocks? What are you recommending?
So today we have two stocks again. One is from the pharma space. Piramal Pharma has given a very strong breakout yesterday with volumes, and it was also up by more than 10%. So it shows that the momentum is shifting in the favor of bulls, and we are likely to go from third gear to fourth gear in the Piramal Pharma. So the target for Piramal Pharma would be 250 and stop loss would be 200. And another stock is JSW Holdings. We have seen recently that all the holding companies have been moving in tandem with each other, and even JSW Holdings was moving in a range of 1,000 points between 6,500 to 7,500. So currently it looks like the stock is breaking out, and if you look at from a fundamental perspective, the book value is around 22,915, and it's trading at 0.34 times its price to book multiple. So there's a lot of room for the stock to move on the upside. So the stop loss would be 7,000 and a target would be 10,000 levels in the short to medium term.
Thank you very much for that. We will slip into a very short break on that note. On the other side, we'll talk about the discounts which are reigning on auto majors. The FADA numbers are out, and FADA has raised the alarm on the rising inventory levels. So just to get a check on what the demand outlook is ahead of the all-important festive season, we'll get a discussion going on the auto segment. Stay tuned.
Welcome back to Trading Hour. Well, now on to a CNBC TV18 exclusive. Veranda Learning Solutions, a key player in India's edtech place, is gearing up for a major expansion. We have Rachna Dandrajani with us for more details. Rachna, what are your sources indicating?
Sources have revealed that Veranda Learning, the Chennai-based edtech company, is looking to raise over 1,000 crore rupees through a preferential issue. This move is expected to fuel its growth ambitions. We've also learned from our sources that Veranda is in talks to close a substantial acquisition. The company is in discussions with a privately owned, private equity-backed unlisted edtech company. And with this acquisition, it is looking to further strengthen its position in the edtech sector. Now, if we take a step back and look at Veranda as a company, it was founded in 2018 by the Kalapati AGS group that holds nearly 55% in the company. It then listed in 2022 and has grown on the back of major acquisitions. For instance, in just May of 2023, Veranda acquired 7 companies valued at 400 crore rupees. The company specializes in offering courses that prepare students for various competitive exams across India. And just last week, it forayed into the Middle Eastern market. For FY24, it reported sales of 362 crore rupees and trained a total of 6,93,000 students during the period. CNBC-TV18 has reached out to the company for a comment on the 1,000 crore rupees preferential issue and the subsequent acquisition, but it is yet to get a response.
Thank you very much for that update. Now let's, as promised, turn our attention to the auto sector. Now, the month of August has been tepid for automakers, particularly the passenger vehicles, the four-wheelers. Two-wheelers have fared relatively better. Now, the industry body, FADA, has also raised the alarm on rising inventory levels, which, according to some estimates, stand as high as 7.8 lakh vehicles and valued at 77,800 crore rupees. Over the last 24-48 hours, car makers like Maruti Suzuki and M&M have rolled out offers and discounts to drive up sales ahead of the festive season. So to talk about all this and more, we have with us Hormuz Sorabji, editor at Autocar India, joining in. Hormuz, thank you very much for joining in. This is Rima here. First, to your mind, how would you assess, characterize what's happening on the ground right now?
I mean, to be honest, it's quite natural actually, because you have to just rewind a couple of years and see, what happened post-COVID. You had obviously a huge pent-up demand, and in fact, that long tail of demand of COVID just about has gotten mopped up. You had a major supply crunch, semiconductor issue. So clearly, it was like there was just a huge supply constraint, and demand was outstripping that. Now there's no supply constraints. I think that pent-up demand has been completely absorbed, and frankly, it's back to business as usual. And don't forget, we are operating on a very high base. Last year, we had record sales over 4.2 million. Now, to expect a lot of growth from that, I think it's not sustainable. But I think overall volumes are still pretty decent. And if you go back to 2019 before COVID, I mean, you're seeing now the natural demand in the market kind of play out. And with that, you will see some offers. And obviously, before the festive season, it's nothing new to see in this time period where all the offers are rolled out. So I think, to me, it's just back to business as usual.
Hormuz, so right now you're not really worried about the rising inventory that we just mentioned as far as the system is concerned. Which segment of the market will you be more concerned over? In fact, Maruti, one of the largest PV makers, have actually said that they expect quite a bit of a moderation in demand. So, how are you looking, especially at the PV industry currently?
I think across the board, there's going to be a moderation. I think clearly what we've seen is that the lower end of the market still...
Sorry to interrupt you, but the RBI Governor, Shaktikanta Das, is speaking again at the FICCI IBA Annual Banking Conference. We need to cut across.
As a regulator, we have done our best during successive global shocks which the Indian economy faced, along with so many other countries. And I must mention here that it was ultimately the joint effort, it was ultimately the cooperation between the Reserve Bank as a regulator and the major and the financial sector players like the banks, the NBFCs and other financial sector players. It is this active cooperation and it is this open door communication between us during these periods of successive shocks which has enabled our country to be where it is today in terms of financial stability. So the financial sector has repeatedly demonstrated its ability to overcome the challenges and the successive shocks from various global factors. The financial sector showed remarkable resilience during the COVID and also in the aftermath of the COVID-19 pandemic. Today, all key indicators of the financial sector demonstrate robust health. This resilience, combined with other forces, can act as critical driving forces for India's future. In this milieu, financial sector needs to even further deepen financial inclusion, broaden access to credit and other financial products, and support overall inclusive growth. It also needs to drive innovation in digital banking, foster sustainable finance, and build robust financial ecosystem that can withstand emerging challenges and facilitate higher trajectory of growth. With the financial sector now in a strong position, it is our collective responsibility to safeguard this stability, especially in an environment of heightened global uncertainty. Financial institutions must continuously assess and refine their business models, recognize and deal with emerging risks, and remain focused on capitalizing on every new opportunity. This brings me to the important issue of inclusive growth. But before going into inclusive growth, I think it's a point which has already been touched upon by the previous speakers and by also the presentation that was made here. I think a key focus area, and I'm not saying anything new or which is not known, but I feel it is necessary to constantly, keep reminding ourselves that these should be our priority focus areas. I think we have to be also mindful of several non-financial risks. The financial sector, the financial parameters of the financial sector today are strong and robust, but we also should be mindful of the potential, the sources of what you call non-financial risks which may affect the financial sector. And in this, I would like to include elements like cybersecurity, managing third-party risks, managing spillovers from a rapidly changing global environment, managing and adopting new technology into our operations, into our business practices, and several such initiatives. At the Reserve Bank of India, we have been embracing technology, and we are trying to keep up ourselves with regard to utilizing technology, with regard to utilizing AI in our internal operations, whether it is supervision or in other areas. UPI is a great example about which the whole country can be proud of. As you are aware, central bank digital currency, that is CBDC, e-rupee, we are one of the, we are among the very few countries which are running pilots. I would also like to mention, we have already announced in public domain, that we are setting up a cloud facility for storage of financial sector data of all financial sector players. And this is something which will be of particular benefit to the smaller entities in the financial sector, whether they are small NBFCs or they are medium-sized NBFCs or small private banks, or for that matter, the urban cooperative banks.
Okay, we'll keep coming back to that, but we were in conversation with Hormus of Autocar. Thank you very much, for waiting on patiently. You were telling us about the passenger vehicles and the kind of discounts that we've seen from the likes of Maruti.
Yeah, so I think, this is actually quite normal. One has to remember that a lot of the manufacturers took advantage of the huge supply constraint, as well as the huge kind of, boom in demand after COVID. Two things which really kind of led to, this huge supply constraint. And I think let's go back a few years again and remember that earlier it was getting an early delivery was the new discount. At that time, people were happy to pay the full price. They just wanted the car as soon as they could get it. There were waiting periods of over a year on popular models. So I think that's all changed right now. And clearly, we've come back to a very natural kind of, let's say, environment in the market. Also, what manufacturers did, a lot of them, including Mahindra, raised prices well beyond what they had launched it at, just to take advantage of really the demand that there was and the supply constraint. Now that's all kind of balancing out, and clearly you are getting the offers to keep that demand and the volumes going. I'm not too worried about the volumes, honestly. They will be flat, but again, it's a very high base. Don't forget, a lot of manufacturers have added capacity, so they do need those numbers. But I think as we go into the festive period, I think, we'll see with these offers demand picking up.
Harmal, now coming to the two-wheeler space, what we want to ask you is, number one, there's quite a lot of intense competition as far as this particular space is concerned. But some of the incumbents, actually, if you look at TVS, Hero, as well as Bajaj Auto, they've actually done very well in terms of sales, at least in the last 3 months. So number one, how are you looking at the incumbents? And also, what is your view on Eicher Motors? They seem to be slipping in terms of market share. And are all of them going to cede market share to Ola?
Well, I think, clearly, I think the two-wheeler market is coming back. It shows, that there's kind of a rebound at the lower end of the pyramid. And I think I've always believed that, everything that the legacy players know this business better than, the new players, because clearly it's a very oily business. It's a very nuanced business. It's very, very granular. And, I think it's not easy to kind of break into this. Of course, Ola has disrupted the market. But frankly, I think, there's a lot of smoke and mirrors around what they're doing. I think, for me, right now, just one product, and that to a product which has really been kind of, let's say, rebadged or imported. They're buying market share right now. We've seen that profitability is nowhere in sight. So frankly, I don't see them as being a long-term threat at all. And I think that's where the legacy players will fight back. I think on the EV space, clearly, they are in a wait and watch mode. They could definitely pump out more EVs, be it Bajaj or TVS. But clearly, there's no margin on that. And really, the margin comes from their ICE products. So I think, looking at the two-wheeler space, I am just bullish on the legacy players, kind of really ruling the roost there for a while.
Okay, well put,
Talking on Eicher, I think Eicher really, Enfield, I think you will see new products coming out from, RE. And clearly, I think, from in that sense, obviously there will be slippage, but, it's very cyclical as well. I think there's a whole raft of products coming out, and I'm sure, it's such a strong brand. In fact, it's a brand that goes beyond the product. I think, they have a bounce back at some point.
Okay, so Ola's buying market share and not a threat to the incumbent players. So I've got 2 quick questions and we've got 1.5 minutes. I'm going to squeeze them in. One, what about the discounts on the luxury cars like BMW, Mercedes, etc.? Because those prices have ballooned, post-COVID. And secondly, what would be the top 2 or 3 exciting launches one should watch over the next 3-4 months?
Well, I think, looking at I think looking at the luxury end, I mean, now, a crore seems to be quite normal for a luxury car. In fact, the growth has been in that segment, what Mercedes calls the top end luxury vehicles, which is a crore plus. Very, very small base, but a lot of growth over there. Frankly, I don't see, I think that's one market which has been resilient because if people have money, they'll buy it. They're not too bothered about, whether it's what discounts they get over there. But I think lower down in the, let's say the mainstream luxury market, of course, discounts are rampant again. And again, prices have actually just gone through the roof. I think the other thing what we've not realized is that for whatever reason, there could be regulation, emission, raw material, prices have just gone up and up and up. So I think we are just seeing a natural correction of what the values of these products, even at the luxury end, should be. But I think, it's more in the mass market that we are going to see a little bit more correction, as far as pricing goes.
And the launches?
Yeah, launches,
2 or 3
I think.
Exciting ones, yeah.
I think the big one for me is going to be the Thar Rocks, which is, I think, really going to knock it out of the park. Looking at the kind of response that has been at the dealerships, I would even say I wouldn't be surprised if it comes. They get close to 2 lakh bookings. It's just a guess because they're really it struck a chord, and it's just this combination of cars becoming a little bit more emotive, especially after COVID. People have fallen in love with cars again, and I think this is a reflection of that. I think what will also be interesting is the new Alcazar, which Hyundai are launching. It's a facelift as well, but again, for Hyundai, it's very important that they kind of get success in now whatever models that they have looking at the IPO. I think the Tata Curve EV is very interesting because the EV, the Curve EV, looking at its pricing, the response to that is going to be very critical because that will determine the response to EVs in general. So if the Curve EV doesn't fly, that's not good for the overall EV market because it's super well priced, it's very well equipped, got a lot of range, and Tata has thrown everything it possibly can into the Curve EV. So yeah, we've got to just see how that does. So I think these are really the three big launches this year.
Right. Thank you so much, Hormas, for joining us and giving us a lowdown as what exactly is happening as far as the auto space is concerned. Let's now take a short break. Up next, we'll discuss market fundamentals with Jyotivardhan Jayapuria of Valentis Advisors.
Thousands rallying outside Israel's defense ministry as the largest protest since the start of the war surge on. Public fury mounting over Hamas's murder of these 6 young hostages and the Israeli government's failure to bring them back alive.
Our government are heartless people.
These murderers executed 6 of our hostages. They shot them in the back of the head. And now after this, we're asked to show seriousness? We're asked to make concessions?
Netanyahu refusing to withdraw Israeli troops from the Egypt-Gaza border, saying a retreat would allow Hamas to rearm. But it's a key stumbling block in negotiations, Egypt accusing him of obstructing a ceasefire deal. The U.S. says it's against the presence of Israeli troops in Gaza long-term.
We've made clear that we are opposed to the reoccupation of Gaza.
Alex Lobanov, a father of 2, was among the hostages killed. A source tells NBC News his widow refused to meet Netanyahu during a condolence visit. The Israeli leader has not met the family of American hostage Hirsch Goldberg Poland, who was buried in Jerusalem.
Finally, my sweet boy, finally, you're free!
Israel carrying out more strikes in Gaza, but the UN says it's pushing on with a polio vaccination campaign, getting doses to more than 160,000 children over 2 days, even as war rages around them.
Investing.
Welcome back to Trading Hour. As promised, we have Jyotivardhan Jayapuria from Valentis Advisors to discuss market fundamentals and its top sectoral picks. Thank you so much for joining us, Jyotivardhan. First up, how are you? What are you making of the market currently? We are at elevated valuations, but there doesn't seem to be anything that is stopping this particular rally. What worries you at this point of time?
Yeah, so like you rightly said, the valuations are not cheap.
And historically, from these sort of valuation, returns over the next 1 year have not been very high. It's not like they've been negative, but they're probably single digit sort of returns which are there. So at this time, it's, always in the market, it is what is the margin for error. The margin for error is quite low. The margin for safety is low at the moment. But, things are still looking decent. The economy is doing fairly well. I think more important is that the macro fundamentals are good. Like if we think of the fiscal deficit, we think of the current account deficit, all those things are under check. So that is, one of the biggest positives in the market today.
Pharma is a space that you've been bullish on. Is this a recent addition that you've started accumulating more and more of pharma? And in pharma, what is it that you like?
No, so Reema, pharma is something which we've been adding for the last, I would say, 14, 15 months. And the change we made was earlier we were quite positive on the domestic pharma, but like 15 months ago, we turned positive on the US generics. And that's why we made a lot of the additions. All the companies get to US generics. If you see for the last 5-6 years, the US generic prices were continuously falling. And so what we were having a situation is that part of the business was bleeding for everybody. So our call was that the US generics have bottomed out. Prices will fall at a very slow pace or they'll probably remain flat. And the demand continues to be good. So we were like, buying more and more companies which were geared to the US generic business. And that's why we've done a lot of additions. The other thing which we've held for a long time and we continue to hold is the whole CDMO space. So that I think is a very interesting space, will do very well. We own a couple of small companies in the CDMO space, which I think will have multiple years of growth. So, if you just think of next 5 years, 7 years, can they grow earnings at 25% sort of range? Yeah, it's possible. And that is the other space we have in pharma.
Jyotivardhan, you spoke about the pharma pack and especially within that you spoke about the CDMO space. How much of a trigger do you think is, the likely imposition of the US Biosecure Act going to be as far as the entire value chain is concerned? And when you speak about, generic pricing, halting, where do you expect it to stabilize?
I would say generic prices probably are not going to go up much, but they're probably going to be flattish around these levels. But what you've seen is a very continuous price drop over there for the last 5-6 years. So, a lot of the price drop happened because there was a consolidation of the chain in the US. And that led to, squeezing of the prices because the buyers became bigger. But I think that is more or less done. And now we'll probably see a bit of, stabilization of prices because demand is fairly robust. Now, the biospecular will be good for India. So it will be good for the CDMO players and it will help, move things to India from China. So on the margin, again, that's one more addition to the positive for the pharma space.
So would you still buy pharma right now, the US generics or any of the CDMO players? Because you just said, the generic prices have stabilized after the recovery. So is there still upside?
So there's still upside, Reema. There will not be as big like, when we bought it, like it's seen huge upside after that. But from here, we'll get a steady 15% sort of returns in them, probably even 20% sort of returns. The CDMO space is something which I think is good. Like I said, it's something where, very secularly you could see like 20 to 25% sort of earning growth in many of these companies. So they'll be much bigger than where they are today in the next 5 years. It is a volatile sector. It doesn't lend itself to like quarterly numbers because there are some quarters where it can be very awful. But what you have to do is just stay the course. And for the next like 3 years, 5 years, we know that these companies will be much bigger than what they are today.
Jyotivardhan, I just want to squeeze in one last question. What is your view currently on the financials as well as capital goods, especially capital goods has done very well, if you're looking at it from the last 3-year point of view?
So, we were very early into capital goods because we had this whole theme that we like investment theme rather than consumption theme. On the margin, we actually selling some of our capital good names, largely because of the valuation. So the stocks have done very, very well. And we have this whole, fee use philosophy. So they're no longer undervalued. They're no longer underperforming. And now, they're reasonably owned also. So on the margin, we are selling. We're not sold everything because we still think there's a lot of earnings growth going over there, which we do. We are actually putting some incremental money in the banking space because that space is totally ignored just now. It's like, done very badly. And things there are, it's one of the few spaces which are where there's value. Most of the stocks now are trading at very high valuations and you have to bank on growth coming to generate stock price returns. But bank is one space where there's actual value and, there's 2-3 quarters of pain in terms of the NIMs. But I think given the valuations we can make decent money in the bank names from this level.
Jyoti, short conversation, but a good one. Thank you very much for joining in. We need to slip into a very short break. On the other side, we'll focus on Nykaa and we'll invite Karan Taurani of Elara Capital. Stay tuned.
The US presidential election is now just 2 months away, and Democrat nominee Kamala Harris has a lead over Donald Trump in key opinion polls. According to Real Clear Politics polling average, Kamala Harris...
Welcome back. So yesterday, Nykaa held its beauty summit. It's a highly anticipated event, and there were lots of interesting takeaways. They spoke about how the beauty segment is one of the fastest growing segments. The market size is anticipated to hit $34 billion over the next couple of years. Men's is a growing category. So to talk more about it and what are the implications for Nykaa, Karan Taurani of Elara Capital is now with us. Karan, lots of interesting takeaways. L'Oreal's India MD also said that how the next 2 decades are the most exciting time for India's beauty industry. What would your key takeaways be from what we heard yesterday?
Hi, Rima. Morning. So I think it's a clear indication that beauty market is expected to grow at a fast pace. And I think within that, I think online will grow at much ahead of the overall growth rates. Overall online BPC growth rates could be about 20 to 25%. Nykaa being a market leader will see a very big advantage out of this. I think the threat of quick commerce is now kind of overdone because companies like Nykaa have got a very strong presence in the non-metro markets where quick commerce is not present for now. I think even in terms of competitive intensity, we haven't seen other platforms really scale up in the BPC segment, which is why Nykaa will probably have the clout here. I think in terms of categories, hair care, skincare are the 2 good categories. Large, can potentially become very big with very hefty growth rates. A lot of product innovation is happening in these categories as well. So net, I think it looks like a very strong growth market. with lower competitive intensity, and players like Nykaa will continue to have a clout because of the premiumization and the trustworthiness factor.
Karan, you are expecting Nykaa to see a steady state revenue growth in the range of 30 to 32%. Now, do you think that can continue? What will aid that particular revenue growth? And do you see margins sustaining or maybe even improving from the current levels, given the fact that you mentioned competitive intensity is reducing?
So I think in terms of growth, the core BPC segment growth rates remain to be about 22 to 24% as per our assessment. They have kind of merged the B2B and the MAN segment. That's why the growth rates right now for the BPC segment are more towards 30% plus. But there are no changes in terms of core BPC growth rate. I think that will continue more led by customer additions and more led by frequency. I think AOV is largely capped as far as Nykaa BPC is concerned. So that's the first thing. Second thing, on the margin front, I think it's very clear that there are multiple levers for margin expansion as well. One is, the discounts have now kind of come off. We saw this entire threat from quick commerce over the last 4 to 5 quarters because of this discounting has increased on Nykaa. So I think that's largely done with. It's kind of plateaued. I don't see any kind of lower take rates from here on. So zero margin pressure basis that. Other two levers are basically on ad revenue. So we have seen a comeback in terms of ad revenue in Q1. And hopefully, if this potential continues, we'll see better margins basis that as well. And there is also lower losses from the fashion and the other business, which could actually lead to a better margin for the overall BPC business. So the point is that I think we are assuming a margin expansion of anywhere between 200 to 250 bips over the next 2 to 3 years. And if that plays out, you could see, earnings grow or rather EBITDA CAGR of anywhere close to 35 to 40%.
What about Nykaa Mans? Where does it stand at currently in terms of a size, and what is the potential?
So Nykaa Man, the numbers are exactly not known, but they club this entire B2B and Nykaa Man segment, which is potentially about very small in terms of size. It is about sub 10% as on today. The core business remains to be BPC, but clearly expansion into multiple categories, focusing on private labels, going T2C, focusing on the hair care, skincare, fragrance kind of categories, going global, going omni-channel. These are all potential growth drivers for Nykaa. And I think if they're able to kind of execute on margin, you will see upgrades as far as numbers are concerned.
You spoke about 200 to 250 basis points of margin expansion from here on, and there are multiple levers to that. So this Nykaa Man and B2B are not expected to be big growth drivers, and also elaborate a little bit more on Nykaa Fashion and the kind of losses they currently have and how it's expected to be. You spoke about it coming down.
So firstly, Nykaa Man and B2B are expected to be big growth drivers, but they're coming at a small base. In terms of overall contribution, they are sub 10%, so there's not a big impact basis their strong growth. But yes, growth potential in those segments are about 60 to 70% or even more than that on a CAGR basis. So that's the first thing. And losses have to converge in these segments. So the B2B segment is currently making losses, and that is negatively impacting the BPC business EBITDA. So if the losses converge, you could see margin expansion beyond 200 bips, as per our assessment. As far as fashion is concerned, the growth therein has been very volatile. We have seen times where the business has grown 35-40%. We've seen times where the business has grown 20-25%. So I think a sustainable growth with 25-30% kind of a number with increase in market share and with reduction in losses is a key monitorable here. Because if you look at the fashion business, the overall contribution to valuation is more than about 7 to 10%. Because clearly the margins are, they've not made margins. They've always made losses in the business, but they have guided for a break-even point over the next 2 years. And if that were to happen, then you could see rating in the fashion business as well. So maybe this 10% contribution moves up to 15 to 18%, and that could also drive further upside. So there are incremental triggers which can play out, but that all depends in terms of execution.
Thank you so much, Karan. Short but very interesting insight as far as Nykaa is concerned. Time now for a quick break. We'll get you more on the market on the other side. 1.8 points over Trump. The RCP average shows Harris at 48.1 and Trump at 46.3%. In some polls, such as the ABC Ipsos poll, Reuters Ipsos, Emerson poll, Kamala Harris is leading by 4 points. Harris also has a narrow lead in key battleground states of Arizona, Nevada, Wisconsin, Michigan, Pennsylvania, North Carolina, Georgia. According to Bloomberg Morning Consult, Kamala Harris has a 1 to 3 point lead in Georgia, Michigan, Nevada, Pennsylvania, and a 9-point lead in Wisconsin. The RCP polling average suggests a 0.5 to 1.8 point lead in Wisconsin,
Michigan, Pennsylvania, a tie in Nevada, and marginal leads for Trump in Arizona, North Carolina, and Georgia. While the race has clearly changed and is close, it does not guarantee a victory for Kamala Harris. And this is because most of her leads are within the margin of error. Don't forget, Donald Trump has also maintained a 47% approval rating and a chance of winning almost constantly over the past few months in polling surveys. Now, 47% was Trump's popular vote share in the 2020 election, which he lost, and 46% was his vote share in 2016 presidential election, which he won. As the race heats up, a former Donald Trump aide and former White House communications director Anthony Scaramucci has said that Trump's wife Melania hates Donald Trump and may be secretly rooting for Kamala Harris to win. However, one prominent pollster in America feels Trump has an edge right now, and that is due to the key swing state of Pennsylvania. Nate Silver said that while Harris is leading by 3.8 points in his national poll tracker and is slated to win the popular vote, his election forecast shows the former President Donald Trump has a 52.4% chance to win the Electoral College.
बहुत ध्यान रख के, बहुत केयर के साथ कई सारे सेफ्टी फीचर्स, पैसेंजर एमिनिटीज़, स्टाफ के लिए सुविधा, इन सब को ध्यान में रखते हुए वंदे चेयर कार, वंदे स्लीपर, वंदे मेट्रो और अमृत भारत, इस तरह की 4 ट्रेन्स का जो कन्फिग्रेशन है, इसमें मॉडर्न टेक्नोलॉजी, सेफ्टी, लोको पायलट्स के लिए स्पेशल फैसिलिटीज़ जो सर्व करने
Well, welcome back to Trading Hour. As you can see on the top of your screen, it's the broader end of the markets that are doing much better compared to the benchmark indices. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime report is up next.
देते हैं या फिर जो फूड सर्व करते हैं, उन सब के लिए स्पेशल फैसिलिटीज़, ये सब ध्यान में रखते हुए नई डिज़ाइन के साथ चारों की चारों ट्रेन कन्फिग्रेशंस बने हैं। और साथ ही साथ ये मिडिल क्लास की सवारी है, इसलिए अफोर्डेबल फेयर रखा जाएगा, राजधानी के साथ इसको बेंचमार्क करके रखा जाएगा। और ये ओवरनाइट जर्नी के लिए रहेगी, यानी करीब 800 से लेके 1200 किलोमीटर की जो जर्नी है, यानी रात को 10 बजे 9 बजे के आसपास आप इसमें चढ़ें और अगले दिन सुबह कंफर्टेबली उतर जाएं। इस तरह की ये चीज़ें इसमें ध्यान रखा गया है। कई सारे सेफ्टी फीचर्स हैं, डिज़ाइन में कई चीज़ों के इनोवेशन किए गए हैं। जैसे आपने देखा होगा पुराने टाइम में चेन होती थी, उस चेन की जगह अब ये इस तरह का एक मच मोर सिक्योर मैकेनिज़्म लाया गया है, जिससे कि बर्थ की सिक्योरिंग, फास्टिंग वगैरह बेटर हो। टॉयलेट्स में भी स्पेशल ध्यान रखा गया डिज़ाइन में। और लोको कैब आपने देखी होगी, ड्राइवर्स की फैसिलिटी। मेंटेनेंस स्टाफ के लिए अलग से कैबिन बनाया गया है, जिससे कि वो लोग आराम से रेस्ट कर सकें।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting
Markets failed to hold on to the opening gains as realty and IT stocks exert pressure. Mid-cap significantly outperform healthcare and metals gain.
Reliance Industries has been granted approval to set up advanced chemistry battery cell facility under the PLI scheme, with scheme benefits of 3,600 crore rupees. Other bidders under the scheme have been waitlisted.
A day after SEBI responded to claims of a toxic work environment, the regulators saying employees seeking pay hikes had been misguided by external elements, a group of employees are staging a protest on the regulator's premises, refuting these claims.
RBI Governor Shaktikanta Das has stated that it is a headline inflation which includes 46% food weight. That matters as it is what people understand. He adds that the RBI must successfully navigate the last mile of disinflation to preserve credibility of inflation targeting framework.
Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra and with me is Nigel D'Souza. Well, it is a day where the markets are just about consolidating at this point in time, at least the frontline indices. We have the mid-caps which are outperforming, but the internals look good. So we have the advanced decline ratio, which is positive at this point in time, more stocks advancing than declining. 281 stocks at 52-week highs, around only 20 stocks which are at 52-week lows. Separately, 258 stocks which are in upper circuit at this point in time. So a lot going on in terms of the internals, which look like quite steady at this point. Hi, Nigel.
Hi, Ekta. Well, you have Dilip Bilkon. I think that stock should be on your radar. There was an order win that was flashed for you on the screen. It was more than 1,000 crores if I saw that correctly. The stock has moved to the high point of the day, so DBL should come up for you. And you had Premier Energies, the stock that listed just a couple of sessions ago. It listed at around 900 rupees, went down to around 800 rupees, but from there it's seen a big bounce. So massive volumes on that counter. Premier Energy should come up for you on the screen. And JM Financial is another name that's done pretty well in today's trading session, Ekta.
Yes, absolutely. Well, it's turning out to be quite a positive session for the mid-caps. But nonetheless, let's talk about the first company on our radar. Ola recently announced the company's foray into the electric motorcycle segment with the launch of the Roadster series of motorcycles. But do note the company's August 2024 retail sales slipped around 34% sequentially. Its market share has also fallen to the lowest level that we've seen since September of 2023. To discuss this, we have with us the man of the moment, really, in the past couple of weeks, Bhavish Aggarwal, who's the chairman and the MD of Ola Electric Mobility. And we have Prashant in the studio to take us through this conversation as well.
And Ekta, thanks very much for that. Bhavish, hi, good afternoon. Thanks very much for joining us. And I think we are speaking for the first time after your listing, so congratulations. We spoke, I think, 2 days before you made it to the public markets, and we discussed the road ahead, etc. I think you would agree, or maybe you will not, because you were expecting a good listing. The price performance was astounding. Of course, it's come off. I mean, it's the nature of public markets. A little bit of up and then maybe a little bit of sideways price action. So we are somewhere there. So, but stock price aside, Bhavish, if we can start by talking about what's happening here and now, right? And I want to start with the sales numbers for the month of August, which look a little subdued because I have the the numbers that you that we have with us. So your sales for the month of August are down some 34%, Bhavish. It's a steep fall month on month. Year on year, it's a 45% increase, but month on month, it's a 34% decline. I'm looking at the overall industry as well. That has fallen 18% month on month. But your sales have gone down 34%. Could you tell us what has happened in August?
Prashant, firstly, wonderful to be here after our IPO. First time in this context. Excited to be on your show. And like you said, stock price has done well. And you remember when we were speaking, I had said that in my assessment, we've left some money on the table for investors. And I'm really glad that people have liked the fact that they bought in and then they have made money with us. And like I said, even then, this is just the beginning of India's EV story. And Ola Electric is obviously the leader in that story. Now, coming to numbers, Prashant. So August in general is a bit of a seasonal down month in the industry. And you see that across EVs, across ICE vehicles and two-wheelers. It's a bit of a dip month after June, July. And every OEM industry has also dipped a little in August, as is expected. Other OEMs have also dipped. We've also dipped a little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We are focused on, there are 2 or 3 strategies that I want to share with your viewers that we are absolutely sharply focused on.
Bhavish, we'll touch upon all of this.
Yeah.
But let me just focus on the market share, share and the numbers in August. You said August is seasonal, fair enough. But your market share now has come off, right? Actually, I said this when we spoke. I mean, you're the big leader. It's yours to lose in that sense or to build on. But you're the most, so you got the most to lose in that sense. But you're off from 50-odd% to 31. I think is it 31% now? As at the end of August, right?
Yeah.
I'm looking at the others, right? Bajaj, for example, I mean, share has gone up to 18%. Last year it was 11%. TVS has come back to 19%, where it was in FY24, but it's come up from 15%. So these are sharp shifts which are happening within the industry. So I just wanted to get a sense from you and for your investors and viewers as well. Where should we see this number? At 31% now, where should we see this number?
See, we are focused on building the next wave of the EV journey. The others, the incumbents, like you said, Bajaj, TVS, everybody, they are finally getting into the game. And it's good to see that unko thodi, कहते हैं ना हिंदी में देर आए दुरुस्त आए. So if you remember, all of these people before our IPO were saying, "Arey, electric, we will see where it goes, and this is not a real business, etc." Even now, they are only half-heartedly doing it. We saw reports about how all of these people lose so much money in their electric business. Whereas we, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. So our focus is on profitable growth. You will see us continue to bring new products, expand distribution, and continue to focus on vertical integration to bring better technology and control cost. Now, over the last 4 years that this company has been in existence, we've actually invested close to $1 billion in our technology and manufacturing, which is focused on EVs. That is not what our incumbent competition has done. तो अभी वो फाइनली मैदान में आए, फाइनली उनको थोड़ा सा चेस्ट थम्पिंग चाहिए तो थोड़ा डिस्काउंट पे अपने प्रोडक्ट्स बेच रहे हैं. But if you see, they will actually be burning a big hole in their balance sheet by building their EV business. And the challenge for incumbents, Prashant, at a macro level is वो खेलेंगे तो पछताएंगे, नहीं खेलेंगे तो पछताएंगे. खेलेंगे तो पैसा लूज करेंगे और अपने खुद का ICE business cannibalize करेंगे. You can see all of these companies, the incumbents who have started playing in electric are losing ICE market share to their ICE competitors. And नहीं खेलेंगे तो anyways they will lose out on the future, which is electric. So so the game has just begun.
Yeah. No, and you put it well. I'm sure they're also listening. But you would also agree, right? I mean, these are large, well-funded, very profitable companies. So in that sense, I mean,
thanks to our IPO, Prashant, we have a very strong.
You are as well.
And not just that, we have a very strong balance sheet, which is focused only on EVs. I saw some commentary by some of our peer companies that their clean energy business is 20% or whatever. There is only one true clean energy, which is EVs. There is nothing which is clean energy.
Right. So I have two questions. You said, well, we're also well funded. So are we looking at a bit of discount-led sort of price wars, basically, in the space for market share. Are we headed towards that? Are we already there? That is one. And second, EV adoption also, because a government subsidy was a pretty critical help for the industry, which got penetration up from 0.5%, less than 1% to where it was. But last 2 years, it stagnated. And now this extension also is expiring. So how crucial is that to see, the next leg of fame? So a two-part question. One, price wars, and the second is, of course, government support. Go on.
Prashant, on the government support, I'll start with that first. Globally, we've seen governments normally support the EV transition for a few years. It's about 4, 5, 6 years, depending on which industry or which country. And that's where the Indian government has also guided. The FAME subsidy has anyways come down in the last 2 years from 60,000 rupees per product to 10,000 rupees per product. The government has recently publicly said that there's a new FAME coming, which will continue support, maybe with a slightly more different criteria on localization, which, by the way, we meet very, very nicely. So, in our view, the government support is at the right levels, and it will taper off over the next 2-3 years. The beauty is the industry has actually expanded significantly despite this FAME subsidy reducing from 60,000 to 10,000, right? Just 3 years ago, the industry was less than 1% electric. Last month, the industry was 7.5% electric. And this is only when only scooters are there in the market. Our motorbikes are still to come, and the motorbike electrification is still to begin. So the electric penetration is continuing to grow. If you look at within the categories of action like scooters, etc., penetration is close to 20%. So I actually feel there will be a continuing inflection on EV penetration as more and more consumers become comfortable with the electric and as product options expand. So that's one. On the price that you mentioned, our focus has always been on investing into technology and vertically integrated manufacturing to reduce our cost structure. And that is why even already we are at a EBITDA very close to EBITDA break-even, whereas others, including these traditional old hands, so to say, burn a lot of money in their EV business.
All right. Bhavish, that point is taken because, like Prashant mentioned, these are companies which have well-established, well-run businesses for multiple years. But I just wanted to narrow down on one specific thing, which is basically a motorcycle launch, the Roadster. 3 variations of that. The pricing is extremely competitive. You've got, this 999 rupee booking scheme also, which was launched. Give us a sense, give us numbers specifically in terms of the kind of bookings we've seen, the kind of launch numbers that we've seen for maybe one or all 3 of these variants.
So I won't share the booking numbers today. In due course, we will share the booking numbers also with you. But there is a huge amount of excitement on our motorbikes. You mentioned the Roadster. There are 3 variants of that. 3 models, actually, and each model has multiple battery pack variants. All of these in the next few months will be live in the market for consumers to use and buy. Our focus is to expand the EV industry away from only scooters into motorbikes and a few other categories also. We have made some announcements in the past of a few other categories where we will get into electrification. The next phase of electrification journey is going to be led by product expansion. Our motorbikes have had a very strong reception. We've had a lot of people reserve it already. And soon you will start seeing it getting into consumers' hands.
All right. Hi, Bhavish. Good day. And this is Nigel on this side. First of all, congratulations on a solid listing. And I'll tell you what, I'm a bike enthusiast. And if God wills, I would like to ride a motorbike to work, till the end of my career. So I could be one of those target audience, who's going to be moving from the current vehicles to the EV vehicle. So I'm looking at the products very, very closely. And since you've got into motorcycles as well, it's going to be quite interesting. Now, going by what you said, I wanted to understand 2 aspects from you. You're almost at EBITDA break-even is what you said. How much are you accounting for in terms of PLI benefits as a percentage of your selling price? That's point number 1. And there's going to be a toss-up now between market share or margins. I don't know how you're going to manage that. There's a seasonal factor. That's why your market share has come down. But where do you see it stabilizing at? So PLI and market share. Please go ahead.
On market share, Nigel, we are very focused on penetration increase by expanding two things, by expanding our product portfolio and by expanding distribution. And we recently made announcements about how we will be expanding distribution to beyond our company-owned stores also through the ONDC platform. And in the near future, you'll see us have a few hundred non-company-owned stores, as agents or whatever you call them, across the country, which will take our penetration through distribution even deeper. And then product expansion through motorbikes, through other form factors. All of this is on the near-term radar. So market share is a function of all of these things. So today our market share is, let's say in August, 32% odd.
Yes.
From here it will go as our distribution scales up and as our product expansion scales up. We are, like I said earlier, focused on growing our volumes, growing penetration, growing market share with balancing on profitability. So sustainable growth is our focus. On PLI, we account for mid-single digits in terms of overall revenue as PLI. And in more details, we will share in one of our quarterly financial updates to all of you. But that's roughly where we account for PLI.
Mid-single digits is what you're saying, right? So around 5% odd. And are you receiving those PLI payments? Have they started coming in?
No, the first payments will start coming in maybe this quarter or next quarter.
Okay, got it. And just to push you a little bit on that market share point that you were making, it's at around 32%, but going by everything that you said, increasing your distribution, your reach as well, it should stabilize what, in high 30s? Would you be satisfied with that?
See, an entrepreneur is never satisfied, Nigel. Mera goal to 100%.
But what's a realistic number, Bhavish? The markets are listening to what you're saying, so they would like broad band.
Like I said, I don't want to guide the markets to a market share. We have grown from wherever 0% market share 3 years ago to mid-30s right now at a stable state. Our focus is on expansion of the core fundamentals of the business, the distribution, product, and the manufacturing.
All right, Bhavish, and you're looking at some backward integration with regard to your sales as well. Once that comes, first, when does that come on stream and how does it change the profitable aspect?
Our own cell is going to come online early next calendar year. And we have, 15th August, we showcased the cell. We showcased a scooter running on the 4680 cell. Which, it showcases that we are fairly along in our journey of productionizing our cell. And early next year, it will start coming into our products.
You must have.
And by the way, Nigel, when I say 100% market share, I don't say that loosely. By profit market share, we will be 100% in the industry on EVs.
Oh, wow.
Interesting, Bhavish. I like the aggression, actually, as you're revving up the engine. But Bhavish, just one more point, since you're being so candid. The service aspect is, the feedback that you get isn't very impressive. A lot of chatter online. How are you addressing that? Because ultimately, once I get my bike, I'm happy. But a lot of these two-wheeler majors who have done well, the after-service is something that helps you out. The parts, the after-service, and that's what drives customers to come back to you. So comment on that.
Absolutely. No, Nigel, very fair point. And a vast majority of our customers never have any issues with their product. There are some, obviously, consumables like brake pad changes, etc. In the monsoons, it spikes a little. And we've had a bit of a backlog in expanding our service network. We have a 800 odd sales network, but we have about a 550 odd service network. So we are focused on expanding our service network. And we also recently announced that soon our service will also be beyond just our company-owned stores. Our focus is to certify every independent garage, every independent company in the services business, who can then also service our EVs. So our focus is to really expand touch points for consumers, for them to really get quick service and not have to pay for it. But we've been expanding our own network, and now we will be actually turbocharging it by expanding it beyond our network.
Bhavish, you've said that on these lithium cells, right? When you buy and others buy cells, there's a 20-25% margin that they have to pay, which you won't have to, and that's a big cost advantage when your cells come on stream. We are seeing a huge amount of, yesterday, for example, you would have noted, right, that announcement for the advanced cells coming through, PLI coming through. Other big sort of battery makers have also announced plans. My point is cost. Is it going to be, by the time all this capacity comes on stream, will it be such a big determinant in terms of profit margin and profitability?
Yeah, Prashant, firstly, all these announcements in the lithium cell manufacturing space is great for the Indian ecosystem because we need a lot of capacity in India to serve the automotive segment and to serve the energy storage segment. Right? So abhi to India ne scratching the surface bhi nahi kiya. For the course of this decade, most likely we are going to be domestic supply constrained in cell capacity. So that's number one. And number two, the cell manufacturing is not only a manufacturing-led cost reduction story. It is a technology-led cost reduction story. And we have a 4 or 5 year lead over there over any of these people coming in. We've been investing in cell technology for a long time. We've been the first off the block here. Our manufacturing facilities are ready. And our cell is not the past generation of the cell. It is a 4680 new age, cutting edge generation of the cell, which further reduces cost and improves performance. So our focus here is going to be to lead in the technology and the manufacturing scale.
Okay. On just one last point from me, Bhavish, on there are some reports of a three-wheeler, Ola three-wheeler. Is it too early or is it in the horizon? Three-wheelers, by the way, is a highly profitable segment, much more profitable as compared to two-wheelers.
Prashant, three-wheeler mein, I can neither confirm nor deny these statements, but I can share some context with you guys. Three-wheelers mein, we as a group have had a very strong engagement because every three-wheeler driver works on my Ola Cabs platform, every one of them, right? So I know their pain points, I know their propensity for electrification, I know the GTM, go-to-market, distribution, financing, everything we have very deep entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products. So
and when is that? Can you tell us by when?
आप ही बोल रहे reports हैं, तो I can't.
तो आपसे confirm करने के लिए पूछ रहा हूँ मैं क्या मतलब इस साल अगले 2 quarter 3 quarter. Is it a foreseeable future or is it long way off?
We keep working on products, and the three-wheeler has been obviously under our R&D division for a while, and our effort is to bring it to market soon enough. Yeah.
Okay, all right, Bhavish, we're going to leave it on that note. Thanks very much for joining in and speaking with us on a whole host of issues. That's the CNBC-TV18 exclusive. As you can see, Ola Electric has moved up around 4.5% at current reckoning. The stock has given returns of around 50% from its issue price of around 75, 76 odd rupees. But it's still off the highs of around, I think, 150 plus rupees that we had seen earlier post-listing. We'll take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Their businesses from top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India.
Welcome back. Well, the writers are taking over as of now because the markets are moving in this very tight 25-30 point band, and because of that, the writers are making the money. So you pull up a couple of strikes. On the call side, you should pull up the 25,200 call, where the premium has come down drastically. At the start of the day, it was more than 50 rupees. It's come down to around 15 rupees. So there is aggressive writing that we're seeing at that particular strike. Even if you look at the 25,250 call, well, you see aggressive writing out there as well. And the premium out there has come down from around 40 rupees to around 8 rupees. Now, what is this telling you? The bears believe they've got this covered at around 25,250 to around 25,280 or thereabouts. That's the broad range. They believe that they could defend these higher levels. But on the downside as well, the 25,150 put, that's seeing a fair bit of addition. So on the downside, this premium has come down from around 50 rupees. So 25,100 becomes important on the downside. And on the upside, you're looking at around 25,280, which could be a bit of a resistance zone. So that's the broad range. And I'm talking about these strikes because all of them expire in the next 3 hours from now. Well, I'll tell you what, for the time being, we'll slip into a short break. You come back and we'll speak to the management of Thyrocare. The stock has been an underperformer, but in the recent past, it's bounced up big time from the lows of the day. Stay with us.
Community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A broader market, if you look at it in the sectoral themes, in some of the pockets, the valuations have moved ahead. But I think I would say that it's time now to really look at more of the diversified fund, right? Because as I said, in the last 1 year, we've seen that the market breadth has improved significantly. I think then again in the new age topic, you have to be careful in terms of really looking at whether the unit economics are really making sense, right? I think one is, I think we are now getting into the rate cut cycle, right? Which will start shortly. I think You will see that now in this month in the US, okay, the Fed move, I think that will kickstart the rate cut cycle. And that should be positive for the NBFCs, I mean, additionally, because where you will see them benefiting on the cost of funds.
That's why I told you not to open the goddamn door.
Welcome back. Well, for the mid-cap index, it's up around 0.5%. Just want to point out that a couple of these stocks, such as Premier Energies, it had, remember, a fantastic listing earlier this week, is now seeing further traction. So that stock is up around 11.5% in today's trading session. We have GM Financial, which is up around 6% at this point. It's rallied around 21% this week. So do watch out for that. A lot of traction on the volumes as well as the pricing front. Vijaya Diagnostics is also doing well. That stock has actually done very well on a year-to-date basis. It's given returns of around 41%. So all of these stocks are managing to gain a significant bit. In fact, the entire pharmaceutical healthcare space has been showing a lot of traction on a month-to-date basis. If you look at even something like a Piramal Pharma, it's up around 15% this month. Shilpa Medicare, which received an approval just some time ago, for an NCD in the US, that stock, Shilpa Medicare, is up around 10% odd. Alembic Pharma has also rallied around 8.5% odd this month. So good going coming in for a couple of these stocks, but keep your eye out on Geo Financial Services as well, because that stock has done well. It's up around 0.5% odd today, and it's gained around 49% this year. So a lot of traction in specific stocks today. On the downside, just watch out for maybe a stock such as Prestige Estates, because that stock is showing some amount of profit booking. It's down around 3% odd. We have Marksons, which is down around 1.7%, and a couple of others such as Havells, which is showing some amount of traction on the downside. So that stock is down around 18 odd rupees at this point in time, and it's not done too badly this week. It's actually this year, it's up around 37% this year. But nonetheless, it is showing a bit of profit booking today. We'll take a short break, but on the other side, we'll get you Thyrocare, that promised chat, as well as other stocks in focus. Stay tuned. Welcome back. Well, Thyrocare is the next management on the show. The stock is up more than 30% in 2024 so far. The company has acquired Vimta Labs diagnostic and pathology business for around 7 odd crores, so not a big acquisition. To discuss this and more, we have Rahul Guha, who's the MD and CEO of Thyrocare, joining in now. Rahul, hi, welcome to the show. This is Ekta. If you could just start by telling us the rationale of buying Vimta Labs diagnostic business. How many labs do they have? How many collection centers do they have? Are they profit making?
Sure. Good afternoon, Ekta, and thank you for having me on the show. Actually, Vimta Labs is the third acquisition that we've done in this year. We had acquired Think Health earlier in the year, followed by Polo Labs, and now Vimta Labs. What we're seeing is very interesting opportunities where companies have built fantastic brands in different geographies or in specific technologies. So Think Health had built a ECG at home capability. Polo Labs has been very strong in Punjab, and Vimta is very strong in largely AP Telangana. They have 11 labs across the country, but very strong in AP Telangana. And these are brands with fantastic equity in the local markets that they work in. And with the Thyrocare backbone, our operational efficiency and our particularly focus on quality and our cost structure actually creates a lot of synergies between the two brands and allows us to create win-win for almost every acquisition that we've done. This is one of the first three of many, but we anticipate to continue to create win-win opportunities through M&A, where we work with specific local market brands that have built great equity, great relationships in the markets that they're present and where Thyrocare is weak, and use that as a platform to expand deeper and deeper into India.
Got it. So it's basically focusing on local market brands as compared to a larger strategy that you're looking at. What is the blended margins of these three acquisitions? What I'm trying to get down to is that are they adding to your EPS? Are they EPS accretive as of now?
No, most of them, it will take us roughly about 2 to 3 quarters to actually make them EPS accretive. So I would anticipate, and that's why they're more small acquisitions, because we're being cautious and going step by step. But it takes us about 2 quarters to get them EPS accretive. We need the synergies to flow in, the benefits of being on the low-cost, cost-efficient Thyrocare backbone without any compromise on quality. So it will take about 2 to 3 quarters before these acquisitions get EPS accretive. But that's why they're small, and that's why we're taking it step by step.
So what's the corpus that you have on hand in terms of further acquisitions? Because they are small sized. What's the cash on books currently? How much are you looking to deploy in terms of M&A? What's the pipeline like?
Our operating cash flow is actually quite healthy. We generate, about 150 to 200 crores of operating cash every year. We've kept aside for this year about 50 crores to go for acquisitions, and we anticipate to be on track for that.
Interestingly, Rahul, now I'm going to get to the business. You have 3 different segments which are contributing. Wellness has become a huge mainstay for all of the diagnostic companies now. You have Janch, you have Arogyam, which is your preventive health segment, and you have HER, which is women-centric testing. Janch is more lifestyle challenges, which you try to aim at in terms of the patient. Tell us about each one of them. How much are they growing at this point in time? How much are they contributing to business? Which one is growing at the fastest pace? And what is the contribution expected?
Got it. So Arogyam, which has been our primary flagship brand, continues to grow. It tracks the growth of the company, more or less in line with the growth of the company. And we continue to maintain our market share in the wellness segment, for which we are well known. Janch actually has been doubling every year. Even, our Janch Fever package, which helps you with the diagnosis of fever, whether you have typhoid, dengue, chikungunya, all in one single test. That actually doubled over last year, and month on month also, as we are in the fever season, has been doubling. So Janch, of course, grows much faster and is doing very well. HeartCheck is a nascent brand, so it's too early to comment. It's largely focused on women, but mostly promoted through the gynecologist network. So that takes time to scale up, right? Because we're not going direct to consumer. We are going through the doctor network, explaining the value proposition of having these kinds of tests exclusively designed for women. So that will take time to scale up. But Janch is doing very well. As I said, versus last year, a doubling. And in this fever season, we've been particularly happy to see how Janch continues to be the test of choice for consumers who have fever and also many other chronic disease ailments as they think about better caring for those ailments.
Hi, Rahul. Good day and good to hear you out. A lot of ailments, a lot of testing going on. I hope most of the tests are negative because there's been a viral in the air as well. But Rahul, I just wanted two numbers from you with regard to your financial performance. I've been looking at it and your revenue per quarter has improved. Now you're clocking 150 crores at least. Last year you did around 570 crores for the year. So the start has been good to the year. Will you deliver more than double-digit growth for this year? And also margins have steadily been improving from late teens to early 20s to you're moving to towards late 20s now. Where should this number stabilize at? Revenues and margins?
See, I've been maintaining my guidance and, I will not change the guidance for the year, even though Q1 has been very encouraging. As you know, Q3 tends to be a difficult quarter for the entire diagnostics industry as we get into the festive season. Funnily enough, festivities are not good for diagnostics. And as you said, the viral in the air is actually very good for diagnostics. So while we've had a strong start to the year, I'm still being cautious about the second half of the year. So I'll maintain my guidance at mid-teens top line growth. And if we are able to see margins remain stable or marginally improve, I think that would be a good performance for the year.
Okay, so mid-teen top-line growth is what you're anticipating.
Yes.
Rahul, I wanted to ask you about the competition dynamics also, because most of the diagnostic companies have said that it's largely settled at this point. You've been known to, offer one of the most competitive rates in the market at this point. What is your experience when it comes to competition in metros such as Mumbai?
Definitely. If you look at the competitive scenario over the last 2 years, and as I've been saying on your show as well, Thyrocare is almost 80% tier 2 and beyond, right? We didn't face a lot of competition in those markets because if you look at the new entrants and particularly the new age tech entrants that came into the diagnostic space, they were largely metro focused, right? So I almost think of it like a storm in the teacup, right? India is very large. And with 80% of our revenue in tier 2 and beyond, not metro tier 1, is only 20% of our business. We didn't really face the storm that we saw. But definitely I'm seeing growth coming back in the metro regions. We are seeing competition easing off. Many of the brands that entered are actually, at this point in time, looking at different exit opportunities. So I definitely see the competition in the metros easing off, but the opportunity is in tier 2 and beyond. That's where the vast majority of India lives, has never seen a diagnostic test or, doesn't even know if they have diabetes and things like that. And I definitely think the opportunity sits there.
Okay. All right, Rahul, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective on the business. And I'm sure we'll touch base again soon enough to get a sense in terms of what, where the business lies in terms of guidance as well. Thanks very much for talking to us. We'll take a short break, but on the other side, Manisha Gupta will join in. She has with her PNG Jewellers. Stay tuned.
Welcome back, and time for an exclusive conversation. Now we are joined by Saurabh Gadgil. He is MD, PNG Jewellers. Mr. Gadgil, hi. First of all, congratulations on the IPO. You are the second largest organized jewelry player in Maharashtra in terms of number of stores. What prompted you right now to hit the IPOs?
It's a great day. It's a great journey for the brand PNG, and today we are finally IPO ready, hitting the market soon. Like you mentioned, we are the second largest player today in Maharashtra in terms of number of stores. We're at 39 stores. Titan is roughly around 55 plus stores. And what we really felt was that the entire journey of PNG has been in the state of Maharashtra. We have been here for almost 20 decades now, having a long relationship with customers spread over generations together. Karigars who are with us for generations together, and we felt now is the time when a company is poised for the next phase of growth, and the immediate target for the company is to be the largest player in the state of Maharashtra. We feel that Maharashtra is a very progressive state. A lot of development is still going on here, and there are pockets where we still see potential for the brand to penetrate and to further deepen its roots. So from the IPO, the plan is primarily to use the proceeds to further expand, set up stores. We have kept a target of 12 stores as per DRHP to be set up in Maharashtra here. And for this financial year, moving ahead next year, we'll be adding some more stores. And the journey would be to be the largest player in Maharashtra in all parameters, in all fronts. And then post that is to continue the journey ahead with the neighboring states. The plan would be to keep on growing the PNG legacy and to keep on serving people better here and to keep on making the company a one happy company. Like we always say that we are a happy company with happy employees, happy customers and happy karigars.
And it's a happy you today with the IPO being decided. Also, how are you going to use the proceeds from the IPO? You told us it's going to be for the expansion of more stores within Maharashtra, outside as well. Also, there's a part of it which is going in for repaying or debt also. How much would you save up in sense of interest costs after you've done this?
As of now, we have earmarked 300 crores to be used to repay debt. Debt today is around 250 crores, and there's a term loan of around 70 crores. Primarily, after debt repayment, we use the bank facilities to avail gold metal loans, which today we are not availing, and that would ensure that the funds come back in the business again. So the entire money which is going to be raised to the IPO will find its roots back in the business. The gold metal loans will give us two advantages. One is it will help us to be hedged, in terms of our inventory, and secondly, as you all know, the gold metal loans come at low interest rate, 5 to 5.5% annualized. So that will help us to save another 4% there on interest cost. So it's a win-win situation on both the sides, and that is how we have planned to use the IPO proceeds partly. We already have got bank sanctions to convert the fund-based facilities to non-fund-based facilities, and this will ensure that we are able to avail the gold metal loans in the next quarter as we move ahead.
Also, Saurabh, currently you're operating one store out of US as well. Any plans to expand internationally? If yes, then what geographies are you looking at?
We have been one of the first organized jewelry players from India to be present in US. We are there for 15 plus years. We have a flagship store in the city of Sunnyvale in the California state. And as being the first player there, we have a big advantage. And yes, definitely there's enough potential to look at other states in US. And that's something which the company right now is exploring. As far as India is concerned, after the state of Maharashtra, we'll be looking at states on the neighboring side. That's Madhya Pradesh, Bihar, UP, Chhattisgarh, Jharkhand, and finally Delhi. We feel these states are states which have a common language, Hindi, a common culture, and a very strong linkage with the state of Maharashtra. So the brand is known there, and the journey would be more easier in those neighboring states. But this will only happen once we are completely dominant in Maharashtra. And the road ahead would be to look at one state to be a dominant player there, and then to move to the next state. So it will be a journey phased out for the next 5-7 years, where the company looks at being a 100 to 120 strong store company. But the genesis would be to be a dominant player in all the states where the company is present, and to be profitable across all the stores, and to really track also the same store growth what we are doing today. So the plans are robust. We have people, processes, and systems in place. So all excited to start this new journey ahead.
Absolutely. Sort of also, when you look at the numbers and deeper into that, the expenses in the company have shot up, as we can see in the last couple of years. Also, margins have been a bit of a pain point as well. How are you looking to curb expenses and improve margins going ahead?
See, margins have been quite moderate to, on an increasing side as we speak. The gross margins for the company have been 13-14% when you consider the portion of retail sale. We have a portion of old gold sale which we sell to purchase back new gold. So when you exclude that old gold sale at the store level, the margins are at 13-14% gross. We have EBITDA at around 7% and PAT at 4%. So margins are on comparison with the industry. We are looking at further increasing the share of diamonds, studded jewelry, and that would further give us additional boost in margins. And along with that, as we expand further, we'll have economies of scale. And since we're doing expansion in the state of Maharashtra, we'll not be adding too many costs on the operational side. So that will also help us to scale up the turnover and to achieve better margins. So company is confident that in the coming years, the margin should see an improvement. And we are all catered towards that. But having said that, even today, the PAT margin at 4% is among what the industry today is looking at.
Sort of also the big gift that the government gave this budget was, of course, cutting import duty to 6%. Have the footfalls increased because of that? And also this is festival season. The IPO also is coming during the festival season. Have you seen a marked increase in demand because of that?
The duty cut has been taken very, very favorably by the entire industry. As far as PNG is concerned, we have seen record sales post the duty cut, both in volumes and in value. There's been a considerable jump on both volume and value side, and the market remains strong. Even as we continue heading towards Ganpati, there's a strong demand for all kind of jewelry, wedding jewelry, investment jewelry, bar coins have been strong, and I think that the year looks good for us. India as a country is really doing well. People are having faith in consumption. People are investing in gold. I think this duty cut has come at the right time where people felt that it's a moment which should not be lost and should be a right time to enter the market. Post duty cut also, gold has seen appreciation, and that's why it has further reinforced people's interest that gold is here and gold is bullish. So people are making purchases. I think that the second quarter is looking very good, and the third quarter, which would have Diwali as a main attraction, should again have result in good sales. So I think we are looking at good numbers for the entire year, and I think we are on track to be able to achieve what we had planned at the start of the year. India market looks strong, and especially I would say that Maharashtra has seen a very, very sharp jump from the unorganized to organized sector, and that is further fueling growth at PNG.
Oh, well, absolutely. We've seen a lot of changes coming for the jewelry sector, as you said, from unorganized to organized, the gold prices going higher, and more IPOs coming into the market as well. Saurabh, thank you so much for that exclusive conversation, and congratulations yet again on that IPO listing. With that, that's all the time that we have on this show, but stay tuned. Business Lunch will take all the action ahead.
Thousands rallying outside Israel's defense ministry as the largest protest since the start of the war surge on. Public fury mounting over Hamas's murder of these 6 young hostages and the Israeli government's failure to bring them back alive.
Our government are heartless people.
These murderers executed 6 of our hostages. They shot them in the back of the head. And now after this, we're asked to show seriousness? We're asked to make concessions?
Netanyahu refusing to withdraw Israeli troops from the Egypt-Gaza border, saying a retreat would allow Hamas to rearm. But it's a key stumbling block in negotiations, Egypt accusing him of obstructing a ceasefire deal. The U.S. says it's against the presence of Israeli troops in Gaza long term.
We've made clear that we are opposed to the reoccupation of Gaza.
Alex Lobanov, a father of two, was among the hostages killed. A source tells NBC News his widow refused to meet Netanyahu during a condolence visit. The Israeli leader has not met the family of American hostage Hirsch Goldberg Poland, who was buried in Jerusalem.
Finally, my sweet boy, finally, you're free!
Israel carrying out more strikes in Gaza, but the UN says it's pushing on with a polio vaccination campaign, getting doses to more than 160,000 children over 2 days, even as war rages around them.
Market fails to hold on to opening gains as realty and IT stocks exert pressure. Mid-caps are significantly outperforming. The healthcare and metal stocks are advancing in today's session. Reliance Industries has been granted approval to set up an advanced chemistry battery cell facility under the PLI scheme with benefits of over 3,600 crore rupees. Other bidders under the scheme have been waitlisted. A day after SEBI responded to claims of a toxic work environment at the regulator, saying employees seeking pay hikes had been misguided by external elements, a group of employees are staging a protest on the regulator's premises, refuting these claims. RBI Governor Shaktikanta Das has stated that it's the headline inflation, which includes a 46% food weightage, that it matters as it is what people understand. He adds that the RBI must successfully navigate the last mile of disinflation to preserve credibility of the inflation targeting framework. And Ola Electric CEO Bhavish Aggarwal tells CNBC-TV18 in an exclusive chat that the company has been working on a three-wheeler for some time and it could launch a product quote-unquote soon. He attributes the loss of market share to peers getting their act together on EVs as well as sales aggression. Hello and welcome to Business Lunch this Thursday afternoon on CNBC-TV18. I'm Hormuz Fatakia in the Mumbai News Center. Let's first take a look at how the markets are doing. It's the weekly expiry of the Nifty, so a crucial last couple of hours headed for the index this afternoon, and it's flat as flat can be. We opened higher, we opened gap up, but could not sustain above those levels of 25,250. We made a high of somewhere close to 25,270, currently trading around about the flat line. It's closer to levels at which we closed yesterday as well. So it is a flat afternoon so far, but the last hour will be very crucial for the markets as it is the weekly expiry for the Nifty. But the Nifty Bank though is trading above the flat line, and that is trading closer to levels of 51,500. Remember, it is trading above the 20-day moving average but below the 50 DMA. So very important levels to watch out for, this 51,500 for the Nifty Bank as well. But the action is in the broader markets. It is a small cap index that is outperforming by a distance in today's trading session, trading with gains of well over 1%. The mid cap index too has sprung up to life, and it is now trading at the highest point of the day, 0.6% higher for the mid-cap index. The small-cap index also trading with gains of well over 1%. The other index that is doing well, though, is the Nifty Pharma index, and almost all of the constituents there are trading with healthy gains, be it Laurus Labs, be it Syngene. All of them are having a good day in today's session. So good going for the broader markets so far, but the index continues to remain flat. But we begin business lunch with some views coming in from the RBI Governor, and Shaktikanta Das defended the flexible inflation targeting, saying that it is one of the 6 major reforms that has strengthened the Indian economy. This is an important statement as it comes a day after the chief economic advisor had argued that India should revert to the pre-inflation targeting method of monetary policy making. Listen in.
The headline inflation that matters. It is the headline inflation, with food inflation having a weight of 46% in the headline inflation, which the people understand. The balance between inflation and growth is now well poised. The balance between inflation and growth is well poised. You know, our monetary policy, the legal framework which the enactment in the Reserve Bank of India Act has mandated the Reserve Bank to achieve, is to maintain price stability, which is defined in terms of maintaining inflation at 4% with a tolerance band of 2% on either side. That is, it should remain between 2 to 6%, but the target is 4%. We must successfully navigate the last mile of disinflation and preserve the credibility of flexible inflation targeting framework, which is a major structural reform. The best contribution that monetary policy can make for sustainable growth is to maintain price stability.
Now, Governor Das also said that India's growth remains robust despite the challenges. He also urged the private sector to ramp up its investments into the economy.
The Indian economy, as all of you would know, rebounded strongly from the COVID-19 induced contraction, growing at an impressive annual average of 8.3% in the last 3 years. I think the projections made by all the agencies, international agencies, as well as the Reserve Bank, I think our perceptions and projections are converging. Structural drivers are playing a bigger role in India's macroeconomic outcomes. It is time for the private corporate sector to also come forward in a big way. There are signs of private sector investment happening in a number of sectors, as I listed out, but I think the scope can be more, and it is for the private sector players to really take their own call. I'm no one to give advice on this issue, but from a regulator's perspective, and from the perspective of where our economy stands, from the perspective of the opportunities that lie ahead, from the perspective of the outlook that we have ahead of us, I think it is time also for the private sector to ponder, to consider, and step up their investment in their respective businesses.
And the RBI Governor there pushing the private sector to step up on the capex. But a couple of other stocks that should be on your radar right now. One of them is Dixon Technologies. That has fallen to the lowest point of the day, and that is seeing some bit of selling pressure in today's session. And it's been on a bit of a selling spree after the management spoke to us earlier this week, and they said that the growth in FY25 would be slower than what was anticipated. So keep an eye out on Dixon Technologies, 2.5% lower at the lowest point of the day. But time for an exclusive now. Sources are telling CNBC-TV18 that the GST committee may deliberate on reducing GST on life and health insurance in its upcoming meeting. Timsy is joining in with more details. Timsy, what are your sources telling you?
Well, the upcoming GST Council, which is slated to meet on 9th of September, it is likely to deliberate on the pressing issue of reducing GST rates on health and life insurance. Sources indicate to CNBC-TV18 that the Council is not currently going to, form a consensus as per the what the agenda says. So the subcommittees, that is the Fitment Committee, etc., are putting a lot of options for the Council to deliberate on the matter. To begin with, on the life insurance insurance bit, the fitment committee, that is the council-nominated fitment committee, has recommended exemption for only pure term individual life policies and reinsurances. They say that if this is granted, that is an exemption from 18% to 0% for pure term individual life policies and reinsurance, then the revenue implication is likely to be around 213 crore rupees. And they say very categorically to the council that it has to be discussed in detail, deliberated, and also ensuring that any reduction should be passed on only if it is being given directly in the hands of the people, that is the people who buy these insurance products. Secondly, on the health insurance bit, the fitment committee has recommended 4 options. First option is exemption for all health insurance premiums and reinsurance where the potential revenue implication is of 3,500 crore rupees. Second option is exemption to senior citizens premium and premiums with a cover up to 5 lakh rupees only, irrespective of any age. Here, revenue implication is around 2,100 crore rupees. Third option is to give an exemption only to those premiums which are paid by senior citizens. And over here, the potential revenue implication is around 650 crore rupees. And the fourth option is reducing GST rate on all health insurance services to 5% without ITC. Here, the revenue implication is seen to be around 1,750 crore rupees. Again, as I repeat, the agenda is believed to be saying that any consensus was unable to be reached in the fitment committee, and that's why all these options are given. And again, it leaves for the council to decide that whether an exemption or a reduction on these services needs to be given or not. So that is something that is likely to have a heated discussion. This particular proposal, to be precise, on both health and life insurance is likely to have a heated discussion in the upcoming council meet on Monday, on September 9th.
Timsy, thanks a lot for that. All eyes on the 9th of September for that GST Council meeting. But shifting focus back to some buzzing stocks, Zomato is surging today on the back of a bullish note from JP Morgan. Vivek is here to tell us more. Vivek, what does the note say?
Well, that's right. So Zomato, one of the top movers, in the trading session today. JP Morgan has maintained its overweight stance on the stock, and they've gone ahead and raised the target price quite steeply to 340 rupees a share, versus the earlier 208 rupees a share target that they had earlier. What they're saying is that the company is spearheading a rapid retail consumer transformation via its convenience and selection-focused quick commerce business with very ambitious rollout plans. Along with that, what they're saying is that the Zomato is going much deeper into all of the metros, having proven the model as far as the NCR or the National Capital Region is concerned. Remember, 50% of the GOV and store count comes in from there. Along with that, what they're saying is that the rising scale of Zomato is something that will help drive monetization from the channel margins as well as ad spendings. Lastly, what they're saying is that Blinkit now has the license to scale faster than peers and also go ahead and beat its own current targets that we've had. On the back of that, have a look at Zomato, up almost 5% in the session today.
And it's showing in the stock as well, as you said, Vivek, 5% higher for Zomato at 254. Thanks a lot for that. Now, Raymond Lifestyle had a good listing on the last read today, listing at 3,020 rupees a share compared to the issue price of 1,563 rupees. Now, from the sidelines, we spoke to Gautam Singhania on what could be the growth drivers for the company. Going ahead.
So the wedding season is strong. As we said, coming up for the next 6 to 9 months, we should have a very strong wedding season. So that should drive strong growth. Well, I think the Bangladesh opportunity is great. It's a good opportunity for us to take advantage of. And it's just playing out. So let's see how it goes.
Very strong listing for Raymond Lifestyle. Moving on to some more corporate commentary coming in from the beauty and wellness space. Speaking at the Nykaa Beauty Summit, CEO Falguni Nair and HUL MD and CEO Rohit Java said that the beauty segment in India is at the foothills of a massive mountain and is growing rapidly. Listen in.
If we go back when Nykaa was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they're already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
I think from an India point of view, we are in the foothills of a massive mountain, and we will reach massive heights, and the potential is infinite, at least in our lifetime, because we're talking 1.4 billion people. If you look at just the top 50 million, let's say, more affluent people, many of them are here, and then they're already using 5 or 6 steps, you call it stepification, the regime in HUL, we call it, and therefore the beauty consciousness and the aspiration is already been unlocked, especially even in more macro, larger population base through Instagram, through Facebook and other such social media.
Moving on, the protests being carried out by employees of market regulator SEBI against what they term to be a toxic work culture have ended. The purpose of the protest, as per the employees, was to show dissent and unity against what they call was a press release with a fake narrative against all SEBI employees. Time for a short break here on Business Lunch. We get you more news and updates on the other side. Stay tuned, we'll be right back.
The US presidential election is now just 2 months away, and Democrat nominee Kamala Harris has a lead over Donald Trump in key opinion polls. According to Real Clear Politics polling average, Kamala Harris is leading by 1.8 points over Trump. The RCP average shows Harris at 48.1 and Trump at 46.3%. In some polls, such as the ABC Ipsos poll, Reuters Ipsos, Emerson poll, Kamala Harris is leading by 4 points. Harris also has a narrow lead in key battleground states of Arizona, Nevada, Wisconsin, Michigan, Pennsylvania, North Carolina, Georgia. According to Bloomberg Morning Consult,
Welcome back. Now, Ola Electric's Bhavish Aggarwal says that they are very close to break even at an EBITDA level. Now, in an exclusive chat with CNBC-TV18 earlier today, he adds that incumbents have no option but to build their EV business. Also says the company has been working on a three-wheeler for some time and it could launch a product soon. Listen into what he had to say.
We've also dipped a little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. So our focus is on profitable growth. You will see us continue to bring new products, expand distribution, and continue to focus on vertical integration to bring better technology and control cost. You know, the challenge for incumbents at a macro level is वो खेलेंगे तो पछताएंगे, नहीं खेलेंगे तो पछताएंगे. खेलेंगे तो पैसा लूज करेंगे और अपने खुद का ICE business cannibalize करेंगे. You can see all of these companies, the incumbents who have started playing in electric are losing ICE market share to their ICE competitors. Every three-wheeler driver works on my Ola Cabs platform, every one of them, right? So I know their pain points. I know their propensity for electrification. I know the GTM, go-to-market, distribution, financing, everything we have very deep, entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products.
Showing up in the stock price as well, Ola Electric up 5% in today's session after an 11-day losing streak. At the highest point of the day now, at 116 3/4 is Ola Electric. Meanwhile, an important statement coming in from Union Road Transport and Highways Minister Nitin Gadkari. He said that India's electric vehicles market is growing rapidly and won't require incentives to promote sales as consumers now want to buy vehicles powered by cleaner alternatives. He added, and I quote, "Do not think we need too much subsidy for electric vehicles," end of quote. The minister said this at the Bloomberg NEF Summit in New Delhi. Remember, the FAME scheme is expiring at the end of this month. Staying with the auto space, luxury automaker Mercedes-Benz launched the first of its kind electric Maybach earlier today. The Maybach is Mercedes' top luxury offering, and the Maybach EQS 680 has been launched at a starting ex-showroom price of 2.25 crore rupees. Take a look at the vehicle as we slip into a short break.
One to 3 point lead in Georgia, Michigan, Nevada, Pennsylvania, and a 9-point lead in Wisconsin. The RCP polling average suggests a 0.5 to 1.8 point lead in Wisconsin, Michigan, Pennsylvania, a tie in Nevada, and marginal leads for Trump in Arizona, North Carolina, and Georgia. While the race has clearly changed and is close, it does not guarantee a victory for Kamala Harris. And this is because most of her leads are within the margin of error. Don't forget, Donald Trump has also maintained a 47% approval rating and a chance of winning almost constantly over the past few months in polling surveys. Now, 47% was Trump's popular vote share in the 2020 election, which he lost, and 46% was his vote share in 2016 presidential election, which he won. As the race heats up, a former Donald Trump aide and former White House communications director Anthony Scaramucci has said that Trump's wife Melania hates Donald Trump and may be secretly rooting for Kamala Harris to win. However, one prominent pollster in America feels Trump has an edge right now, and that is due to the key swing state of Pennsylvania. Nate Silver said that while Harris is leading by 3.8 points in his national poll tracker and is slated to win the popular vote, his election forecast shows the former President Donald Trump has a 52.4% chance to win the Electoral College.
बहुत ध्यान रख के, बहुत केयर के साथ कई सारे सेफ्टी फीचर्स, पैसेंजर एमिनिटीज़, स्टाफ के लिए सुविधा, इन सब को ध्यान में रखते हुए वंदे चेयर कार, वंदे स्लीपर, वंदे मेट्रो और अमृत भारत, इस तरह की 4 ट्रेन्स का जो कन्फिग्रेशन है, इसमें मॉडर्न टेक्नोलॉजी, सेफ्टी, लोको पायलट्स के लिए स्पेशल फैसिलिटीज़, जो सर्व करने वाले स्टाफ हैं जो लिनन देते हैं या फिर जो फूड सर्व करते हैं, उन सब के लिए स्पेशल फैसिलिटीज़, ये सब ध्यान में रखते हुए नई डिज़ाइन के साथ चारों की चारों ट्रेन कन्फिग्रेशंस बने हैं। और साथ ही साथ ये मिडिल क्लास की सवारी है, इसलिए अफोर्डेबल फेयर रखा जाएगा, राजधानी के साथ इसको बेंचमार्क करके रखा जाएगा। और ये ओवरनाइट जर्नी के लिए रहेगी, यानी करीब 800 से लेके 1200 किलोमीटर की जो जर्नी है, यानी रात को 10 बजे 9 बजे के आसपास आप इसमें चढ़ें और अगले दिन सुबह कंफर्टेबली उतर जाएं। इस तरह की ये चीज़ें इसमें ध्यान रखा गया है।
Welcome back. Now on to some macro data from the United States. The Federal Reserve's Beige Book survey shows the economic activity was flat or declining in most regions in the country. CNBC's Steve Leisman gets us more on this.
Fed's Beige Book, the collection of economic anecdotes from the 12 Federal Reserve banking districts, say economic activity grew slightly in just 3 districts. It was flat to declining in 9 districts. Overall, there is a dark tone to the Beige Book today. Employment levels, however, were steady. There were some reports of reduced hours and shifts, lower employment through attrition. However, reports of layoffs remain rare, the Beige Book says. Wage growth was modest, good news for the Fed's inflation fighting. Non-labor input costs showed slight to moderate gains. Again, good inflation news, but consumer spending ticked down in most districts. Haven't seen that in a while. Auto sales varied, but there were some declines reported due specifically to higher interest rates that come with auto loans these days. Manufacturing activity declined in most districts, so that's consumer spending and manufacturing. Most districts did report also softer home sales. The economy, however, was expected to remain stable or improve in the coming months. A little bit more unemployment here. Firms were feeling less pressure to increase wages, a greater availability of workers, and you saw some of that in this morning's JOLTS report. Prices overall rose modestly. There were some increases in both freight and insurance costs. Guys, this we have the economy running, I don't know what you want to call it, 2 to 3% in the tracking surveys, but this doesn't sound like a 2 to 3% running economy from this Beige Book.
Well, take a look at the markets before we call time on this edition of Business Lunch. The Nifty slightly slipped from where we began the show at, now currently below the mark of 25,170 as we speak. The final couple of hours for the weekly expiry session. A couple of contrasting trends emerging within the consumption space. Titan is the top gainer in today's trading session, now at the highest point of the day, around 3.5% higher for Titan. That's the top gainer on the Nifty. But on the flip side, Nestle and Britannia are the top laggards in today's trading session on the index. Nestle is down close to 1%, as is Britannia, trading with losses of a similar quantum, and also trading with losses of just close to 1% is Bajaj Auto as we speak. So consumption stocks on the gaining side and on the losing side as well. But with that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar comes up next.
फीचर्स हैं, डिज़ाइन में कई चीज़ों के इनोवेशन किए गए हैं। जैसे आपने देखा होगा पुराने टाइम में चेन होती थी, उस चेन की जगह अब ये इस तरह का एक मच मोर सिक्योर मैकेनिज़्म लाया गया है, जिससे कि बर्थ की सिक्योरिंग, फास्टिंग वगैरह बेटर हो। टॉयलेट्स में भी स्पेशल ध्यान रखा गया डिज़ाइन में। और लोको कैब आपने देखी होगी, ड्राइवर्स की फैसिलिटी। मेंटेनेंस स्टाफ के लिए अलग से कैबिन बनाया गया है, जिससे कि वो लोग आराम से रेस्ट कर सकें।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled
Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Reema Tendulkar. Good afternoon, Reema. It's another session where we're actually seeing the broader end of the market is doing very well compared to the frontline indices.
Indeed, the mid-cap index is up more than about 0.5%, outperforming the Nifty and the Sensex as key indices have now fallen to the day's low. Consumer healthcare stocks gain while realty and IT stocks exert pressure.
Zomato zooms nearly 5% after JP Morgan issues an overweight rating and raises the target price to 340 rupees a share from 208 earlier. Says the company is spearheading a rapid retail consumer transformation in India. Also, Chola investment gains after Goldman Sachs initiates coverage on the stock with a buy rating and a target price of 1,786 rupees a share. Says the company is scaling up non-vehicle finance business and that should help reduce cyclicality.
And Ola Electric CEO Bhavish Aggarwal tells CNBC-TV18 in an exclusive chat that the company has been working on three-wheeler and could launch a product soon. Attributes the loss of market share to peers getting their act together on EVs as well as sales aggression. The stock surges 5%.
Allied Blenders in focus as it invests 70 crore rupees in a joint venture with actor Ranveer Singh's entity for premium spirits business. Also, Dilip Bilkon emerges as the lowest bidder for tunnel construction project in Kerala worth 1,300 crore rupees. The stock is up nearly 2%.
And Raymond Lifestyle shares fall after a stellar listing at 3,030 apiece. The company, remember, was demerged from the parent company in June this year.
Well, welcome to Midcap Radar. Like we just mentioned, a lot of buzzing stocks, especially from the broader end of the markets. The small cap index today up almost 1% on a day when you're actually seeing the benchmark struggle in the session. One pocket of the market that's done very well today continues to be the pharma pack. So if you look at some of the pharma companies, names like Laurus Labs, names like Granules, all of them today continue to move higher. The other pocket of the market that's doing quite well, in fact, doing very well this entire week, is actually the housing finance companies. And this is ahead of the Bajaj Housing Finance IPO. So if you pull up the one-week charts of names like LIC Housing Finance, PNB Housing, and Aadhar Housing, all of these stocks have done very, very well.
Well, they are being offered at, Bajaj Housing Finance is being offered at a premium to some of the peers. So maybe there is a little bit of a catch-up valuation re-rating that we're seeing. But what's not doing well in the market are many of the CPSCs. In fact, the Nifty CPSC index has declined for the 4th day in a row, and today you're seeing a reversal in Oil India. It was a big mover yesterday, big gainer. Today, 3.5% gone. Mazgaon Docks, Chambal Fort, BEL, BHEL, RVNL, IRFC. These are some of the stocks which are seeing a red tick. But let's get to our mid-cap movers segment. Hormus is now joining in to take us through that list. Hormus.
Well, action certainly lies in the small cap space ahead of this all-important weekly expiry for the index. There are plenty of stocks on the gaining side today within the broader markets, and we'll start off with those gainers there. Gujarat Fluorochem is one of those among the top gainers within the broader markets. Now at the highest point of the day, up 10% in today's session, as is Kaplan Point, now 9% higher. KC International at one point was up almost 7%. It's cooled off from the highs of the day, but still trading with gains of close to 4%. And Vijaya Diagnostics having a good day at the office. Speaking of diagnostics, and pharma players are in the pink of health in today's session, as Vivek just mentioned. Syngene, Laurus is at a 52-week high today. Fortis is at the highest point of the day, and Ipca Labs is also doing well in today's session. PSUs are having a bit of a mixed day, but the tilt is more towards the downside. The Oil India now at the lowest point of the day. BEL, Mazgaon Dock, one day up, one day down. That trend has begun for these shipbuilders as for Garden Reach. So some bit of profit booking coming in there at higher levels, or even exiting at higher levels. For stocks that are doing well on the back of volumes, Linde India on the back of news flow. Sunteck Realty is up 4%. JM Financial and TVS Supply Chain has seen a bit of a spike over the last few minutes, up 5% now on very strong volumes. And lastly, stocks that are bucking the trend in today's session, at least within the broader markets on the downside. CCL Products, Prestige Estates has raised money through the QIP, but the allottees are yet to be known. And PCBL not having a good day after a stellar move in the last 1 month.
Thank you so much, Hormas, for highlighting that long list of movers from the broader markets today. Let's now welcome Samit Chavan from Angel One for a technical check on the market. Good afternoon, Samit. Thank you so much for joining us. How are you looking at markets at the current state?
Good afternoon, Vivek. See, market is not having a clear momentum as such. There is no major momentum. Fortunately, we are not getting impacted much, on the global development that has been happening. The hiccups that we have been witnessing in US markets. Fortunately, we are not, as of now, we are not getting impacted. But you never know when they will start reacting to it. So some sort of risk will continue to loom over. And hence, our advice would be to stay light, at least with the short-term view. One should avoid getting into, high beta names aggressively. So one should avoid aggressive bets on both sides. So as far as levels are concerned, we are seeing important support for Nifty around 25,080 to 25,000. First sign of weakness would come below 25,000. If Nifty stays below 25,000, then probably we could see immediate correction of 300, 400 points in Nifty. Whereas on the higher side, 25,300 to 25,500 would act as a very strong resistance. So till the time we do not get decisive close beyond 25,500, we are likely to see some selling pressure at higher.
Samit, hi, afternoon. What about individual stocks? Where would you recommend a trade today?
Afternoon, Rima. So we would have, mixed bets. One would be on the long side and one would be on the short side. On the long side, if you see, Titan has been buzzing since morning. Overall, if you look at its, structure, the stock has already continued its higher highs, higher lows in daily time frame charts. Today, it has given a decisive breakout along with sizable volume. So we expect Titan to, continue this outperformance. As far as levels are concerned, any depth, 20-25 points depth would be a good buying opportunity. One can keep a stop around 3625, and we would expect the stock heading towards its previous highs of 3860 quite soon. On the short side, we have already seen a massive rally in most of the defense names, but in last 1.5 months, we have been witnessing some consolidation happening in this name. So BEL is a one stock, it's on the verge of a breakdown on daily time frame chart. So on the short side, we like BEL. Clearly with the short-term view, a profit booking is evident. 284 is the immediate level to watch out for. So as a short seller, one can keep a stop around 297, and on the downside, the target would be 284.
Thanks so much, Samit, for joining us and giving us your view on the market as well as your short-term technical picks. Let's now slip into a short break. On the other side, we get you excerpts from our conversation with the management of REC. Stay tuned.
Comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A broader market, if you look at it in the sectoral themes, yeah, in some of the pockets, the valuations have moved ahead. But I think I would say that it's time now to really look at more of the diversified fund, right? Because as I said, the investing.
Welcome back to Midcap Radar. Well, as promised, we told you about the conversation we had with REC. REC management told CNBC-TV18 that they have seen considerable improvement in efficiency of discoms and hope that problems faced by discoms will be resolved by 2026. My colleague Abhimanyu caught up with Vivek Kumar Devagan, the chairman and MD at REC, to talk about the health of discoms and the sector outlook. Listen in.
With the introduction of revamped distribution sector scheme and notification of late payment surcharge rule by Ministry of Power, there has been considerable improvement in operational and financial efficiency of the distribution company for the last 3 years. Since RDS is going to continue until the year 2026, we hope that a number of problems being faced by discoms would get sorted out, like the government department dues are getting liquidated, legacy subsidies are getting liquidated, the AT&C's losses are coming down quite substantially. In 1 year, it came down from 22% to 15.8%. Similarly, the state governments have started paying the distribution companies quarterly subsidy in advance. Like for Q2, subsidy they already paid to Discom in Q1. With the improvement in the health of the distribution companies, the financial health of the generation company and transmission companies are also improving, because distribution sector is the sector which collects the revenue from the consumers and it pays to the generation companies and transmission companies.
Also, speaking of several new initiatives, like the government had earlier indicated about market coupling, also smart metering is being looked at. What is your view on these initiatives? Where do they currently stand, and what kind of changes do you feel they are going to bring in as far as India's power sector is concerned?
This installation of prepaid smart meter is going to be the real game changer in the distribution sector. The consumer would be paying in advance, like prepaid mobile connection, they'll be paying for the electricity in advance. That will improve the collection and billing efficiency of distribution companies quite significantly. We hope that the losses being incurred by the distribution companies will be reduced to a large extent, and they'll be turned around as the distribution companies, they'll be start working in the profits.
Speaking of other initiatives, as far as expansion is concerned, what kind of expansion plans are being looked at within the power sector, within the power PSUs? Do you feel there can be more focus on renewable energy projects, even as several of them are getting more profitable and the cost of power is becoming almost equal or even cheaper compared to thermal power at places?
Yeah, energy transition is going to play a very significant role, as India aspires to install about 500 gigawatt capacity of non-fossil fuel-based electricity capacity by the year 2030. Right now, we are at the level of about 200 gigawatt capacity. Another 300 gigawatt capacity has to be installed in next 6 years. That is going to play a big role. Along with, since renewable energy is intermittent in nature, will also require commercially viable storage technology, be it pumped storage hydro projects or battery energy storage, and if possible, if technically feasible, the hydrogen fuel technology could also provide a good storage solution. Plus, new technology areas like green hydrogen and green ammonia are coming up. The challenge is how to bring down the cost of production of green hydrogen, say about from $5 to $6 per kg to say $1 to $2 per kg. That is the technological change, and we hope that a lot of effort is going on and we'll be able to bring down the cost of production of green hydrogen.
My final question to you, you spoke about renewable energy being intermittent at times, and that of course increases the need for base load, base power, and thermal energy continues to be the mainstay in that direction. Yeah. Do you feel apart from storage capacities, there can be other sources within renewable energy itself which can possibly serve as alternatives to base load like hydel power or even any other source of energy?
Yes, these pumped storage hydro projects, they are going to play a very significant role, and it would be better for a country to go for more and more pumped storage hydro projects, because we won't be dependent on the import of the batteries, because lithium ion resources we don't have the control. Most of the batteries are getting imported in the country.
A broader market, if you look at it, the sectoral themes, yeah, in some of the pockets, the valuations have moved ahead. But I think I would say that it's time now to really look at more of the diversified fund, right? Because as I said, in the last 1 year, we've seen that the market breadth has improved significantly. I think then again in the new age capital, you have to be careful in terms of really looking at whether the unit economics are really making sense, right? I think one is, I think we are now getting into the rate cut cycle, right? Which will start shortly. I think you will see that now in this month in the US, okay, the Fed move, I think that will kickstart the rate cut cycle. And that should be positive for the NBFCs, I mean, additionally, because where you will see them benefiting on the cost of funds.
Yeah. That's why I told you not to open the goddamn door.
Welcome back. The mid-cap index is at the day's high right now. It's a 350-point gain on the mid-cap index, so that's looking good. Ola Electric continues to rally hard, so now 6.5%. When we had that interview with the management, the stock was up close to about 3.5%, but it's added on some more heft since then. You've got a gain coming through in restaurants. Brand Asia, the owner of Burger King, that's seen a spike up. GMR Airports too is moving up quite smartly. But let's get you another corporate conversation. So India is one of the markets with the most opportunities in the next decade. That's the word from DHL e-commerce's CEO, Pablo Ciano. In fact, while speaking with my colleague Vamakshi, the CEO also went on to say that India stands in the top 15 geographies in terms of revenues for the group. Listen in.
We see India as one of the markets with the most opportunity in the next decade. We have been in this market for many, many years, but what we are seeing recently in terms of, first, the benefits of the migration and the diversification of supply chains out of China into other markets. India, together with Mexico, Vietnam, Turkey, is one of the key markets benefiting from that. And we see every single day more of our global customers opening operations in India. We have seen, of course, a lot of manufacturing moving away from China into India, and we see that continuously. We see that to continue. So there is a lot of good momentum in India, both from an import and export perspective, and from a domestic perspective, the entire improvement in infrastructure, roads and airports is helping optimize logistics. We're seeing more and more of the logistics moving from informal ways of logistics to more formal with companies like DHL and Blue Dart. And the entire investment in infrastructure that the government is promoting is helping with a lot of that. Roads are getting better and better. It is much easier to connect now distant cities and tier 2 and tier 3 cities, which is helping overall reduce the cost of logistics, make it more affordable, and therefore more efficient for companies.
So you see huge potential in India, got that. So are you looking at expanding your operations here?
Yes, we have recently announced in one of the DHL group divisions, DHL Supply Chain, we have announced a 250 million investment to expand our fulfillment capabilities and contract logistics in India for the next 5 years. We are also in the process of expanding within Blue Dart, our domestic operations, also with a similar type of investment. We have expanded our air capacity. Last year, we added 2 additional 737 freighters for India, for Blue Dart air network. So now we have 8 in total. And we are expanding our ground and surface infrastructure as well. We're going to be opening 10 major metropolitan hubs in the next 3 years. And we are expanding all our ground capabilities as well. So a lot of investment going on in India from a group, DHL group perspective, as well as Blue Dart perspective.
Like you mentioned, you are increasing your investments in India. So obviously there must be certain growth potential that you see here. So could you quantify that for us?
Absolutely. So from a group perspective, we believe that India is going to be one of the fastest growing countries for the next 5 years. Today, India is top 15 in terms of revenue for the group. as a group, and we believe that in the next 5 years is going to be at a minimum top 10 and above. And there's a lot of investment, as I was mentioning before, not only domestic, but also, again, imports and exports. We are aiming for a very aggressive growth plan in India from a Blue Dart perspective, where we are planning to go faster than the market. Our market in the markets where we operate is going to be growing around 10 to 12%. We are planning to grow faster than the market for the next 5 years, and we are investing accordingly.
Sure. So, if I look at the data, since 2020, Blue Dart Express has grown at a CAGR of 14%, and this is the top line that I'm talking about. So, will the growth be much better than this, is what you're saying?
The growth is going to be slightly better. We need to remember that in that CAGR, we had a very unique situation, which was COVID, which of course required a very special type of logistic capabilities for many companies. But we are confident that between the growth that we are already experiencing and that we are going to see very likely accelerating in e-commerce, logistics for e-commerce, as well as the great positioning that we have in the B2B segments in life science, healthcare, automotive, in particular for the air network, and also the cross-border, India becoming an exporter of e-commerce and exporter of finished goods. All of those are very important sources of growth. That's why we are confident that we're going to see either similar growth to the CAGR that you have been referring to, or slightly better.
But what about the competition that is coming from quick or rapid commerce? Because that is seeing tremendous momentum here in India. So would just like to understand from you, is it eating away into some of your e-commerce deliveries? And what is your strategy with respect to tackling this new business model that has emerged?
So, look, a great question. Quick commerce plays in a little bit of a different category compared to where we operate. So a big retailer from global companies like Inditex to smaller garment companies like Snitch, which is, a new and upcoming very trendy brand who I visited a few days ago. They need to rely on an efficient logistics partner that has the ability to receive thousands of shipments in a centralized location and be able to distribute them around India in as fast as possible in the most affordable way. And that is a very different business model compared to what the quick commerce is working on. Quick commerce will satisfy a certain percentage of the consumer needs, but the majority of the market is going to remain in the other type of logistics requirements that I was referring to.
Well, some very interesting comments and very strong commentary, especially as far as the Indian market is concerned from Blue Dart as well as the DHL CEO. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and on the show today we are going to be discussing everything that you have written to us about, a lot of queries that we got from you on our social media channels and on our email ID as well. So keep writing to us and we'll get them answered from our experts. And the expert on the show today is Prableen Bajpai, the founder at FinFix Research and Analytics, and she'll be answering all your mutual fund queries. Prableen, welcome to the show, and trust me, we've gotten so much of them, so many of them, that we are going to be answering few of them today on the show. So thanks a lot for joining in today.
Thanks, Sonal. And I think it's always great to see the interest in the mutual funds and the industry as a whole.
Oh, absolutely. So let's get started then. The first query is coming in from Rishi Bhora, who's writing to us from Mumbai. He says he has 15,000 to 20,000 to invest every month in SIPs to save for child's future. He wants to know which funds are best suited for good returns for, say, a 5 to 7 years time horizon. Probably it's a very specific query, and the sum also is mentioned by our viewers. What do you suggest should be done here?
So honestly, Sonal, it should be done the other way around, in the sense that, he should have a figure in mind that he's looking to build for his child's education. But since none of that is mentioned, I can first give him a figure that with a 20,000 SIP for the next 5 years at 12% XIRR, which is, I think, a very realistic estimate, he can generate about 16.5 lakhs, which is pre-tax. And if it extends to 7 years, then a corpus of about 26.5 lakhs can be generated, again at the 12% XIRR. And for the funds that Rishi can choose for his child, probably 3 to 4 funds at maximum, so 5,000 each, let's say. So I think it can be 2 passive funds and 2 active funds. So starting with a large cap passive fund and a mid cap passive fund, add a flexi cap to it. Flexi cap because it would have, most of the flexi caps have a large cap tilt. So, it would sort of fill in the gaps which are there in passive investing. And if the horizon is 5 years, then definitely a hybrid fund can be added. Otherwise, I think it's okay to just skip the hybrid and go with the 3 funds that I've mentioned, a large cap, mid cap and a flexi cap.
Okay, all right. So that is how one can save for the child's education or the future, that the plan is here. Let's go across to the next one, which is coming in from Atul Krishna, writing to us from New Delhi. He says he has been holding debt mutual funds since last 10 to 15 years and wants to know whether indexation can be applied on sale of his funds before 31st March 2025. Prableen, this is a question we've been getting from a lot of investors, because there have been so many changes. I don't know if it got simplified or it got more complex after the changes that we saw in the recent budget. What do you suggest? What can be done by Atul here? And what would the implication in terms of taxation be, most importantly?
You're absolutely right, Sonal. Too many changes in the debt mutual fund space in terms of taxation. So last year they were, brought into the tax slab totally. And before that, we were able to avail indexation. And now, again, that continues. And now the differentiation of when you redeem, that is also there. But since Atul is asking this query now, so it's post-budget. So whenever he redeems now, because it would be, it's like a 10 to 15 years holding period, all his gains are going to get taxed at 12.5% flat. So he cannot avail indexation. That is only for those investors, and it's, for your viewers, let's say, who redeemed between April and July of this year, they can avail the indexation if they had a holding period of 3 years and above. So for him, it would be a 12.5% taxation. Now, whether this would be will work in his favor or will increase his tax liability will depend on the returns that he's generated. So let's say his returns have been in line with the cost inflation index at around 6 to 7%, then he would be at a disadvantage redeeming now because the tax liability will definitely be higher without indexation. But let's say if he has made about 11 to 12% returns, which is rare in debt funds, but let's say if he had those kind of offerings where he's made those returns, then he may be better off with this 12.5% taxation now. So it'll depend. And going forward, I think debt funds, any new investments, because they'll all be taxable at slab now. So probably he can consider hybrid funds. I think that can be a good choice, which would bring him from the fixed income sort of to a hybrid product with his risk going up in the overall portfolio. But I think that would bring in some growth as well as, lower his overall tax liability.
Okay, all right. So that explains how you would go about it, the viewer that is, in terms of the taxation that would be applicable in case you redeem after 31st March 2025. But as Prableen mentioned, there are a lot of time frames to be considered if there are other tax rates that would be applicable on your particular transaction when it comes to debt mutual funds. Let's move on. Nimartha Kaur writes to us from Punjab. She says that she's planning to begin her mutual fund journey and wants to invest 8,000 per month. She wants to know which fund should she start her SIP in. And I remember her mentioning as well that maybe it's a question that comes often. So she's sorry for that repetition, but she still wants to understand how can she go about it. Prableen, what's your take here? I know it would depend on the risk and other profiles as well, but just as a starter pack, what should she do?
Assuming, Sonal, that she's looking at the long term, so we'll go with that. Then I think with the 8,000 allocation, 2 to 3 mutual funds are good enough. And that's just to create a structure for her so that whenever she's looking to increase her investments, she can first increase within those 3 schemes, let's say. So again, it would be, if it's a long-term portfolio, it would be a large cap passive fund, a mid-cap passive fund. Large cap can be the Nifty equal weight, and a flexi cap. If her risk appetite is slightly higher, though she is just beginning, then instead of a flexi cap, she can probably look at a multi cap because that would give her some allocation to, in fact, a minimum 25% allocation to small caps. So that's how she can construct. And I think going forward, when she's looking to increase her SIP, first she should increase in these 3 categories, and then probably add a small cap or any other category depending on her goals. With a 8,000 SIP at 12% XIRR in 15 years, because that's the long term I'm taking for her, she can create about 40 lakhs Sonal. But if she is doing let's say a 10% step up, so every year she increases her SIP by 10%, then with the same investments, with a 10% step up, almost 70 lakhs can be created. So she should definitely start off with these 3, and I think incrementally, make those investments each year. I think that is very crucial.
Right, that's very helpful, Prableen, and it'll definitely start her investment journey with a lot of expert advice coming in there. Let's move on to the next one. Prashant Srivastav writes to us from Noida, wants to know whether it is still a good time to invest in Parag Parikh Flexi Cap Fund, and also asks if it is the only way to take exposure to international stocks. Interestingly, Prableen, recently we had a chat with the CEO of PPFAS Mutual Fund, and he indicated how they are a little cautious on the markets right now. So maybe there could be a short-term pain here. But over a long term, how do you look at this fund? What has the performance been like? And also the exposure to international funds?
Well, PPFAS, FlexiCap, I think it's been the darling of everyone. It's one of the best performers in the FlexiCap space. Definitely beaten the category average benchmark on rolling return basis. So the performance has been great. It has had its own periods of where the performance wasn't that good. For example, when international markets in 2022 didn't do that well, there was a hit in the fund as well. Like you said that, somebody from the fund house was there and they are cautious. So that is quite evident in the cash holding that they have actually, Sonal. So they're holding about 10-11% of cash currently. But their international investment exposure, which can go up to 35% because of the RBI restrictions and the inability to add more funds, has actually now fallen down to about 12%. So of the overall AUM, currently 12% is outside India. So if you're looking at international investing, and this is the reason why, Prashant is looking to invest in PPF, I think that's the wrong reason. It's a great fund to add as a flexi cap. But if you're looking to take exposure outside India, now even the regular international mutual funds will be at 12.5% taxation, and so will be all the equity mutual funds in India. So I think that consideration is sort of, it's null and void. So you can look at a pure international exposure. Again, very limited options available there. But you can look at the S&P 500, you can look at NASDAQ 100, a couple of options still available from Motilal, which are open. ICICI closed very recently. So, Sonal, this pain is going to be there, about how and where to allocate abroad till the time the RBI doesn't sort of increase that limit of investing outside India. And I think that is a very, long-standing demand from the industry as well.
Oh, it has been for sure. Okay, all right. Those are a lot of queries and very helpful answers as well, Prableen. But we have to take a quick break. On the other side, we'll come back with more MF queries that have been sent to us by our viewers. Stay tuned.
Thousands rallying outside Israel's defense ministry as the largest protest since the start of the war surge on. Public fury mounting over Hamas's murder of these 6 young hostages and the Israeli government's failure.
Welcome back. You're still tuned into MF Corner. We still have with us Prableen Bhaivchpai, the founder at FinFix Research and Analytics, and we are here answering all your mutual fund queries that you have sent to us. Prableen, let's start with the next one. Partha is writing to us from Mumbai. He asked the best mutual funds for investing in kids' education for a time period of 15 plus years. A lot of these queries coming in for kids' education. Again, it's a little vague in terms of the amount that would be invested and everything. But what's your suggestion here, Prableen?
With the 15-year horizon, firstly, Sonal, it is so important to look at the education inflation, which is going to impact his goal. For example, today, let's say he takes a goal of about 40 lakhs for his child's education. So in next 15 years, education inflation in India is estimated at around 10 to 12%. Even if we take 10% inflation, the same 40 lakh requirement will turn into about 1.6 crore requirement. So it's very important that, he sets that goal right today so that he can invest accordingly. And the funds, of course, I think that is the next part, while that what funds should you be selecting, but it should be equity mutual funds. And again, a combination of active and passive funds. I think, you start off with a passive large cap, you mix it with a mid cap passive fund, and definitely you can add a flexi cap to it. And because it's a long time horizon, it's a 15-year period, I think a small cap can be added to. For this specific example that I gave, an SIP of about 30 to 33,000 per month will be required at about 12% XIR returns. So Sonal, it's so crucial that when we are planning for a child's education, number one, we really need to invest in a product where we are able to beat inflation. Because if you're going to invest in a product, let's say PPF, and we think let's invest in PPF and invest for the next 15 years, you're going to earn about 7.1% returns, but the inflation is way higher. So your money cannot grow and match up to the requirements at that point in time. So equity mutual funds, definitely, I think, for the exposure and the right amount to be invested. And I think with these four categories, but you have to stay disciplined, stay invested, especially during downturns. That is really, really crucial again for generating that sort of a corpus.
Okay, all right. So that's about education inflation. We can talk about the way it has been surging off late, right?
But move on to the next one. Harshit Saxena writes to us from MP. He asks, how long should one continue with small cap funds, and also wants to know whether correction in small caps can be expected soon. It's a question coming in from a lot of viewers, Prableen. We've seen ebbing of flows a little bit, not so much. But what's the general sense?
So, for example, Sonal, 18, 19 weren't that great. Then 2021 were good. 2022 was mediocre for the small caps. 23, 24 has been good so far. So, that cycle will always continue. Small caps, there's so much of this chatter about the valuations and everything. So, of course, everybody is expecting a correction there. But whether he should continue or not will depend on his goal. Let's say that his goal is away, and he's doing an SIP, then even if there is a correction, I think it's okay. If you have the stomach for that kind of a risk appetite and you're holding small caps, I'm sure he can be okay to go through a downturn. And so you continue. But let's say your goal is 2 years away or 1 year away, then definitely you should book profits, or you only invested with the idea of making some money. Then also, I think definitely partial profit booking should be done at this stage if you've made decent money. But if it's a long-term portfolio and you're comfortable with the allocation percentage in the overall portfolio, then definitely it can be continued, especially if it's staggered through SIPs.
Okay, so that's Prableen's idea on the small cap space. If you're in here for the long haul, it would be different as well. But Sangam Singh is writing to us from New Delhi. He wants to know how to invest and get exposure in US mutual funds. Prableen, how can one go about it?
So there are a couple of ways, Sonal, how can we invest abroad? And I think, of course, the interest in investing abroad has spectacularly gone up in the last 3 to 4 years. I think post-COVID, we've seen this massive interest rise. So one way is through the mutual fund industry in India, that you invest in a mutual fund in India, which is investing in an index fund, tracking an index abroad, or is investing in some other mutual funds abroad. There are actively managed funds available as well as passively managed funds available. But again, that universe, the choice is very restricted currently because of the RBI's limits on the overseas investing by the industry. Second option can be that you go through one of these online platforms which are there, which are basically technology platforms, and they collaborate with a broker abroad, for example, in the US. And through these platforms, you open an account outside India and then invest. One of the examples would be Vested. There are a lot of these platforms which are available. So you can invest in direct stocks, or you can invest in mutual funds abroad. And the third way is to directly, let's say, go to a broker abroad. For example, in the US markets, you would have Fidelity, you would have interactive brokers. So many of them allow direct, account opening. For example, as an Indian resident, I can open an account with them and trade and buy stocks as well as mutual funds. And the second two options, through a technology platform or through direct opening of a brokerage account, so both of them come under LRS. But the investments through mutual funds are not under LRS, but the other two will, and all of them will have the same taxation, the 12.5% taxation after holding period of 2 years.
Okay, all right, take that point. That's very helpful, Prableen. Moving on to the next one, Karthik Goel writes to us from Noida. He asked whether one should invest in mutual funds via brokers or directly in mutual fund houses. That's been an ongoing debate. What's your take here, Prableen?
It's very difficult one, Sonal, whether you want somebody to manage your money or not. So broadly, let's first look at the options available. So number one, that I just go to an AMC website and I open an account and invest in direct plans of the fund house. Second is that I go to an online platform which is giving me the choice to invest into different fund houses. So that's, of course, preferable. But many of these platforms charge you a basic fee, let's say 200, 300 rupee a month. That kind of a flat fee, and then you can just invest in direct plans from there. The third way is that you pay a fee to an advisor, let him do your financial planning, and then let him plan or her plan your portfolio, and then you invest in direct plans. And the fourth way is that you choose a reputed distributor and let him or her do the planning for you and guide you with the portfolio and you invest in regular plans. So there are multiple ways. Now, which option should one choose will really depend on your own preference, your own knowledge level, how much you understand what is the corpus like. I don't think somebody with a very, very big corpus is operating on their own because, they would want probably an advisor or somebody to help them with all the operations related work, which is there, related to your investments. You would want things to be more streamlined, somebody in picture who can guide, during the investment process. So I think the decision making has to be very, very, it's a personal choice. But I would say if you're starting off new, there is no harm in taking guidance and doing it the right way.
Okay, all right. That's important, of course, when you're starting new. Nothing wrong in taking some help coming in from experts. Moving on to the next one, Gaurav Mantri writes to us from Indore. He says that since fund houses are sitting on a lot of cash, is there a situation of panic coming in the future? That's the first sign of maybe that there's some caution, but is it a big trigger or a big sign of something leading to a big fall, Prableen?
It's interesting. Gaurav's question is very interesting, Sonal. Some of the fund houses do have a decent cash holding, for example, somewhere between 8 to 10, 12%. But that's a few of them only. So if you look at the mid caps, there would be about 4 to 6 fund houses which have a 5% going till about 14, 15% of cash holding. But that's very limited out of the, let's say, 29, 30 mid-cap funds which are there. Within the flexi-cap space also, I think there are only about 3 fund houses currently which have a cash holding of about 10 to 11%. And the majority of them have the usual, 2 to 4% kind of cash holdings. So I'll say that this assumption that everybody is holding a lot of cash is incorrect, because a lot of fund houses believe in being invested. So philosophy-wise, fund houses, they vary. Their investment processes are different. Some of the fund houses are more cautious, where maybe they're looking for an opportunity. For example, Motilal has been very active with taking, cash calls. We are seeing UTI also, they're holding decent cash. We discussed PPFAS, FlexiCap, they're holding decent cash. So I think, Sonal, that is more to do with the definitely philosophy that the fund house has and what is their view on the markets. So if they're more into value investing, probably yes, they would be holding cash. So I think it's dependent on the outlook. But and when the correction in the markets, I think it's so hard to predict. So I don't think the fund houses are doing that. I think it's their, it's a part of their own investment process. But yes, as everybody is talking, we do expect that the markets either, they can be probably sideways, or there will be a reaction, let's say, if something globally doesn't work out well, be it the US recession, election results. There are a lot of triggers, Middle East crisis, but hard to say, when and how much, by how much will it happen.
Okay, all right, Prableen, we do have so many queries left, but we are completely out of time on the show today. But thank you so much for joining us today and giving us your perspective on different aspects. And we covered a lot of it, from debt taxation to flexi-cap funds to multi-asset funds to education inflation eating into savings as well. So thanks a lot for joining in today, and hope to be speaking to you very soon again.
My pleasure. Thank you, Sonal.
Okay, all right. That's all we have on the show today, but stay tuned for Closing Bell to take you through the last hour of trade.
Live.
Our government are heartless people.
These murderers executed 6 of our hostages. They shot them in the back of the head. And now after this, we're asked to show seriousness? We're asked to make concessions?
Netanyahu refusing to withdraw Israeli troops from the Egypt-Gaza border, saying a retreat would allow Hamas to rearm. But it's a key stumbling block in negotiations, Egypt accusing him of obstructing a ceasefire deal. The U.S. says it's against the presence of Israeli troops in Gaza long term.
We've made clear that we are opposed to the reoccupation of Gaza.
Alex Lobanov, a father of 2, was among the hostages killed. A source tells NBC News his widow refused to meet Netanyahu during a condolence visit. The Israeli leader has not met the family of American hostage Hirsch Goldberg Poland, who was buried in Jerusalem.
Finally, my sweet boy, finally, you're free.
Israel carrying out more strikes in Gaza, but the UN says it's pushing on with a polio vaccination campaign, getting doses to more than 160,000 children over 2 days, even as war rages around them.
It's a positive start. There's been a recovery from the opening lows that the Asian markets had made.
25,083 is yesterday's low. That number should be the first line of support.
Quality name from South India, lot of headwinds, but if this price hike sustains, then maybe that's a stock that we should be focusing on.
Heavy Industries Ministry had received total 7 bids. Of that, Reliance has emerged as the successful bidder.
On AU Small Finance Bank, they have given a buy recommendation.
25,253, that's about 0.2% higher.
Clearly, the net flows still remain fairly strong. The SIP flows are strong.
By 2028, this market is expected to be roughly a $35 billion market.
They're saying that, it's spearheading a rapid retail consumer transformation.
Coming up for the next 6 to 9 months, we should have a very strong wedding season, so that should drive strong growth.
The Nifty and the Sensex have now dipped into the red.
Investment has grown at 7.5%.
Our focus is on profitable growth.
Another session, we're actually seeing the broader end of the market is doing very well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and it has been a quiet day on the frontline indices. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Surabhi and Rima here, and Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon.
Hi, good afternoon, everyone. I guess we're seeing a little more red than what we've seen throughout the course of the day, because at least at the headline index level, we were around the flat line, but now there's a bit of a dip coming in. But then mid-caps have had a better run as usual.
The mid-cap index is virtually at the day's high, and the small-cap index is a gain of nearly 1%. So that market is strong. And individual stocks, right? Ola Electric, Zomato, and now even Ceat. Interesting news. The company wants to get into manufacturing electric buses. So they are going to be incorporating a wholly owned subsidiary for that.
That's Ola, right?
Ceat.
We have to check this again, because even I was wondering.
I checked it on Ceat planners. The equivalent of Make My Trip, etc. The company,
so
which
the
is
exchange notification says they are setting up bus manufacturing, EV bus manufacturing.
So if you want me to read out the exact lines that's come, incorporation of a wholly owned subsidiary of the company for the purpose of electric bus manufacturing, subject to necessary approvals from the MCA.
What we'll do is we'll try and, we didn't pay attention to the markets paid attention, right?
Yeah.
We look at the stock price go.
But Prashant, doesn't it also tell you about the kind of market we're in? Back in the so-called good old days, some might frown at this, say, is it business diversification? Usually stocks would fall when news like this would come. But this is EV we're talking about.
Absolutely. We should dial Prashant Pitti and we'll ask him what his plans are and what this means, etc. So stocks spiking as we speak, right? So more on this as we go along. So markets, just a quick word, absolutely flat now, slightly lower. 50 points is what that amounts to. Nifty Bank. So at no point did the Bank Nifty come anywhere close to either breaking supports or, looking at taking out any sort of resistances or targets, etc. So it's been that kind of a day. Small cap index is up 1%. Market breadth as a result is positive. So 1% of the small cap index. And if you want to look at sectors, real estate as a space is seeing a bit of pressure. Names like Prestige, etc. We'll talk more about this. In the CPSE space, I think for the second day running is seeing some pressure today as well. So a lot of those shipbuilders which saw rallies yesterday, they're getting sold into. And as I said this morning as well, no big moves really across global markets ahead of that big jobs data, which is of course around US market opening time tomorrow. So that's it just assumes more importance. I mean, it's just one of those data points, but more important because of what it was. It really shook things up early August, right, when we got the last number. So this number is important ahead of the Fed decision, the Fed meeting in September as well. So that's a big one, but that is only tomorrow. But in terms of individual stocks, there is enough and more. Rima.
Well, you've got Premier Energies, the recent listing. I think they won an order too today. So that stock has spiked up another 15%. And when it listed, it had debuted with the stock doubling. Ceat, which we spoke about, is now up nearly 9%. Zomato on the back of the JP Morgan note, overweight rating and target price set at 340. Stock is surging. GMR Airports, JM Financial, a couple of the other big movers. And Ola Electric has been quite smart too. And talking about those PSUs, the Nifty CPSE index has now declined for the fourth day in a row. So the slide continues there, profit booking, you should say. And for this week, the Nifty CPSE index is down more than 3%.
Absolutely. It's been a great day for mid-caps. There's no taking away from that. The index is still managing a 0.5% up move, and the advanced decline ratio is just absolutely, beautiful, one would say, from a bull's point of view. Got 1,500 stocks advancing, less than 900 stocks declining. So that's been the steady picture. Vodafone Idea and Indus Towers, two names from the telecom space, both having a pretty good session. Indus seems to be reacting well to a couple of the foreign broker notes that came in today as well. So that's working in its favor. Along with Zomato, Restaurant Brands Asia having another good session, 4.5% on the upside. Plenty of movers and shakers. Premier Energies, by the way, the recent listing. Look at the stock go 15%. I think it's breached its listing day high as well. No, actually, it's just about 2% away from that all-time high. So almost at the listing day high. That's Premier Energies. Stock is really in an upswing. And
Premier Energies, just about 10 minutes back, informed the exchanges that they've received an order from the Uttar Pradesh Department of Agriculture for supply and installation commissioning of more than 8,000 solar water pumping systems. So that's an order win which has boosted the stock today.
No, absolutely. I mean, the whole sort of line of business they're in, that has the market extremely excited with the solar cells and modules. As Chola Finance, another reaction to a brokerage note, which we will talk about as we go. But short point is that the mid-cap market is in top form. Nigel.
Well, that's right. And just take take a look at PVR. You know, that one, in fact, is doing pretty well in today's trading session as well. You have Street that had a good amount of collections, and Vijay's GOAT that was released today. I know there is.
Oh, Nigel, I think there's a bit of an issue with the audio. We'll just fix that and then get back to Nigel. By the way, Edelweiss Financial, another good day for that stock, 6% higher. So plenty of action in the broader market today. Let's straight away go to Mitesh then and get some trading calls going for the last hour. Mitesh, good afternoon. Good to have you on. So there's a lot of divergence playing out, right? The action remains in the mid-cap space. Would you have any index trades at all, Nifty, Bank Nifty? And if not index, then let's talk about stocks as well.
So on the Nifty, I think, there's slight worry. After a good up move from 24,000, the first time that I'm seeing that the hourly indicators have started turning weak. So there's first sign of profit booking happening. And that is why, despite we had a gap up today, we didn't kind of see any follow through and, make any attempt to get past 25, 300, 330 zones. So I think till that is cleared, I would want to avoid the index, maybe buy it at lower levels when you get a good pullback. But on the stock side, I have a buy and a sell. PVR, I think, I think you were also discussing the stock, has had a very good breakout today. So keep the stop below 1555 and look for a target of around 1650, 1670 over here. That does look like starting a new trend, which could eventually see higher levels, but we'll start with the first target of around 1650, sorry, 1650, 1675. And Tata Motors is turning negative. So I have a sell with a very tight stop at 1091 and look for a target around 1040 here.
All right, thanks a lot for that, Mitesh. In fact, on PVR, the feedback is that Street 2, it clocked more than 500 crores of collections. And today, Vijay, the superstar from the south, well, the GOAT has been released and the initial feedback as well out there is quite good. So a couple of sales notes mentioned that both cinema and OTT can coexist. And for the cinema companies, what is good in the near term is there's no elections, no big World Cup event, no big sporting action. So that could be actually a good phase for them. And both these two releases have done quite well. So let's see how GOAT sales as well pick up from here on. But Vijay is the actor of that particular film. Well, let's talk about Zomato surging away in trade. Post a bullish note coming from JP Morgan. Vivek joins us to help us out with a quick analysis on that. Vivek.
Well, that's right. A very interesting note from JP Morgan today on Zomato. They've maintained their overweight stance on the stock. They've raised the target price quite significantly to 340 rupees a share from the 208 that they had earlier. What is it that they're saying? They're saying that the company is now spearheading a rapid retail consumer transformation via its convenience as well as selection-focused quick commerce business with very ambitious rollout plans. Along with that, they know that Zomato is now going deeper across all of the metros, having proven this particular model in the NCR region or the National Capital Region, 50% of GOV as well as store count coming in there. Now, along with that, they believe that the rising scale should help drive its monetization, both from channel margins as well as ad spending. And lastly, when they're talking about Blinkit, they are saying that the license now is there for Blinkit to scale faster than peers and also go ahead and exceed the current targets.
Okay, thank you very much for that. Order wins for PTC Industries and the stock has surged nearly 5%. But another one which is reacting to a brokerage bet, that's AU Small Finance and Chola Investments. These are stocks that Goldman Sachs is looking at. Abhishek joins in for more. Abhishek.
Well, Rima, Goldman Sachs has initiated coverage both on AU Small Finance Bank as well as Chola Mandalam. So to begin with, AU Small Finance Bank, they have initiated coverage with a buy recommendation, target price of 831 per share. They say that the bank is ready for the next inning. They have the sector-leading EPS growth if you take a look with peer comparison as well. So they forecast an EPS growth of 27% on a CAGR basis over the next 3 years, that is FY24 to 27, wherein they also expect an improvement in the ROA profile of the bank by 14 basis points during the same period. So which will be led by the fact that there will be robust loan growth by commercial retail portfolio, which is about 70% of the AUM as of Q1 FY25, despite normalization that is expected in the credit cycle with respect to NPAs. So AU Small Finance Bank is relatively better placed with respect to buying in this cycle, given the fact that there is improving deposit market share, better asset quality control, as well as operating efficiency that they will gain in the near term, owing to the fact that Fincare Small Finance Bank has been merged with the lender. So GS has also initiated coverage on Chola Cholamandalam investment. The recommendation is a buy with target price of 1,786 per share. They say that, Chola is gaining market share amidst commercial retail upcycle trend that we are seeing. So scaling up the non-vehicle finance businesses should help reduce the cyclicality in their portfolio and improve the visibility with respect to earnings growth along with better return ratios for the entity. So they expect Chola to deliver an EPS CAGR of 33% over the next 3 fiscals with an improving ROA profile. So they expect the ROA or return on asset of Chola to improve by 24 basis points over the next 3 years, with led by the fact that there will be robust loan growth, which will be driven by the market share gain across product segments for Cholamandalam. Back to you.
Okay, all right, got it. Thank you very much, Abhishek, for the details there. Those notes from Goldman Sachs are really moving those stocks higher today. Well, we have plenty to discuss, so let's welcome in Deven Choksi, MD at DR Choksi FinServ. He's with us on the show now. Deven, great to have you on. Thanks for joining in. I want to start with this exchange announcement that just came on Easy Trip Planners. Now, maybe I'm just too old-fashioned or too naive or maybe not smart enough or cool enough. But, the first instinct I had was that, okay, here is a company which is an aggregator, it has an asset-light model. It doesn't even have a presence in manufacturing, let alone EV manufacturing. But look at the stock. It's, I guess this is not a market where you ask so many questions up front. It just says EV and the market's excited. Your thoughts?
Yes, good afternoon. You said it all, I guess. I think the name EV comes out, name defense comes out, name railway comes out, and I think market gets excited. I think it's a business that one needs to look into. Yes, I think there is a good amount of opportunity going forward for one and everybody, no doubt about this. However, I think the major reality in this particular aspect is that anybody, I think, who has got an experience behind, I think, running the business of this nature, probably, I think they would appreciate that. I think there are more legs to it, I think, than seen by people as a few ones. On one side, you have the ability to scale up the business because the money is available. But on the other side, I think every other aspects of business will have to be looked into. So unable to make any particular comment about this particular news item, but I do believe that serious players like Tata Motors, Ashok Leyland, among them, are seriously, I think, working on, I think, the product business in the EV space, which is going to be, I think, far more significant, including in the green hydrogen ones. I think it is going to be far more significant going forward. So we stay focused with, I think, those companies where we know that they have the ability to manage this entire delivery at this product time.
Deven, my question actually was more from the point of view of Easy Trip itself. I don't know if you've had a look at the company, if you've had a chance to study it off late, or maybe a word on the promoters, Prashant Piti, because this sounds quite, I don't know if this was ever mentioned in investor calls earlier, if this was an expected move. But again, if you look at it optically as a layman, it looks like chalk and cheese. I don't see the connect between a travel aggregator website, a travel services business, and manufacturing electric vehicles.
Yeah, so precisely, I think I communicated, I think that part that I think it requires significant amount of different kind of a mindset and bandwidth to run the electric vehicle and without criticizing the existing business. The existing business, I think on its standalone basis, definitely, I think is a business where I think they know the subject far better. So certainly, I think if one wants to look into this particular business afresh, I think one should. But the fact remains that I think getting into something which probably they are not proven for, I guess I think one will have to wait and see what exactly is in store. But at this point of time, unable to make any kind of critical comment on this subject.
Okay, but the stock is excited. UPL is also higher in trade on the back of a bullish note from HSBC. In fact, they've written on the entire agri space. Vivek joins in with the details. Vivek.
Well, that's right. HSBC today has written on the entire agri space with special mention on UPL as well as PI Industries. UPL today, of course, doing very well in the session, along with another trigger that the company actually reported to the exchanges yesterday. First, let's have a look at what HSBC has to say. They have a buy call on UPL. They've raised the target price to 680 rupees a share. They're saying that UPL Industries actually has the least exposure as far as the domestic agri business is concerned. They're saying that a sign of a recovery in the global agriculture market is something that is quite positive as far as UPL is concerned. Along with that, the higher area under crop sowing is also a definite positive for the company. And they're saying strong rains are likely to moderate in Q2 for the agriculture players. Along with that, the good monsoon will boost water storage, supporting the second half of FY25 to see strong domestic sales growth. So overall, they are expecting a healthy FY25. Along with that, just to remind our viewers, remember yesterday UPL actually put out a notification to the exchanges saying that yes, as far as the Seeds business platform is concerned, which is under a subsidiary known as Advanta, they are looking to monetize that particular subsidiary, and that the monetization might happen via the IPO route. So that'll be something very important to track as far as UPL specifically is concerned.
Thank you very much for that. The stock has actually been inching up after underperforming in the last 6 months. The stock has rallied from levels, 6 months chart, has rallied from levels of about 440, 450, all the way now to 620. So that's about a 38-40% neat increase in the stock price. Devin, UPL?
Well, I think the couple of advantages that I see for them. On one side, the input cost is coming under control in the current environment. Though the complete impact of that input costs reflected into the balance sheets and the P&L, I would think that it will take at least 1 or 2 quarters till the time I think you have the inventory situation cleared up. On the other side, definitely I think the geography-wise, if you look at it, wherein they are present, I think the agrochemical business per se remains quite strong. And UPL's own manufacturing setup, wherein I think they are plugging into the distribution arms of the rest of the countries where they are having the business units by supplying from India the basic and I think the formulation carried out over there. I think that model probably may restrict part of their profit-making abilities, but at the same time will give them a good amount of protection from the vulnerability of the market situation in different geographies. So I think from that perspective, the strategic move is working well for UPL per se. But between the UPL and PI industry, I think the preference should go towards PI industry, wherein the opportunity-wise, the API segment gives more promises and for the growth purpose. So I think we definitely prefer, the later than the UPL at this point.
All right, Devin, what's your, the evening pastime? Do you like to go and watch a movie at the cinema hall, or what's the preference? Or you'd rather catch something on OTT platform? The reason I'm asking you is because PVR is up close to 3.5%, and after straight 2, which collected, more than 500 crores, you have Vijay, the superstar from South, whose film is released, that's GOAT. And collections are looking stronger there. The street believes that both these two can coexist, OTT as well as cinema. What's your view on PVR? The stock, is up 10% in some 15-16 trading sessions.
Yeah, Nigel, leave aside, the excitement pertaining to the movie release and the collection that they've made. The bigger challenge definitely would remain on 2 counts. On one side, definitely, the good content and the theatre business, will definitely show up with that good content. So the first criteria about, getting the good contents right is definitely required. On the other side, the resistance of the consumer to, spend more. So the result of which, the cap is applied naturally. In this situation, you are unable to make, a complete visibility about how much, the revenue and the growth would be. But having said that, you are absolutely right. That in a given situation, you are enjoying both the OTT as well as, the theatrical contents. And in such situation, difficult to make a choice. But at this point of time, we feel that, one should look at entertainment largely from the digital point of view. And that's where, probably, the digital players under Jio may be slightly, better off at this point of time. But it's not a pure digital business on the entertainment side.
Okay, all right, Devin, we will leave it on that note for this afternoon. Thank you so much for joining in. Really appreciate you giving us your view on all the themes and the issues that we've discussed. We'll take a break on that note, come back on the other side, and Varun Goel of Mirae Asset Investment Managers will join in with a perspective on the market.
US presidential election is now just 2 months away, and Democrat nominee Kamala Harris has a lead over Donald Trump in key opinion polls. According to Real Clear Politics polling average, Kamala Harris is leading by 1.8 points over Trump. The RCP average shows Harris at 48.1 and Trump at 46.3%. In some polls, such as the ABC Ipsos poll, Reuters Ipsos, Emerson poll, Kamala Harris is leading by 4 points. Harris also has a narrow lead in key battleground states of Arizona, Nevada, Wisconsin, Michigan, Pennsylvania, North Carolina, Georgia. According to Bloomberg Morning Consult, Kamala Harris has a 1 to 3 point lead in Georgia, Michigan, Nevada, Pennsylvania, and a 9-point lead in Wisconsin. The RCP polling average suggests a 0.5 to 1.8 point lead in Wisconsin, Michigan, Pennsylvania, a tie in Nevada, and marginal leads for Trump in Arizona, North Carolina, and Georgia. While the race has clearly changed and is close, it does not guarantee a victory for Kamala Harris. And this is because most of her leads are within the margin of error. Don't forget, Donald Trump has also maintained a 47% approval rating and a chance of winning.
Okay, welcome back. You got markets, of course, which are actually a bit more lower, right? 60 points. Was looking a very mild 20-30 point for most of the day. But as we get into the fag end of the trading session now, it's a bit lower. 25,140 is where we are essentially trading at. I mean, you basically want to not break yesterday's low, which is 25.83, because you had a nice sort of bounce from there. We're still some distance away, but let's see, 55 points away from yesterday's low with the 60-point cut now. Varun Goyal is with us. He's Senior Fund Manager, Equity at Mirae Asset Investment Managers. Varun, good afternoon. Good to have you with us here. Thank you for your time. What's getting you interested in the markets, Varun? What sectors, what themes, and what's keeping you busy?
Good afternoon, Prashant. Thanks for having me on the show. Currently, how we are looking at the markets, we are more positive on secular growth stories like IT, pharma, consumption. These are some of the sectors that we have been adding incremental positions. Chemicals also looks like we are coming out of almost 2 years of poor performance, and it looks like things will get better both from a margin and profitability perspective. So these are some of the sectors that we believe can do better. We are currently a little cautious on cyclical names, especially on the defense, railways, and auto side, where we believe valuations have run up quite a bit, and therefore maintaining a slightly cautious stance on that side.
What do you like in chemicals? How should one best play the chemical recovery?
I think one has to be more selective. I think as far as the agrochemical space is concerned, we are still seeing some challenges, both from an international and a domestic perspective. But I think some specialty chemical companies, you have to go chemistry by chemistry in terms of where the Chinese supply has been easing off, where we are seeing revival of margins. And as such, that is where we are finding some opportunities. I think EV space and battery chemicals as a space should see very, very strong growth for the next 3 to 5 years. And that is definitely looks like something where we can find a few ideas to invest.
Okay. Varun, great to have you on. Where do you stand on the EV debate? And if you like the theme, if you think that it has a lot of potential, then what's the best way to play it? I mean, then you have this one pure play EV player. A lot of the OEMs are scaling up, and now we've just got an announcement from a completely different entity. I mean, Easy Trip Planners, which is not even in the auto space. So a lot of parts to it, but how would you play the EV theme, and do you like it at this point in time?
Well, I think if you look at the broad auto space, there is no doubt that there is going to be disruption. We are going to move from the earlier technology, which is ICE, to EVs, hybrids, maybe who knows what all other powertrains do come along. I think the valuations of the automobile sector has run up very, very dramatically in the last 12 to 18 months. So we'll be a little cautious on the OEM names. I think tractor seems to be one space where things seem to be turning around, and we might see growth getting better, especially in the backdrop of good monsoon. So that is one space that one is a little more positive on. But I think both OEMs and ancillaries we have seen very, very strong price performance, and therefore, I would be maintaining a cautious and underweight stance at this point of time. I think specific components like battery chemicals was one space where, one has to really pick and find opportunities where, where there is capital efficiency, where balance sheets are clean, and where managements are doing a good job. But broadly, would be cautious on the automobile space.
Auto, defense, rail, right? I mean, essentially, what you're cautious on right now. Well, again, when we say consumption, Varun, what could you narrow it down a little bit? What kind of names?
Yeah, so I think discretionary consumption as a space continues to do well, while we continue to be on the lookout for recovery as far as the stable space is concerned. But I think some sectors like travel, tourism, we continue to see good traction. I think companies in the hotel space, hospitality segment, even leisure and amusement parks, I think incrementally as purchasing power per capita incomes increase, this is one space that we see better days ahead. Also, I think discretionary consumption related to children, whether it's stationary items, whether it's bags, water bottles, luggage, wherever children have a major say, I think all those categories are seeing very rapid expansion in growth. And that is where we see next 3 to 5 years should see very, very strong and above average earnings growth to play out.
Good idea to bet on kids. Varun, I mean, I can't say no to kids, right? Just a quick word on, you said two things actually. One is you said hotels, hospitality. You own LTIMindtree. Again, I'm not asking for stock advice, but if you can just talk about, I mean, stock's seen a fair bit of damage. It's a very large chain, hotel chain, with I think the second or the third largest number of keys across the hospitality, the hotel space. Any thoughts at all?
So unfortunately, Prashant, I won't be able to comment on stock-specific basis, but I think broadly, as I was saying, we believe that tourism and hospitality will remain a large space. I know we have seen historically from the Asian example, as per capita incomes increase from $2,500 to $5,000, there is a significant increase in spends on these items, and we would be constructive on space.
And amusement, you said amusement parks as well, right? So there aren't that many out there. But you think it's a good business?
Yeah, absolutely. I think so today, if you see an average family of 4 can spend 8 to 10,000 rupees on a single day's outing. As per capita incomes increase, there are a lot more Indian families which will be able to spend that kind of money. So broadly, I think whether it's resorts, hotels, or eating out, and some of these amusement activities will definitely see much more traction, much larger pots of money being invested in this space, and we would remain largely positive on that side.
Hi Varun, good afternoon. Good to see you, Ben. What are you making of the cement universe? It's been a horrid time in terms of pricing, but now it seems the industry, they have come together. They are like, let's fight back on the pricing front, and input costs have been cooling off as well. So in the last, I think, 2 or 3 trading sessions, the street has taken note of this. Otherwise, you get a price increase which gets sold into. Now we are in the monsoon and prices are not correcting. How are y'all approaching that? Will y'all go with the large cap names, or will y'all go with the smaller names like Orient, Nuvoco that could possibly be taken over?
I think broadly, if you look at the cement space, we have seen very difficult times from a pricing perspective. I think next 2 years we are going to see significant amount of supply coming in. And I think the industry as a whole has been trying to increase prices, but finding it difficult to do that in the short to medium term. The sense is that once the monsoons are over, Q3, Q4 are supposed to be strong quarters. There is a lot of money which is going into capex, and the private capex, which is the residential housing, seems to be doing well. So one hopes that the demand should come back in the third and the fourth quarter onwards, and hopefully next year, FY26, we should see cement companies doing quite well from a profitability perspective.
Varun, what are your thoughts on the housing finance segment? You've got the more expensive ticket size companies like an LIC, Canfin, PNB, and then you've got affordable housing companies like Aadhar, Aavas, Aptus, Home First Finance. But all of them have had a very good asset quality. It's not exceeded, 1.5 or 2% in terms of gross NPAs, and growth has been fairly strong. And now you've got big boy Bajaj Housing Finance opening up for subscription, next week. So do you like the housing finance companies? If yes, which segment would you play?
Yeah, I think broadly we remain quite constructive on the residential real estate upcycle. I think we are still in the middle of the cycle, and we expect this cycle to have more legs. At least next 2 to 3 years should be quite strong. So from that perspective, all companies or players in that space, whether it's builders, whether it's building material companies and housing finance companies, all of them should benefit from a very robust demand. I think if we look at the sector, we are seeing 13 to 15% kind of a credit growth, which looks quite strong, and we believe this can sustain going forward. Of course, valuations in some pockets have run up quite a bit, so we would be a little careful in terms of some of the smaller housing finance companies. But I think largely from a medium to long-term perspective, this remains an attractive sector to invest in.
Talking about discretionary spending, what about beauty and personal care? So yesterday, Nykaa had that beauty summit, and they spoke about the Indian beauty market hitting $34 billion of size by 2028. So the opportunity is massive. And we were talking to a few analysts, and they're saying discounting has come down. One of its competitors, which the street was fearing will eat into, say, a company like Nykaa, hasn't scaled up to that extent. So, do you think this beauty personal care category is going to, is attractive as an opportunity?
Well, I think overall, like I said, all discretionary consumption items, especially those items which become more affordable as incomes increase, definitely should do well. I think as a category, definitely there are, this category should also do well. Now, what is the best way to play this? That's something one has to really pick and choose. But broadly, yes, the category should do well from a medium-term perspective.
All right, Varun, we leave it there. Thank you very much for your time. It's a pleasure having you here on CNBC-TV18. Thank you for being here. We'll take a quick commercial break here. It's 3 o'clock, a little past 3 o'clock. Market still holding with about a 60-odd point cut right now. We take a break. We're back. What's happening in dealing rooms? Nimesh is going to be with us, and he'll tell us what's going on and what he's picking up. Stay tuned. That's coming up.
Over the past few months in polling surveys. Now, 47% was Trump's popular vote share in the 2020 election, which he lost, and 46% was his vote share in 2016 presidential election, which he won. As the race heats up, a former Donald Trump aide and former White House Communications Director Anthony Scaramucci has said that Trump's wife Melania hates Donald Trump and may be secretly rooting for Kamala Harris to win. However, one prominent pollster in America feels Trump has an edge right now, and that is due to the key swing state of Pennsylvania. Nate Silver said that while Harris is leading by 3.8 points in his national poll tracker and is slated to win the popular vote, his election forecast shows the former President Donald Trump has a 52.4% chance to win the Electoral College.
बहुत ध्यान रख के, बहुत केयर के साथ कई सारे सेफ्टी फीचर्स, पैसेंजर एमिनिटीज़, स्टाफ के लिए सुविधा, इन सब को ध्यान में रखते हुए वंदे चेयर कार, वंदे स्लीपर, वंदे मेट्रो और अमृत भारत, इस तरह की 4 ट्रेन्स का जो कन्फिग्रेशन है, इसमें मॉडर्न टेक्नोलॉजी, सेफ्टी, लोको पायलट्स के लिए स्पेशल फैसिलिटीज़, जो सर्व करने वाले स्टाफ हैं जो लिनन देते हैं या फिर जो फूड सर्व करते हैं, उन सब के लिए स्पेशल फैसिलिटीज़, ये सब ध्यान में रखते हुए नई डिज़ाइन के साथ चारों की चारों ट्रेन कन्फिग्रेशंस बने हैं। और साथ ही साथ ये मिडिल क्लास की सवारी है, इसलिए अफोर्डेबल फेयर रखा जाएगा, राजधानी के साथ इसको बेंचमार्क करके रखा जाएगा। और ये ओवरनाइट जर्नी के लिए रहेगी, यानी करीब 800 से लेके 1200 किलोमीटर की जो जर्नी है, यानी रात को 10 बजे 9 बजे के आसपास आप इसमें चढ़ें और अगले दिन सुबह कंफर्टेबली उतर जाएं। इस तरह की ये चीज़ें इसमें ध्यान रखा गया है। कई सारे सेफ्टी फीचर्स हैं, डिज़ाइन में कई चीज़ों के इनोवेशन किए गए हैं, जैसे आपने देखा होगा पुराने टाइम में चेन होती थी, उस चेन की जगह
Welcome back. Take note of the Nifty. It's moved to the low point of the day. We're down close to around 65 points, but certain stocks are doing very, very well in today's trading session. Premier Energies, they won that order, the recently listed company, I think 200 crore order. Or the stock is locked now. 20% circuit. It listed at double, and from there it's put on even more weight. The other one I'm looking at is JTL Industries, one of those big underperformers. From December onwards, the stock actually is still lower. But in the last couple of months or so, it's been pulling back from the low. So that stock as well comes up for you on the screen. Volume spike on that one as well. But a good time to get in. Nimesh, tell us, what are you picking up in terms of today's trading action? We're down, but flows I think are okay.
Yeah, flows are quite okay. In fact, there is a basket buying, which I understand in the last 30 minutes of trade. And that basket buying has a lot of banking names. So for a change, there is delivery-based buying in private bank stocks from a flow perspective. Overall, while the Nifty is consolidating, there is a lot of interest in the broader market stocks. A lot of stocks in the mid and small cap are buzzing in trade, and in large volumes as well. That suggests that there is participation in the broader markets from not only institutions but from the retail and HN investors as well. So that's a broad feedback. The other sector which has done well for the last couple of days is cement.
Yeah.
We've seen a bit of traction in a lot of the cement stocks. The volumes are on the higher side, and there is a bit of retail institutional participation as well, is what I understand in some of the select stocks. So it looks like that could be more part of a sector rotation from large institutions. But today, while the Nifty is down, there is flow, at least in the last half an hour, and there is a lot of buying in the private bank stocks from larger institutions today.
Well, that's right. On cement, the hope is that these price increases, even if they don't get absorbed totally, it'll at least stop the erosion of prices, which we have been seeing the last 8 to 9 months or so. And input costs are cooling off, so hopefully second half of the year is much better, though quarter 2 will be a washout. Yeah. What about individual stocks? What are you picking up?
Right, so in terms of individual names, the first stock is GMR Airports. There is a large block, nearly 1% equity, 6 crore shares got changed hands. And I understand the US-based fund was a buyer in today's block deal. So again, disclosures will be quite interesting in GMR Airports. So that's the first name. The second stock is Bosch. Again, a big move in that stock, up 4% and large volumes as well. There are very strong buy flows, is what I understand at FI desk. But also there is a buzz of some corporate development, largely on the lines of consolidating their unlisted companies with the listed companies. So that's the trigger as far as Bosch is concerned. The third stock is Minda Corp. Big move in that name in the last couple of days. Even today, the volumes are on the higher side. Again, for Minda Corp, there is a very strong buzz that the company is likely to acquire a company to foray into the EV space. So that's something to track in Minda Corp. And the last is Gujarat Fluorochem. Again, a big move in that name, up 10% last I checked, large volumes as well. I understand some HN investors are quite active buyers as well. And even in Gujarat Fluorochem, the sense is that maybe the company is likely to raise fund in the subsidiary chemical, battery chemical business. And that could be a bit of a value locking. So that's the reason why even Gujarat Fluor is buzzing in trade today.
Battery. Battery is the name of the game, right? Nimesh, on GMR Airports, large US base is certain Florida-based fund manager?
So Prashant, if you look at the last track records, GQG has been a buyer in GMR Airports. We don't have a confirmation yet on the exact name, but looks like that particular entity could be a large buyer in today's block deal.
All right. Well, we'll keep a track once the disclosures come. But thank you very much, Nimesh, for that. Well, let's get in Mitesh, who's joining us with what to buy or sell today for a reverse trade tomorrow. Mitesh, good afternoon. What do you have?
So, Prashant, I think I was highlighting that there could be some profit booking given the fact that the indicators on the hourly and 2 hourly charts have started contracting. I think that could be the situation for the next couple of days. I think we might do a range of 25,300 on the upside to about 24,980, 25,000 on the downside. And the index might not do much, so we'll be trading on a stock-specific basis. I have one STBT, that's Tata Power, which I would recommend selling with a stop at about 424.5 and look for a target of roughly around 413, 412 on the downside. And a BTST on Ashok Leyland. Apollo Tires, which I would recommend taking a BTST with a stop below 508.5 for targets of 519, 520.
Mitesh, before we let you go, thanks for that. Before we let you go, just want to discuss this volatility on RIL that we're suddenly seeing. Let's pull up the intraday chart because in the last, I think, 10 minutes or so, suddenly there's been a big decline on the stock. It's down about 1.5% thereabouts now. Yeah, that's the selling that we're talking about just in the last 10 minutes or so. Mitesh, levels to watch, Reliance, and if you have a trade on either side, long, short?
So Reliance, despite the fact that there was this possibility of this bonus thing and all, I think the overall pattern is very flat, and I think the stock will find it very difficult to get past 3090, 3100 on the upside, and on the downside 2950. So I think it might just be heading towards the lower end of the range. I don't see a big directional move happening in Reliance in the near term.
Okay, all right, got it, Mitesh. Thank you very much. You enjoy the rest of your afternoon. We'll connect again tomorrow morning. Right now, let's look at the top Nifty gainer today. We're just discussing Reliance, which is one of the big losers right now. The other side of the index is actually Titan, because Titan's bright and sparkly with almost a 3% up move. We have Sudarshan with some perspective on it. Sudarshan, what seems to be driving this today?
So before I talk about the Titan, Reliance Industries board has just approved bonus issue in the ratio of 1:1. So now coming to the Titan, it's the top Nifty gainer. The stock is up 3%, and in the process, stock has hit 5-month high. And for this week also, it's up 5%. So recently, when a company had released quarterly update on July 5th, that was Friday. So on 8th of July, when market had opened, stock had hit lowest level since October 2023, and that lowest level was 3126. And from there, the stock is up 20%. At the same time, if you want to correlate with international gold price, gold is up 6%. So gold is up 6%, and Titan stock has increased 20%. So what has been the recent triggers? First, in the budget, we saw custom duty was cut on gold imports. Second, international gold remains steady around $2,500 per ounce. And third, festive and wedding seasons. And fourth is prospect of Fed rate cut. Even brokerages are largely positive. So one of them is Macquarie. It has an outperform call. Target is rupees 4,100 per share. And after Q1 earnings, even management's commentary was largely positive. Company had said it's seeing a lot of traction coming for gold jewelry. It's seeing encouraging sign for remainder of the year, and it sees healthy double-digit growth in sales. And second, also talking about the competition, it says it's going through a temporary phase of intense competition. So overall, it has been a positive going for Titan.
Thank you very much for that. The Reliance board has approved the bonus issue in the ratio of 1:1. Remember, this was announced just before the AGM that the board will meet on the 5th of September, where they will consider this 1:1 bonus issue. So it was priced in, so perhaps a little bit of sell-in news, because on the day when the company had announced that the board will meet to deliberate on this, the stock had seen a bit of a rally. So that's Reliance Industries in the latest there. IT stocks are seeing some buying now. So the Nifty IT index is now up close to about 200 points. At one point of time, the Nifty IT index was down nearly 200 points. So look at the reversal that you're seeing in the Nifty IT index and individual names. That Infosys is now back in the green. That's got a gain of about 0.6%. Wipro is leading with more than a 1% rally. TCS is now back in the green. So IT stocks are now in favor. Amrish Baliga is now with us, joining us on the show. Amrish, afternoon, and thank you very much for joining in. City Union Bank is the stock that you're recommending today. Why is that?
Good afternoon, Rima. See, City Union Bank is one of the oldest private sector banks with about 800 branches. It's mostly South India, where we have about 692 branches. And within that, Tamil Nadu itself has about 524. So it's very much South-centric. They lend mainly to traders and MSME. Although currently the new focus area has been also retail, housing, and gold loans. About 38% of the loan book is MSME. And they have a strong capital adequacy ratio of about 23.8. Corporate governance standards are decently high. We have seen consistent and continuity of management, which is their hallmark. If you see the last 100 years, in fact, the bank has been there for 118 years, but for the last 100 years, they've had only 7 CEOs. And the current CEO, Mr. Kamkodi, is retiring in 2026. Another unique thing about this bank is that in the last 118 years, they have paid uninterrupted dividends, which I think is a record. FY26, I'm expecting the growth to be about 15 to 16% and NIMs to be around 4%. So my target price here is about 210 at about 1.5x adjusted book value for FY26.
Okay. Stay on, Amrish. We need to slip into a very short break. But before that, Ola Electric's Bhavish Aggarwal, we chatted with him earlier about the August sales numbers and how the market share for the company has come down. The chat went on to talk about how the company is very close to break even at the EBITDA level. Their focus is on profitable growth. So listen in to that conversation. We'll slip into a break and come back.
We've also dipped a little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. So our focus is on profitable growth. You will see us continue to bring new products, expand distribution, and continue to focus on vertical integration to bring better technology and control cost. The challenge for incumbents at a macro level is, वो खेलेंगे तो पछताएंगे, नहीं खेलेंगे तो पछताएंगे. खेलेंगे तो पैसा लूज करेंगे और अपने खुद का ICE business cannibalize करेंगे. You can see all of these companies, the incumbents who have started playing in electric are losing ICE market share to their ICE competitors. Every three-wheeler driver works on my Ola Cabs platform, every one of them, right? So I know their pain points. I know their propensity for electrification. I know the GTM, go-to-market, distribution, financing, everything we have very deep, entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products.
एक मच मोर सिक्योर मैकेनिज्म लाया गया है जिससे कि बर्थ की सिक्योरिंग फास्टिंग वगैरह बेटर हो. टॉयलेट्स में भी स्पेशल ध्यान रखा गया डिज़ाइन में. और लोको कैब आपने देखी होगी, ड्राइवर्स की फैसिलिटी. मेंटेनेंस स्टाफ के लिए अलग से कैबिन बनाया गया है जिससे कि वो लोग आराम से रेस्ट कर सकें.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinion.
Welcome back. Well, some signs of stability. Infosys and TCS, I think Rima pointed that out. Both of them have seen a good recovery. And the biggest underperformer, one of the biggest underperformers is HUL. That as well from trading in the red has moved into the green. So tech and selective FMCG names are doing quite well, which is pulling up the index as well. Let's go move to a CNBC-TV18 exclusive then. Veranda Learning Solutions, a key player in India's EdTech space, is gearing up for a major expansion. We have Rachna who's joining us to fill us in with details. Rachna, tell us, what are your sources saying?
Sources have revealed that Veranda Learning, the Chennai-based edtech company, is looking to raise over 1,000 crore rupees through a preferential issue. This move is expected to fuel its growth ambitions. We've also learned from our sources that Veranda is in talks to close a substantial acquisition. The company is in discussions with a privately owned, private equity-backed unlisted edtech company. And with this acquisition, it is looking to further strengthen its position in the edtech sector. Now, if we take a step back and look at Veranda as a company, it was founded in 2018 by the Kalapati AGS Group that holds nearly 55% in the company. It then listed in 2022 and has grown on the back of major acquisitions. For instance, in just May of 2023, Veranda acquired 7 companies valued at 400 crore rupees. The company specializes in offering courses that prepare students for various competitive exams across India. And just last week, it forayed into the Middle Eastern market. For FY24, it reported sales of 362 crore rupees and trained a total of 6,93,000 students during the period. CNBC-TV18 has reached out to the company for a comment on the 1,000 crore rupees preferential issue and the subsequent acquisition, but it is yet to get a response.
Got it. All right. Thanks for that, Rachna. Well, Amrish, you have any view on this one?
In fact, I mean, the stock has moved decently well because of all the sort of acquisition news which had come. But then at these levels, it is becoming, I think, a bit too expensive. I think it's quoting at what? I mean, close to 100 PE. And despite, all the news, I think only momentum can really take it up. Based on fundamentals, I think beyond these levels, it'll be a bit difficult to justify. So I wouldn't buy at these levels.
What we understand is that the transaction itself, so two-step transaction. One, of course, is fundraise. And then there is a bunch of acquisitions. One, of course, with a large unlisted private equity invested edtech company. It should be done this month. That's what we're picking up, as Rachna also told us. So 350, stocks up about 4%, but it's done well in the recent past. Amrish, just a quick word. I don't know if you saw that Ola interview or if you've seen the numbers.
Yeah.
Any thoughts at all?
Again, see, I think the only concern is the move in this stock post that tepid response to the IPO. I think a lot of people, a lot of investors would be stuck at those higher levels due to that FOMO effect. I mean, we saw the stock, opening at more or less par at the issue price and then really shoot up to about 150, which is nearly 100%. So, but then, if you look at the market as such, clearly they have the highest market share. Should be like a bit of positive soon, like the founder talked about. And I think the advantage as far as EV two-wheelers is concerned is that the charging is not an issue, which is normally the case with the passenger cars. Again, here, range anxiety also is not an issue because most of the commuting is for local use, unlike passenger vehicles. So I think the growth in electric vehicles as compared to the IC, I think should be much, much better. And exactly, we are seeing that. Even going ahead. So Ola Electric, I would say that in case it comes down below 100, closer to about 90, 95 levels, I think at those levels, I think it's a decent buy from a longer term perspective. But at these levels, I'll be a bit cautious.
Amrish, we're trying to figure out this easy trip announcement getting into manufacturing electric buses. So we can't wrap our head around it. Do you want to offer your thoughts?
I don't know why people move away from their core competence and get into something which possibly could have some sort of a connect, but it's not their core competence. Based on this, it has moved up, but then I've been decently bullish on the stock based on their core competence, the regular business which they do. But with this sort of announcement, I would be a bit cautious on the stock.
You would be cautious on the stock. Got that. By the way, there's 5 minutes to go for close, so keep an eye out on that as well as we wrap up things for the day. But there are so many sort of other movers as well, which we are seeing in terms of today's price action. These new listings, Amrish, Premier Energy, Ecos Mobility. There is, I think, one which is open. Going to be open, right? A company called Gaza. There is PN Guardgale. The IPO market is hot as ever. You've looked at anything? Anything looks interesting to you, Amrish?
See, I mean, if you ask me valuation-wise, I mean, most of them are expensive. But then, I mean, free money is just flowing in. There's a huge amount of liquidity flowing in. I mean, even if you look at the SME space, I mean, the companies where there are just about 8 or 10 employees are getting about, I mean, 400 times subscribed. So here, I think is just blind sort of investment which is happening. I think, I mean, as long as the music is on, enjoy, make your money, but just keep one foot in the exit door.
GMR airports, do you have a view? Ambrish, Nimesh was telling us on D Street Chatter that a large, we don't know, but maybe GQG is increasing, buying more. They already bought. I mean, that's of course a play on booming, more passenger footfalls into the airport that they operate. But also they have this real estate play, right?
Absolutely.
Any thoughts? Yeah.
And I think, I mean, they had first invested in like Adani's, I mean, who again have airports in their portfolio. But I think when they saw GMR, I think they found, I mean, most of the parameters much better than the Adani airports, I mean, vertical. So I think that's one of the reasons why they started investing in GMR airports. And I think they've got a decent stake as of now, and which is increasing. I mean, if you see GMR airports, I think is one of the most efficient, I mean, airport operators in the country. And clearly, I think after that flat growth which was there, I think we should see a decent growth going ahead. So even at these levels, I think one should look at buying. I mean, I'll not be surprised if you see levels of about 130, 135 for the stock, possibly over the next 6 months to 9 months.
Finally, Ambrish, before we let you go today, Raymond Lifestyle starts its new journey in the new avatar on the street today. Your thoughts on the kind of valuations it's quoting at right now and the potential? Would you be interested?
No, I mean, I will not be interested at these levels because I think when it was delisted, I mean, for the demerger, the indicative price was about 1,500, 2,000. I think if it comes to those levels, I'll clearly, I mean, at least closer to 2,000 levels. I mean, at those levels, I would be a buyer. Because if you talk of long term, I think there's a decent amount of value in this. And they are also getting, I mean, their focus area is going to be the weddings and that sort of a market where you have competing players getting much better valuation. So at some point of time, even Raymond Lifestyle should start getting that sort of a valuation. But right now, I mean, we have seen that bottom circuit. I think we could see possibly to end the 2 or 3 days more of lower levels. But then closer to about 2,000, I think it becomes a decent buy.
Okay, thank you, Ambrish, for joining in. Counting down to today's market trade, it's a flat close on the Nifty and the Sensex, mildly lower, down 44 points, but again, a better showing compared to what most of the Asian markets did today. Mid-caps outperformed. The Nifty small cap index had a gain of nearly 1%, and the advanced decline ratio, though it narrowed by the close of trade, but still skewed in favor of the stocks advancing. 3:2 in terms of the advanced decline ratio. Sectorally, IT was the top gainer. That had a gain of about 0.6%. PSU banks higher. Metals ended up in the green. Healthcare, on the other hand, slipped more than 1% from the day's high, and the Nifty Healthcare Index down in the red. CPSC Index was the biggest drag, down more than 1%. Realty, Auto too, under some pressure.
Okay. Well, if we talk about the broader market where the outperformance has been, even there you'd have to say the mid-cap index, it has narrowed its gain for the day to about 0.3%, but nonetheless, lots of high flyers. So as we're wrapping up, Premier Energy's recent listing is going home with a gain of another 20%. Big move today. UTI AMC, a name that usually doesn't come up, has had a good session, 7% higher. KEC International about 6% up. Ashoka Buildcon, fantastic move on Ashoka today, 15.5% up. Easy Trip, the stock that we kept discussing on their plans of launching the EV bus business, up 10% over there. Fino Payments Bank about 10 to 11% higher. So big list of winners. Gujarat Fluoro about 12% higher. Lots of stocks on the way up. And of course, some of the movers and shakers thanks to positive brokerage commentary. Chola Investments was one of them. That stock was up and about pretty much throughout the course of the day. And Ola Electric, rather electric conversation with the Prashant, Nigel and Ekta. And the stock's closing out with some gains today.
Well, interesting day, but no green, at least on the Nifty, but lots of green as far as individual names are concerned by the end of it. So, that's Thursday today. 150 lower on the Sensex, and lots of movers and lots of sort of broader market winners, especially in the small cap space, as we've been outlining over the last couple of minutes or so. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thank you very much for staying with us. Markets Forward comes up next. It'll pick up on all the action. Rima and I'll take you through that in just a bit.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part.
Market ends a lackluster session near the day's low. Nifty ends below the 25,200 mark on weekly expiry day. Mid-caps outperform.
RBI Governor Shaktikanta Das has stated that it's the headline inflation, which includes a 46% food weightage. That's what matters, as it is the food inflation that people understand. He adds that RBI must successfully navigate the last mile of disinflation to preserve the credibility of inflation targeting framework.
Ola Electric has been working on a three-wheeler for some time and it could be launched soon, says CEO Bhavish Aggarwal. He's not too perturbed by the loss in market share in the month of August, says incumbent auto majors are only, and I quote, half-heartedly manufacturing electric vehicles. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you prepare for tomorrow. That's the last trading day. It's a Friday. I'm Prashant, with me, my colleague Rima Tenulkar. Hi.
Hi, Prashant. We're going to be with you for the next 20 minutes with all the big news, the key developments in the Lal Street, the top corporate voices, the events to track ahead. But first, the day's market action. A sideways trade?
A sideways day and not very enthusiastic kind of day at all on the Nifty. So at one point around 3 o'clock, it looked like we'll be down 60, 70 points. But by close, I think there was a bit of a recovery which kicked in and we ended about 50 points down. So 25,145. So you can see it right on your screen. Started and then just dragged through the course of the day with no real pull or push in any meaningful direction. Bank Nifty will come up next on your screens. And again, here there was not very much by way of action. I mean, actually, the only index which did anything meaningful was the small cap index, which is a full 1% gain that you had for today. Now, as far as sectors are concerned, a CPSE index continues to lose, I think, about 3 or 4 days in a trot now. So that's the pack which lost. And lots of names, right? Oil has been coming off. So these oil sensitives, government oil companies like Oil India, you had these shipbuilders, defense companies which rallied yesterday. They gave up some of those gains. So there was all of that which was going on. But all in all, it's quiet kind of a day. Individual action, there will be enough and plenty. And Vivek will talk about all of that in just a bit. The big talking point, what could move markets from here on, even if it weren't to move markets, what will, let me put it another way, what will hold people from taking large positions one way or the other, directional calls, not just here but globally, is going to be that big US jobs data, which is only due tomorrow evening. And that is because, of course, the last time we had the number, late July, it triggered this mini volatility, mini episode in early August. So it assumes more importance, but that will only get tomorrow evening. So you got one more session to get by before you get to that. So maybe next week perhaps is going to be a bit more not restrained, unrestrained, and maybe some more action really on the frontline indices as well. Rima.
So the employment report is looming on the minds of investors. But by the end of trade, the Nifty and the Sensex ended mildly lower. The mid and the small cap index outperformed. The advance decline ratio was in favor of the stocks advancing 3:2. But lots of action in the last 1 hour. So IT made a good comeback. The Nifty IT index ending in the green. In fact, one of the best performing sectoral indices, though it ended only with a gain of about 0.6%. Pharma started strong, but ultimately ended in the red. And from the day's high, the Nifty Pharma index was down more than 1%. IT names like Infosys, LTIMindtree, Wipro come in for buying. On the way down, Reliance Industries cracked in the last 30 minutes of trade, and that stock ended with a deep cut. Coal India and Britannia were the other two notable losers in the large cap space. But let's also tell you what we will be doing with you in the next 20 minutes with all the top movers and shakers. Vivek will join in. The stock that took the spotlight today was Titan, the top Nifty gainer, hitting a 5-month high. Sudarshan will join in to talk about the key reasons that led to the rally. Last but not the least, we'll delve into the key market events to watch out for. But as promised, it's over now to Vivek for the top movers and shakers of the day. Vivek.
Well, thank you so much for that. Even though it was quiet as far as the headline indices was concerned, quite a lot of action and quite a lot of volume back action, especially in the broader end of the markets. First, we'll start off with the top gainer as far as the Nifty was concerned, and Sudarshan will talk a lot more about that going forward. But Titan today entered as the top gainer on the Nifty index, up over 3%. The second stock on the radar is Chola Financial. Goldman Sachs today initiated coverage on the stock with a buy rating, and the stock ended high by almost 5%. They even did it on AU Bank, but that didn't see as much as a pop as far as Chola Fin was concerned. The third stock on the radar, one stock that saw buying throughout the trading session, was PVR. Couple of upcoming launches have seen good traction, and on the back of that, the street was cheering this particular name throughout the trading session. The next stock on the radar was UPL. This particular stock, remember, yesterday the company said they will look to unlock value in their seeds business, and today HSBC came out with a note where they actually went ahead and raised the target price on UPL, calling out for a recovery in the second half of the year. As far as the broader end of the market was concerned, on the NSE 500 index, Gujarat Fluorochem, this particular stock on strong volumes, ended higher by over 11%. But on the other hand, quite a few stocks also were under pressure. In fact, a lot of the stocks are in the PSC or the PSU basket saw quite a bit of selling pressure throughout the trading session. Coal India, ONGC, GAIL, NTPC, Oil India, some of the top laggards as far as the PSU space was concerned. On the other hand, you also saw names like Mascot. Last 2 to 3 trading sessions, they saw a very steep rally, but today saw a bit of correction. And lastly, one stock that saw selling pressure throughout the session was Minda. Kotak Institutional Equities downgraded the stock today. On the back of that, this particular stock ended lower by almost 3%.
All right, Vivek, thank you very much for that. Ambrish Baliga is with us, and so is Shilpa Raut of Prabhudas Leader. Ambrish, thanks for waiting. Shilpa, thanks for joining us. Shilpa, price action first. On the Nifty, Bank Nifty, quick views.
Prashant, Nifty and Bank Nifty both are in sync. Nifty is actually again heading for new all-time highs. This halt today is just a positive trigger. It is just routine profit booking that we witnessed. But the lows are protected. I believe just a couple of sessions again you will see all-time highs getting hit soon. Bank Nifty, we are still in that resistance zones of 51,500. Till we don't close above that and sustain, we will not see an aggressive move towards 52,000 to 52,500. But of course, support is coming time and again and around 51,200 to 300 zones. So again, this is a consolidation. Just about time, some trigger and Bank Nifty will also move out of these goods.
Okay, let's get to the individual stock action. Titan was the top Nifty gainer, closed with a near 3% gain. Now, brokerage firm Macquarie is upbeat on Titan. Sudarshan joins in with details. Sudarshan.
So today, Titan was top Nifty gainer and stock was up 3%, and in the process, stock has hit 5-month high. For this week also, the stock is up 5%, and from the recent low of 3126, that stock had seen post-quarterly update that had come early July, the stock is up 20%. So after Q1 update, the stock had corrected to lowest levels since October 2023. Now, from that level, if you correlate between the stock price of Titan and gold, international gold is up 6%, while the stock price, the Titan, is up almost 20%. So what have been the recent triggers? First, in the budget, we saw that custom duty was cut on gold imports. Second, international gold remains steady around $2,500 per ounce. Third, there is a strong demand ahead of festive and wedding seasons. And fourth, prospect of Fed rate cut. Even brokerages are largely positive. So one note that I have selected, that is Macquarie. It has an outperform call with a target of rupees 4,100 per share. Even in the interview that company had post Q1 earnings with us, in that one, commentary was largely positive. Their company had said it's seeing a lot of traction coming for gold jewelry. There are encouraging signs for remainder of the year, and there is a healthy double-digit growth in sales that company had seen post-budget. And currently, company is going through a temporary phase of competition that is intense, but it's temporary. So largely, commentary was positive, and it's going good for Titan as of now.
Thank you very much for that. The festive season is also here. Lots of wedding dates in the next 2 quarters. Ambrish, but in the last couple of months, we've seen some of the smaller players like Kalyan, Senco do better than Titan in terms of a stock price. Titan is, of course, also moved up, as Sudarshan pointed out, nearly a 20% rally. But Titan versus the rest?
No, I mean, see, it's moved up basically because of the festive season and the wedding season, which should start immediately post-monsoons. I mean, we already started seeing the festive season now. But then I think we should remember that everyone in the market is copying their playbook. I mean, it worked very well for them in the last 2 decades. But then regional players have become national players, and now so many IPOs have come in this space. And like Reliance also is going to be upping the competition. I mean, there was a clear mention as far as the jewelry business was concerned in the AGM. So, I mean, I don't think the advantage which Titan had in the last 2 decades, I mean, I think that will narrow going ahead. So at these levels, I mean, I'll not be too bullish. Yes, momentum is there. It can possibly go to levels of about 3,900, 4,000. But beyond that, I think it could be a bit difficult.
All right, got that. We'll sort of come back to you for more, but let's just sort of address a few other stocks which were in action. So there was AU Small Finance Bank, which was up 2%. There's a Goldman Sachs initiation. Chola Investment was up 3%. Again, sort of a note coming in from Goldman Sachs. Abhishek is here with quick perspective on what was happening. Abhishek, over to you.
Well, Goldman Sachs has initiated coverage both on Cholamandalam as well as AU Small Finance Bank. To begin with Chola Investment, they have a buy recommendation and a target price of 1,786 per share. They say that Chola is gaining market share amidst commercial retail upcycle that we are seeing. They are scaling up the non-vehicle business portfolio, which augurs well and should help reduce cyclicality and improve visibility of the earnings growth along with return ratios. So they expect Chola to deliver EPS CAGR of 33% over FY24 to 27, given the fact that there will be robust loan growth and they will continue to gain market share across the product segments that they cater to. Goldman Sachs has initiated coverage on AU Small Finance Bank as well with a buy recommendation, target price of 831 per share. They say that AU Small Finance Bank is ready for the next innings. Sector leading EPS growth is what they are forecasting for AU Small Finance Bank. they say that EPS growth will be at 27% CAGR over the next 2 years or 3 years. So FY24 to 27 is what they are estimating, EPS growth of 27%, along with the fact that ROA will improve by 14 basis points during the same tenure, leading by the fact that loan growth will remain robust, especially in the commercial retail portfolio, which forms about 70% of the AUM of AU Small Finance Bank in Q1 FY25, and this despite a normalization in the credit cycle. So AU Small Finance Bank is relatively better placed to peers given the fact that there is improving deposit market share for them, better asset quality control, and operationally they will gain or they'll improve the cost to income ratio given the fact that there was a merger with Fincare Small Finance Bank. Back to you.
All right, Abhishek, thank you very much for that. I mean, stocks, of course, done very well. For 15th of August, stocks was at $600 now, of course, past the 700 rupee mark. That is AU Small Finance Bank. And of course, Chola has been an out-and-out winner for the last couple of years, no problem. Amrish, any thoughts here on these two? Or let me ask you something which is seeing strong momentum as well in the financial space. Edelweiss, 7-8, was low yesterday, was 104. 120 plus today. Any thoughts?
No, Edelweiss at these levels, I'll be a bit cautious. I mean, looking at the sort of a history which was there, especially in the last 4 or 5 years, I mean, I would be a bit cautious after this move as far as Edelweiss is concerned. But if you're talking of AU Small Finance Bank, I mean, I would surely go with Goldman Sachs on their recommendation because, I mean, clearly they've applied for the transition to universal bank. And with the sort of a growth which you're talking about, I mean, about 27% is the projected growth. I think this should be one of the better performers once that transition happens. So, I mean, I don't think one should be buying for that target price of 831. I think it will be a much bigger player. So I think you should have a much larger target on this, although I'm not giving a target. But then I think, I mean, one should be buying this stock from a 2 to 3 year perspective and not just about 6 to 9 months.
Shilpa, Goldman Sachs has put a target price of 831 on AU Small Finance Bank. The stock is currently at 702. What's the technical target?
If you look at, the stock has given a breakout again now it's above 700, but of course it has been in a very positive uptrend since 680. So for me, the stop loss would be at 680, and you should, go ahead with this ride from here. I believe AU Bank can do 745 to 760 on immediate basis. Above that, 820 is the, very, very possible target.
Okay, Zomato is another one which the street was looking at. The stock ended with a gain of close to about 5%. Now, JP Morgan today has upgraded its target price on Zomato to 340 versus about 208 earlier. They're saying the company is spearheading rapid retail consumer transformation via convenience and selection-focused quick commerce. The company has ambitious rollout plans. They're going deeper across the metros, having proven the model in the NCR region. They're benefiting from scale. Incremental store economics should turn more positive on the EBITDA front, and Blinkit will scale faster than peers and the current targets. Very bullish on Blinkit, saying that it should scale faster than peers and the current targets. Amrish, would you agree with that? Is Blinkit likely to perform better than peers like Swiggy and Zepto? And 340, would you concur with the target price here?
I would, because clearly the performance of Blinkit, I mean, there were a lot of naysayers when they had taken over. But the sort of a performance which they have shown, I have no doubt it will perform much better even going ahead. I mean, even I had a price target of about 280, but then I've also increased that to levels of about 350 to 360. So I think even at these levels, it should be bought, because I think clearly going ahead, it will surprise. And now with this takeover of the vertical of Paytm, I think even there, I think we should see a decent performance. May not be in the next 2 quarters, but going beyond that.
Right. Shilpa, briefly, apart from what we've already mentioned, do you have any trades of your own that you'd like to put out?
Yeah, actually, I would highlight to, keep a watch and two stocks for tomorrow, or maybe a couple of sessions from here. One would be an NTPC. NTPC is at a very favorable risk reward now. The stock is trading at around 402, 403 right now. This is where the support lies. So with a very minimum support, stop loss of 395, you can definitely look for the stock to head towards 430 to 445. The other one would be, in GMR Airports. GMR Airports has given a breakout again. It's sustaining above 95. So as long as it is doing that, targets of 100 and 102 are very much on cards right now. And above that, 108 to 110 can also be seen.
Okay. Shilpa and Ambarish, thank you very much for joining us on the show. We'll slip into a very short break. On the other side, we'll get you top corporate voices along with the key events to watch tomorrow.
CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com.
Okay, welcome back. You're with us here on Markets Forward. Let's take a look at some of the corporate commentary that we got today. So we had HDFC Life's MD and CEO Vibha Padalkar telling us that they are sticking to the 15% APE and retail AP growth guidance, which they'd given earlier for the full year FY25. Remember, there was some expectation that they would bump this up after a strong first quarter showing. She added that the HDFC Life is an upward bias to the AP guidance internally, but they'd stick with that number for now on an official basis. Next, we also had the management of Nykaa. We had, the management telling us, Anshit Nair telling us that 80% of the Nykaa's business comes from repeat customers, and that they're looking to bringing a lot of prestige brands to India, which for now constitutes between 15 and 20% of their business by value. They added that over the next decade, they expect prestige beauty growing much faster than the rest of the categories for them.
Moving on, Suzlon said monetization of non-core assets is a long-term strategy for the company. One Earth property, which they have sold, was the largest non-core asset, but they've kept the optionality to buy it back later. Some more corporate commentary then. Now, Ola Electric's Bhavish Aggarwal said that they're close to achieving break-even at the EBITDA level. In an exclusive chat with CNBC-TV18, he also added that Ola has seen the highest year-on-year growth in the industry in the month of August. So on a month-on-month basis, the August sales have come down for the company. Year-on-year, it's still the highest. He also spoke about the company's efforts to bring a three-wheeler EV into the market.
Little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. Every three-wheeler driver works on my Ola Cabs platform, every one of them, right? So I know their pain points. I know their propensity for electrification. I know the GTM, go-to-market, distribution, financing, everything we have very deep, entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products.
Okay, well, that's Ola for you. Before we wrap, here is what you need to watch out for as we come back tomorrow. Abhishek is standing by with that list. Abhishek, over to you.
Well, thank you, Prashant. So to begin with, tomorrow RBI will release data with respect to the business momentum in banks. So watch out for the business growth, that is deposits as well as advances. Deposit growth last time was around 10.9% YOY and loan growth was about 13.6% YOY last time around. Watch out also for the Forex reserve. That data will come out by RBI. It was around $681.7 billion for India. And in terms of USA, the non-farm farm payroll will come out, so that is estimated at 160,000 this time around versus 114,000 that it had come last time. Unemployment rate, watch out for that, it is estimated to be at 4.2% versus 4.3% last time around. With respect to going ex-dividend, tomorrow we have GNFC, KRBL, Medi Assist Healthcare, Metro Bands, Vardhman Holdings as well as Vardhman Textiles. In terms of right issue tomorrow, Patel Integrated Logistic, that will have a right issue, and you need to watch out for the bonus issue with respect to VST Industries. 10:1 was the ratio over there. Back to you.
Thank you, Abhishek, for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A broader market, if you look at it, in the sectoral themes, yeah, in some of the pockets, the valuations have moved ahead. But I think I would say that it's time now to really look at more of the diversified funds, right? Because as I said, in the last 1 year, we've seen that the market breadth has improved significantly. I think then again in the new age topic, you have to be careful in terms of really looking at whether the unit economics are really making sense, right? I think one is, I think we are now getting into the rate cut cycle, right? Which will start shortly. I think you will see that now in this month in the US, okay, the Fed move, I think that will kickstart the rate cut cycle. And that should be positive for the NBFCs, I mean, additionally, because where you will see them benefiting on the cost of funds.
Yeah. That's why I told you not to open the goddamn
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Consolidation continues on Dalal Street. Sensex and Nifty end with marginal cuts. Mid-caps outperform. RBI Governor Shaktikanta Das says that headline inflation, which gives 46% weightage to food prices, matters as people understand that. Says there's a need to preserve the credibility of the flexible inflation targeting framework. His comments come days after CE Anantha Nageshwaran reiterated adopting a framework that keeps volatile food prices out of the equation. The board of Reliance Industries approves a 1:1 bonus issue. Record date has not been announced yet. Also clears increasing authorized share capital from 15,000 crore rupees to 50,000 crore rupees. The GST Council is likely to deliberate on tax treatment for life and health insurance premiums when they meet on the 9th of September. The Council may also clarify that payment aggregators would have to pay 18% GST on the markup fee is the transaction amount if it's less than 2,000 rupees. Automobile dealers report tepid sale numbers in August, sharp drop in passenger vehicle and CV sales. The Federation says that they are saddled with high PV inventory levels of 70 to 75 days. Add that excess monsoon disrupted demand, express optimism about the festive season, lifting consumer sentiment. Ola Electric has been working on a three-wheeler for some time and it could be launched soon, says CEO Bhavish Aggarwal. He's not too perturbed by the loss in market share, says incumbent auto majors are only half-heartedly manufacturing electric vehicles. Nykaa launches a legal battle against its former chief business officer and current CEO of Tata Click, Gopal Asthana, alleges data theft and harm to its business due to poaching of employees. Both parties agreed to an arbitration after a hearing at the Bombay High Court. SEBI employees hold a protest within its premises for over an hour. This comes after 500 employees wrote to Finance Ministry alleging toxic work culture. SEBI top brass claims employees are misguided by external elements to target its leadership. India and Singapore sign agreements to bolster semiconductor manufacturing, digital technology and skill development. Prime Minister Modi wraps his visit after a bilateral summit with his Singaporean counterpart. The head of interim government in Bangladesh, Muhammad Yunus, says Sheikh Hasina must keep quiet and there is discomfort over former Prime Minister making statements from India. Adds India and Bangladesh must work to improve the relationship, which he says is now at a low. All right, let's start with what was a lackluster session on the Wall Street. Sensex lost over 150 points and the Nifty declined by over 50 points as markets continue to consolidate. Mid-caps fared better than the blue chips as the index ended in the green. Nifty Bank Index also managed to hold its head above water. Prashant Nair is here with the market trap.
A pretty quiet day on the index by the close of it. Although at one point, with about 30 minutes to go, it looked like the Nifty perhaps would end with somewhat of a meaningful cut. That was not to be. And by close, it was not so bad at all. But sideways, and never once did the market look like it would sort of rally or break out of the ranges. So that kind of a day. Bank Nifty also flattish, not really uninspiring kind of session for most financials today. Mid caps and small caps much better. Mid cap, of course, index ending slightly higher, but the small cap index was a full 1% in the green. And that's the reason why through the course of the day, the breadth of the market was quite positive. Where were losses? It was for a couple of days now running. CPSE, that is government stocks, were under pressure. Real estate as a pack was down. There was Max Estates down sharply, Prestige. I'll get to stocks in a bit. And there was the energy index, which was also lower. Now, I'll start with large caps in terms of stocks. Titan, LTIMindtree and Wipro were the winners. What was down today was Reliance Industries and pressure coming through in the last 40 minutes of trade. There was Cipla and Dr. Reddy's, which were also pressure points. Broader markets, advances to declines ratio was positive. Premier Energy, recent listing, big blockbuster day once again. Kaplan Point was a big mover. Fluorochem. There was Ecos Mobility, another recent listing. These are all, Premier and Ecos are both, this week's listings. Tilaknagar Industries was a big mover, 7%. Craftsman Auto, Edelweiss above the 120 rupee level now. UTI AMC was a big mover. Chola Holdings, Fino Payment Bank, Nelco, Muthoot Capital were some of the others which did well. On the downside, the shipbuilders, Mazgaon, Garden Reach were lower. The EMS companies, Dixon, Keynes, PCBL, these were all lower. More PSUs, BEL, Oil India, but you also had real estate companies like Prestige, Max Estates, And then there were names like Uno Minda and Medi Assist, which basically has seen a sharp rally yesterday, which pulled back in trade. So a sideways day, broader markets doing much better. The big cue really is not tonight, it's tomorrow night when we get the monthly US jobs data, and global markets are waiting for that. Back to you.
Right, thank you, Prashant, for that. RBI Governor Shaktikanta Das today defended RBI's inflation targeting framework as one of the 6 seminal reforms that have strengthened the Indian economy. He reiterated the RBI's resolve to bring inflation down to the mandated 4%. Speaking at FICCI's annual banking conference, the RBI asserted that headline inflation is the metric that matters because it gives 46% weightage to food prices, which people understand. The Governor's commitment to the inflation target comes on the heels of the chief economic advisor criticizing the concept of inflation targeting, first in the economic survey and then in an opinion piece in the Mint 2 days ago. Here's the RBI Governor in defense of the inflation targeting framework.
It is the headline inflation that matters. It is the headline inflation, with food inflation having a weight of 46% in the headline inflation, which the people understand. With the monsoon progressing well and the healthy Kharif sowing raising prospects of better harvest, there is greater optimism now that food inflation outlook could become more favorable during the course of the year. However, I must add and emphasize that we have to remain watchful of how the forces impacting inflation play out. The balance between inflation and growth is now well poised. We must successfully